Testing. Are we live? Wait for it. I think it's live. I think it is. Hold on. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile, press hot chat, X out the chat, hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts bootcamp and real estate course. But oh, yes, I know what you're looking at, baby. 9.1% of inflation. So I have a bunch of charts to go over. I was already looking at the report a little bit earlier here. We got to see it. The couple things you need to take out from it right off the bat is every single economist was surprised once again. And I don't know if you guys know how rare that is. Again, this is the second time in a row where 47 qualified economists, they were all below the estimate. So that's the first part. The core, people were talking about it, but really the second big part is the sticky situation and all of the factors that we have. So let me show you. I mean, here's one of my favorite charts out of today. This is the diffusion index, and pretty much this is going across all of the components, and pretty much even if you exclude food and energy, 75% of the categories all went up. So we have a bunch more to go over. I'm going to go over some of the biggest increases and decliners with you, but for the most part, people are pretty freaked out about this. Again, Wall Street's not liking it, but now the second big thing I'm going to tell you is the yield curve. So we brought up the yield curve. I've showed you guys the 2s and 10s. People are already forecasting after today's report the odds of a recession due to inflation being bad is very, very big now. Again, they're pretty much expecting the yield curve to go to about -30 in the next coming days now because of this move. So it's a lot of stuff right now. We're going to have to interpret it. Again, 75 basis points for next Fed meeting. It's already priced in. The bad news, it's already pricing in, I think, about 89 basis points. So you might even hear the talk of 100 basis points, believe it or not. So we're going to see how it plays out. This is the big news. Right when it came out, the market dropped about 1%. So we're going to see, again, 5 of the last 6 CPIs that we have gotten have led to a down day. This one has surprised. We've already made a big move. Honestly, these next 7 hours are probably going to be very, very exciting. So I hope you are ready, baby. I hope you are ready. Good morning. How are you, Chad? I know. Yeah, we didn't get the watch list yesterday, but you're here. Don't worry. I was not feeling good at all. I took a nap, and then I woke up a little bit too late, and then I was just like, I barely could move. So I was like, shit, man, we're gonna have to take a layover here for CPI. Oh, but we made it here in the morning. Good morning. How you living, uncle's nephew? What's up, Sean? Benny Silverio. Oh, Boomer. He said, woke up feeling blessed, stay humble. Hey, man, what's up, Daniel? How you living? Dr. Marty, Code, Aria, Tilo. Good morning, baby. What's up, Kirkwood? What's up, Caribou? Implication, Lionel. What's up, Kenny? How you living? Adam, Usha, Error. Yuna, good morning, baby. Good morning. What's up, Hassan? What's up, Shelby? What's up, the Uno? Oh, Mr. Ortiz. Good morning. I hope you guys are up. I mean, if the CPI ain't wake you up, I don't know what will, man. This thing is crazy, bro. This thing, 9.1, every estimate wrong again. The yield curve going absolutely nuts. The dollar, even the yen got weakened off of this, man. Oh, man. So we got a lot to go over. Before I get into the news, again, we have a little bit more time here. So let's talk about some of these inflation factors. So out of the report, here is what it was. Again, you heard the White House yesterday. They were bringing up gasoline. It did have a big impact, but the thing is, if you go back to March, pretty much, you could see that gasoline had the same impact. Used car prices, those went down a little bit, so that had a negative effect on CPI. Besides that, it was a broader increase across the board. Again, literally electricity had a bigger impact there. Food kind of calmed down. So that one wasn't too bad, but it just seems like it was a broader influence of everything. So Watch out for that one. Again, I already talked about this one, and this is where people are a little bit more spooked. Again, we brought up the services and wages. I told you that on the post yesterday. We were talking about that, but again, this is where some people are getting a little bit more worried about the stickiness. So again, 75% of the industries all are moving above 4%, meaning that every single industry on the CPI, 75% of them all went up on this month. Again, so not only was it a surpriser, this was broader based. Wages went down, so that doesn't really show wage inflation, but it just shows prices going up and, again, stagflation. But now, this is what we were talking about. It happened again. You have core services going up and rent and shelter. So this is a big thing to keep in mind, simply because core services going up, this is just letting you know, hey, this is, even if core went down, if you got rid of food and energy, we're still watching the biggest move. I believe this is the biggest move since 1980 in terms of core, and watching all these other factors go up. So there was that. Here are the biggest changes so far. Where is it? Come on, load it. It's not loading. Here it is. So one of the biggest weighting, again, gasoline. It went up 11 points from last month. Motor fuel, energy, commodities, margarine. So out of food-wise, this was one of your bigger ones. Let's try to get to the first non-food. Everything was just food and energy on the first half. Fats and oils, those are expensive now. Motor vehicle maintenance. I know this one was one that went up, even though used car prices went down, but you can see based on the weighting, that's a different picture for you. Let me get you the ones that cooled down first. Please hold. So this is it. Citrus fruits. Your citrus has came down. Yes, this is for June, but again, a lot of people, bro. I don't know if Wall Street's going to be happy with this. Again, a couple of analyst comments I read in the morning, they were like, it doesn't, even this whole trying to get in front of it and saying that the gasoline data is old. I don't know. Again, the fact that every economist was wrong once again, it's people are a little bit weird today, and now Wall Street is going to have to discuss 100 basis points or not. But yeah, beef went down a little bit by 2%. Window coverings, if you guys are waiting to get blinds on your house, you could get a good deal now. Last couple months have came down. Citrus fruits, airline fare dropped a little bit, and then again, random food services here and there, and then delivery services came down slightly. Again, a lot of the changes just were not good. Most categories actually ended up going higher, and then you could see here, again, the weighting, nothing stuck out. It wasn't, remember last time, I believe it was rent, food, and home. This was all like deep red. It wasn't like that this time around, but food and services, or food at employee site schools, that was the one that had a really, really big increase. So we're going to see. There's a couple more charts I could probably bring out here. Again, this is just the whole talk about today. The fact is that it's surprised. People are a little bit worried. It's going to start changing future expectations. I would watch the yield curve. And now the question is, do we continue the negativity from any of the CPIs? So, good morning. That's the breakdown. Let's see what else we got. Inflation ramped up to 9.1 in June from 8.6, topping consensus and reflecting higher gasoline and food costs. Month-on-month print came in at a faster than expected 1.3%. Prices are on a tear and set to keep the Fed on track for another 75 hike this month, which is now priced in by money markets. The Fed forecast for 4% inflation this year is too optimistic. Jamie Dimon told French newspaper Le Figaro a soft landing in the U.S. and Europe is less likely. Speaking of the IMF, they cut their 2022 U.S. GDP forecast to 2.3 from 2.9. It projected just a month ago. It also lowered next year's estimates. Fidelity says that the U.S. has moved closer to a hard landing, while a recession in Europe looks very, very likely. And a new nowcast model flags U.S. GDP may have contracted in the second quarter. Markets were capitulated into a risk-off mood. Futures dropped sharply, led by NASDAQ investors. Treasury yields jumped, led by the short end, and the dollar advanced. Oil reversed its earlier gains, and Bitcoin resumed the slide. Weaker U.S. earnings and are largely priced in and unlikely to trigger a further sell-off in stocks, said Deutsche Bank. It said the market usually rallies during earnings season after a decline. Firm joined Citi and Bernstein, saying earnings-related risk have been overplayed. Threats lurk, though corporate risk aversion in particular. Big cost-cutting measures or changes in capital spending plans, Deutsche Bank said. So Deutsche Bank, Bernstein, and Citi, they said, nah, man, earnings ain't even going to be that dope. So keep that in mind. Twitter rose pre-market after suing Elon over his abandoned $44 billion takeover bid. Piper Sandler said it seems unlikely that the acquisition will take place as it was originally envisioned. Twitter lawyers said they can't beat Musk in court in just 4 days and hope to start a non-jury case September 19th in Delaware. Musk responded with a tweet, notch. He said, "Oh, the irony. Google will slow hiring the rest of the year. Sundar Pichai wants it to be more entrepreneurial. Delta's profit missed and said its high operating costs will persist through the end of the year. Spirit Airlines further delayed a shareholder vote after Frontier said this week it's still very far from winning sufficient support because of the higher offer from JetBlue. Unity and IronSource will merge in an all-stock deal valued at approximately $4.4 billion. Rogers will give customers a credit worth 5 days of service as compensation for last week's network failure, which knocked out more than 10 million people offline. Amped up global tightening continues. The Bank of Canada is set to deliver a supersized 75 basis point hike to 2.25 later this year, or later in this week, its largest since 1998. The RBNZ became the first central bank to move its key rate above neutral, raising by 50 basis points to 2.5. South Korea increased by the same amount. It's the biggest move ever to 2.25. And watch Chile. Economists are split over the magnitude of today's anticipated hikes. Crude prices pose a high risk to the global economic recovery, with signs rising fuel costs are starting to take their toll on demand growth, the IEA said, while trimming its demand forecast for the year and next. In the U.S., oil product inventories jumped last week, easing supply concerns. Gasoline and distillate supplies combined a 6 million, the API said to have reported. Rise in distillate inventory would be the biggest so far this year, if confirmed by the EIA. Global convertible bond market shrank more this year than any other time in the past decade. China reported total trade with Russia was about $77 billion in the first half of the year, up 27% from the same period in 2021. Switzerland warned commodity traders to steer clear of coal, grain, or other foodstuffs reportedly pillaged from Ukraine for a risk of committing a war crime. Wow. Dang, if you trade a commodity in Switzerland, it's a war crime. What? And Vladimir Putin's younger daughter was named to a new role to help beat the impact of international sanctions. Crypto Contagion, the collapse of Three Arrows, is a cautionary tale as Su Zhu and Kyle Davies ran the most important hedge fund in crypto. It was a venture investor in some of the best-known crypto startups and some of their corporate treasuries. It was an aggressive borrower from large lenders and a shareholder in some of them, but they bet everything on prices only going up. Tina's at risk. The multi-year market mantra that there's no alternative to equities is facing a major threat as bond yields increasingly look more attractive. The percentage of S&P members with a dividend yield higher than the 10-year has fallen to the lowest since 2007, while yields have surged this year as corporate payouts are under pressure. Damn, that's crazy, actually. You have less than 10% of companies trading higher than the 10-year. Or offering a dividend higher than that. That's actually wild. That is wild. It's 10 a.m., Bank of Canada rate decision. 10:30, EIA, U.S. oil inventories. 11 a.m., BOC Macklin speaks. 11:30, 30 billion, 119-day bonds. 1 p.m., 30-year bonds, 19 billion. 2 p.m., Fed beige book. 2 p.m., U.S. June budget statement. 6 p.m., Chile rate decision. Then Biden begins 4-day trip to the Middle East. And Yellen travels to Bali for G20 meetings. Aye. That's crazy, man. That one's crazy. Oh, what time? 6:18. We got some time. I forgot. What a day, bro. Everybody's surprised. Again, we have to talk about the yield curve a lot today. Or I guess you don't really have to talk about it, but just watch it. Because the yield curve is about to go crazy. Ladies and gentlemen, that is the next step to the CPI here. Again, we'll see. We will see. Commodities never belonged in their portfolio. Joe Biden is confident he'll make progress with Saudi and other Gulf leaders on guaranteeing a sustainable level of energy production for the region. National Security Advisor Jake Sullivan said Biden's first Middle East visit will include a Friday meeting with Mohammed bin Salman and other members of the GCC. January 6th panel, a profanity-laced shouting match in the Oval Office, and former aides concerned that Trump was inciting civil war emerged as some of the most dramatic moments of the hearing. The UK economy grew 0.5 in May from April, beating consensus for 0.1 growth. Rebound in health services offset a drop in hospitality and consumer-facing services. Industrial production also beat, gaining 0.9 versus forecast for no growth. Conservative MPs begin voting on a new leader today, with any contender getting fewer than 30 votes out of the running. The ECB is watching the euro's drop because of its effect on inflation. Francos Villeroy told Francis Info, "It's good news for activity as it supports exporters, but unfortunately, it raises inflation a little bit." Sri Lanka imposed the state of emergency after President Gotabaya Rajapaksa fled the country. Protesters see state broadcasters Rupavani as PM. Ranil, I can't even say half these names, was named the acting president. Liquidity in China's interbank market is more than ample, the PBOC said, and indication further rate cuts are unlikely. The bank is keeping a close eye on domestic inflation, as well as shifts of monetary policy in major economies, and has taken preemptive measures to offset their impact on cross-border capital flows. Hong Kong may end hotel quarantine by November, the SCMP reported. New health chief Lo Chung Mao suggested recent arrivals may be prohibited from certain busy areas such as bars, but won't have to isolate completely. Oil's more likely to hit 50 over time than 150, absent intervention, Citi said, adding a slowdown in global growth could come alongside a robust surge in supply. OPEC Plus may act again to support prices if they fall to 60s or 70s. Crude and natural gas futures rose. Gold traded near the lowest in more than 9 months. Wheat futures edged higher. China commodity trade, the country shipped its smallest volume of oil in 4 years in June as refiners sat on high inventories. Importers slumped by 10 million tons or 22%. That equates to 8 million barrels a day. Net oil product exports rose 24%. Edible oil imports slumped to their lowest in more than 7 years. Copper purchases rose to the highest level this year. Peter Thiel-backed Bridgetown is weighing a potential merger with Singapore-based digital telecom services. Carlyle and Permira emerged as bidders for reorganization research, bankruptcy, and distressed debt information provider. KKR raised $2.1 in its first private credit fund. Amazon's top line is expected to reaccelerate and profitability to improve as the company grows into fulfillment and shipping overbuild in 2023. Morningstar is slashing hundreds of jobs at Shenzhen as part of a restructuring and moving the jobs out of China. JP Morgan's Gold Desk scammed the market for years with spoofing trades. A former colleague testified at the trial of 3 former bank employees charged with fraud. Walmart blocks Amazon from buying the EV van Canoo. JP Morgan CEO says Fed inflation forecast too optimistic. iPhone maker backs top China chip maker after rescue. Apple ends consulting agreement with Johnny Ive. Mini Procter & Gamble seeks to reopen window. Roadshow underway. Canoo agrees not to supply Amazon as part of Walmart deal. Apple estimates cut at Citi on macro woes. Reiterates buy rating. Delta may buy about 12 more Airbus jets, Reuters reported. And then Goldman sees UN's Green Map can help investors assess in China. Oh, are you ready for this? It's the summer of travel hell, and we know which airports burn the most. Hopper, an online travel agency, has ranked the 10 worst European airports for delays, topping the list. It's bad in Brussels and frustrating in Frankfurt. Bring your alibis. A rock memorabilia dealer and 2 others were charged with scheming to sell allegedly ill-gotten handwritten lyrics to Hotel California and other hits by the Eagles. Get out of here. New York is suing the owners of a building in Manhattan for operating illegal short-term rentals through platforms such as Airbnb, making the first suit since a law was enacted that requires a site to report data on rental bookings to the city. The suit alleges that real estate broker made $2 million via Airbnb over about 4 years. British entrepreneur Nick Candy is listing his luxury 18-bathroom mansion for $85 million after receiving a bunch of offers. Again, Johnny Ive and Apple agreed to stop working together. New York Times reported Apple execs have questioned how much the company was paying the designer, who left in 2019 to start his own firm, and Ive was said to want freedom to take on other clients without Apple's permissions. JP Morgan is about to find out what a rich Russian impounded super yacht is actually worth. The bank won a court order in Gibraltar allowing for the auction of a 240-foot vessel owned by Dmitry Pumpyansky, who was sanctioned in March. And then on this day in history, The New York City draft riots broke out in 1863. 3 days of violence in Lower Manhattan, regarded as the culmination of white working class discontent with the new laws to draft men to fight in the Civil War. The riots remain the largest civil and most racially charged urban disturbance in U.S. history. They turned into a race riot with whites attacking black people throughout the city. Official death toll was listed at either 119 or 120. Calm was restored on July 16th after the military was called in. Wow, I did not know that. The New York City draft riots. Holy. Oh, man. So, that's the day. Again, we've already had a breakdown through CPI. I'm sure we're going to go over it a couple more times. Again, just the fact that everybody got surprised is a big point. I would keep an eye there on both the dollar and the yield curve. The yield curve's about to get crazy. The inflation was sticky. It was across the board. And people, even if the data, again, even if commodities have came down in the last month, a lot of people were not expecting it to come in this high. So good luck. Get ready. We got a couple more things. I got one more minute. We got Altera Biotherapeutics. They're down 51%. Cohen called the interim analysis inconclusive. Boxed, BOXD, climbs 14%. E-commerce company Wells Fargo starts coverage on them. GoEV is up 3% after the news with Walmart and them not supplying Amazon. Delta slips 3.7 after falling short on profit expectations for second quarter. Airline said high operating costs will persist through the end of the year. PSTI slips 1.7 after saying the study missed primary endpoint. Stitch Fix jumps 8% after board member Bill Gurley bought $5 million worth of shares. And then Twitter is up after suing Elon Musk. So there it is. You could buy the euro through any currency pair. There's what's it called? There's like FXY. That's like for the currency. Which one is the euro? There's one. It's like FX something. Or no, no, it's or FXJ? It's one of those, man. It's one of those. Bap. 47% chance of a 1%. So that's what people are talking about next. Again, yield curve and what are the odds going to be? Those are going to have some big effects. But ladies and gentlemen, boys and girls, I hope you're ready. Again, 5 of the last 6 CPI days have went down. So we already have our work cut out for us today. But here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will. And that is the veterans of the United States of America, baby. So on behalf of the Cult, the people here, the people not here, we just want to give a huge special shout out. All the active servicemen, past servicemen, anybody who has served this country. God bless you and thank you for your service. And thank you. And shout out to the police officers, firefighters, doctors, nurses, teachers, all the other public service out there as well, too, baby. God bless you and thank you for your commitment and service. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Salute the Jets! Oh, it's game time, baby. Or nah. Oh, good morning. Happy Inflation Day. Nothing to be happy about with 9.1, but happy Inflation Day. Oh, you made it. Get ready. Again, we might be able to power through them. I got a couple of plays here, not anything too crazy. Again, I'm going to be watching Delta. That's post-earnings. I'm going to be watching JP Morgan. Again, it's quite fascinating how the banks have moved, and they still have earnings up on deck, so we'll see what the CPI meant, but pretty much I think CPI didn't hurt banks too much, so watch out for them, Morgan Stanley, and then Apple, Netflix, NVIDIA, Google, just going to be looking for potential pre-earnings plays, but this is probably going to jack up the premiums, okay? So we're going to see. We got that Apple from yesterday. Let's see where the premiums are at, and just keep that in mind and get ready for a lot of volatility. So we got about 2 minutes. Let me see if I can pull them up here again. Here were some of the main points from the CPI. Here were all the industries. Car prices went down. Gas had the biggest impact since March. Again, why people are worried about this CPI, the diffusion, over 75% of categories all rose above 4%. The sticky factors like rent and shelter, and even looking at CPI without energy or food, it was just another bad trend. And then here are all of the industries and categories. You had some food categories go up 20% just in the last month alone, and the biggest decline was like 4% in window coverings and citrus fruits. Ta-da! So that's just a quick rundown. Again, we have a lot to discuss. We got about 30 seconds left, Chad. So call out any plays. Get ready for the market to go crazy. And let's have some fun, baby. Let's have some fun. Is EWG in the money? There's no way. 21? We might be. Oh, man. What scammers? What scammers? We'll see. It's entrenched. Oh, very entrenched. Yes. I think we're going to even get a conversation. 20. No, I'm out of the money. I'm almost there. Round 1. Fight. So let's see there. Apple's already down 2%. NASDAQ is probably going to open around 1.5. So it's pretty big. Just let's see how it holds up, really. And then again, watch the banks. You even had Delta Airlines for earnings. They did not have good earnings. And let's check the rest. Let's see. Netflix down 1.7. What was the EWG play? That was an old EWG play. SPY. What's the date today? 15th is when the market expires. Oh, no. These very expensive. Yeah. Premiums all across the board are like jacked. The apples. I don't think the apples aren't even up. They're at 47. The apples didn't really move too much, so keep that in mind. Some premiums, they haven't got too crazy yet. Is it? You're 100% on them? That's weird. I'm getting 47. Let me check. Green, DIA, Dow down 1. Delta, again, they're still selling off there, down 6% right now. Keep that in mind for any continuation play. SPY coming up. Dollars, watch if the dollar breaks above 29. CPI already came out, 9.1. Premiums, VIX is up, but it's only 4%. Honestly, the premiums are not that bad. Yeah, I haven't hit 100% on my apples yet, though. That one's actually kind of surprising. So, again, we caught like 30% of the move yesterday. It went up 30%, but even after a 2% gap down, they're not up at 100% yet. So, in a weird way, Apple puts are kind of not too juiced. So, we'll see how this plays out, but we'll get by the end of the day. Yeah, give it an hour. Netflix, the Netflixonian. Yeah, even the Netflixes didn't go up too much. Honestly, the premiums did not go up that much. Too far out the money. But the ones at the money only went up 27% too. So they're all across the board. When you look at the premium change, it's 27%. It's just not as much. I think you need it to move intraday. That's where we got more gain off of that. Dividend stocks holding. ARC halted. Arch. XOM, Conoco flying, energy. We think oil's still down on the day. Oil was up in the morning. Yeah, oil's at 95, man. Big level. Big level. When's the Fed? So SPY's coming back down there. You had like 2 candles of holding up, and then it just flip-flopped. Tesla down big. Oh, where is Tesla? Oh, 675. Watch NA. ARC halted. It was Arch Cold, not ARC, like Cat the Arc. Boeing's down 3-2. The Teslas are up 100% on the weeklies. Man, those 687s would have been great. CPI came in at 9.1. So Delta's still going down. Delta, that continuation might hit. Oh, come on. Why won't that work? I'm looking at the deltas. It's not getting in there. Shout out to my last. Oh, I thought you said shout out my last BA contract. BA getting rot. BA's down 3 again after moving 7 yesterday. And then SPY came right back up to here. Let's see how this messes with premium. I'm hoping in the next hour we could get a good SPY play, but let's just see. Right now we're just dancing around. Boeing is on the low. Watch out for Delta. Delta is continuing lower. The premiums just shot up. Delta premiums were kind of cheap. Coca-Cola calls dead. Coca-Cola, they're only down a quarter, but yeah, again, that one's a weekly, and there was no real earnings effect. Veru going straight up. Sega, where is Apple? Conoco going kind of crazy. Yeah, 1%. I mean, it's better on the day. NASDAQ down 1.8. SPY 1.3. Dow 1%. There's 100 on the deltas. I just watched them go up 50%. Where's UAL? And then SPY's still dancing around. Dollar is 5 cents away from 29. Ay. And then Apple's still down 2. Affirm. Damn, Affirm's down 9. Netflix. $69. Yeah, it's weird. Some of these didn't go up too much in value. Like Netflix is still kind of cheap. But again, that could be some of the earnings premium already priced in. WTI, 95, 96. JNK. Apple's starting to come up. Where's Microsoft? Remember, they were outpacing yesterday. CPI out. Yeah, CPI was 9.1%. We went over a lot. Give it another 30 minutes here, and we could recap all of it. I'm sure we're going to have a lot of discussions. So energy is the only thing up today. Consumer staples is number 2, but they're down 0.10. Huge buying volume. Again, remember, volumes have been low, but it's only been 6 minutes, and we already have 10 million on the day. Today is definitely a lot more active than some of the other days that we've had. No, that's not good. We're about to red to green. No, we got a solid 1% to move. Again, Dow's moving, dollar's coming down. That could be a little bit more positive. Again, you have a couple of post-earnings plays like Delta. Banks are still down, but they're trying to work. Yes, CPI was higher than Lil Wayne. 9.1. Again, simply put, just every analyst missed it again. And that is, I just don't think people realize how rare that is. For us to go back-to-back CPI, I mean, your qualified economists are failing you, is the only way to put it, or it's just highlighting the degree of volatility and uncertainty that there really is. There's Microsoft. Apple's going straight up. Can they move after the webcast? Delta, yeah. Again, it's already down. Chances are, though, anything conference call related will probably move things. But, yeah, it does have the ability to move. Let's see. Dude, the dailies are expensive, bro. All right, guess. Where are we at right now? We're at 376. It's $1.50 for a 370. That's kind of expensive. Make the title CPI at 9. Boy, you should actually, right? I thought inflation was good for the stock market. That narrative has not hit just yet. I mean, there's some things good for it. Honestly, I'd wait till Wall Street starts pumping that out there. But right now, the narrative that took flight is the yield curve is screaming danger now. People are next saying that, well, I don't know if Powell, people are talking now 100 basis points is, that's going to be the next real big debate we're going to get. And then that how do you factor this in when most of the data is older? Wall Street and a lot of people just still aren't happy about it. So I think the narrative of some of the positive stuff may come around the corner, but let's see what happens. But right now, there's three other narratives kind of that are negative that are outweighing any positive anybody could find. For now, it's still very early. But again, yeah, the 2s and 10s the 2s and 10 inversion is going to go to 0.3. So I think that's what Ira Jersey said this morning, which is surprising. But again, people are like, look at this. This is at 0.16, but the yield curve after today is going to invert like crazy. Again, I don't think we're going to watch the negative inversion, but this is saying now that the odds of a recession caused by an inflation mistake is pretty much increasing. Pretty much Fed policy, the odds of it shifting now have increased a lot after that 9.1. This pump is ridiculous. Well, again, we sold off about 1% instantly right when the report came out. This is where it was. So, and again, 5 of the last 6 CPIs, the market has ended lower. I mean, the dollar's been going straight down since we've opened, but just give it some time. It's still pretty early. And Qualcomm is green. Qualcomm very green. NVIDIA, SPY, what time is it? It's been 20 minutes. It sucks. You kind of want it to stay up here if we could, because puts didn't go too crazy, but we might be able to get some. That's what we're going to have to see. Too many shorts. We should be down way more. the immediate frustration after being down 1%, I feel. But it's honestly, give it time. It's only been 11 minutes. We're going to have a long day. Bop. Abby, where's healthcare? XLV, they're still up, down 0.5%, but they're coming up. Consumer staples went green. I don't know why energy is up 0.78. But energy is still leading even though oil's down. XLV coming down. That sucks. I guess 140. It's not too bad, but it's still pretty bad. Anyone on deck to talk about CPI? I think we're gonna get you'll get a couple of analysts and companies. Tesla's on the high now, but I think Biden might come on and speak. We're gonna find out. 100 basis points isn't priced in, but right now, Fed futures are above 75. There it is. So we're about to hit a new high again. Tech is still kind of in the middle. The only leaders on the day are consumer staples and discretionaries are number 7. Actually, tech's the worst, but it's only down 1%. Lucid green. Tesla just started moving up. Okay, we're not breaking that. Those went to 153. Scammers. Okay, I grabbed one of the 370 SPY puts for Friday for $1.50. Remember, I went 0 for 5 on these last week, so let's see if we could turn this one around. But I still think it's early. The plays they're really expensive. I don't know any way to describe it. Besides that, it's just if you want to go for it or not. And again, that's the lower end of the range. It's like if you wait till that range breaks, you know we're going to get a move. But if you want to try to front run it. Max bad news priced in. I think the only thing that's not priced in, though, is the yield curve is about to start scaring people. I don't know if they'll get like super shocked by it, but the fact that the yield curve is saying something, again, it's already pretty deeply inverted, but more further deep inversion might be the one to start hitting. And again, there's a lot of debate following this report. It's not like a lot of people thought we were going to be able to brush it off if it came in high, but this was just another one of those meetings where everybody was just wrong. Again, all the estimates were just way off, and now it's moving a lot of different assets from the bond market all the way down to, again, Fed futures and the dollar too. So dollar's climbing back up. That's what we got to watch here. Again, the dollar is very close to hitting 29 a day. Hindenburg has acquired a cumulative significant position in Twitter. Hindenburg Research, they said that they've accumulated a significant long in shares of Twitter. Twitter's complaint poses a credible threat to Musk's empire. So I don't know. I don't know if that came in here or not. It's off of a tweet. Yeah, so I thought Hindenburg usually shorts plays, but this time around they said they're like, nah, we in it. We in it. So SPY's coming right back down to open. Again, that little top, we weren't able to break through 378. Can't short Tesla. Tesla's only down 1.5 right now. Again, the Tesla options are expensive. Imagine if we had 10.1. I mean, 9.1 is pretty close. Again, 9.1 is pretty wild. Pretty wild. Big volume coming in on Tesla. See if that holds or not. And then where's Qualcomm? Are they still up? Qualcomm's still killing it. Bro, Qualcomm and the chip makers are kind of moving up here too. There's Tesla again with the green candle. On August CPI, I mean, I'd assume it's going to come down here, but surprisingly, we didn't get too much talks about the peak inflation. Again, I think it might come up a little later. Some people are assuming it will, but again, I mean, we've been on a streak of just missing inflation expectations. So, you know, people did bring it up here to this morning, but I don't know how much a weight it really holds just yet. I think as we see what commodities do in the next week or so following this, I think we'll have a better idea, but I think it's just too early for anybody to make a comment on that one. Oh, but it's not too early for Bradley Frizzle and the Peach, ladies and gentlemen. Oh, my goodness. Oh, no. We love it. Oh, never too early. You see that? Inflation in 9.1 Peach. What? Inflation? No, peaches don't have inflation. The peaches have stayed way more consistent. I've never missed a peach estimate in my life. Have we? No, we haven't. It's beautiful. Peach Nation, stand up. Bradley Frizzle, God bless you. And thank you. And good morning. It's beautiful. It's beautiful. Dollar came down a little bit. NVIDIA and some of the chip makers moving up. They moving on up. When is Tesla's earnings? So back down. We went up a quarter on the SPY put. Now we're down a quarter, down 10 cents. July 20th. Ooh. July didn't, and they had just had some good numbers. Tesla big volume, SPY big volume. Chips are going up right now. Again, Qualcomm is like up 1% or something, and then Nvidia and AMD are going up. Apple, Tesla did go green. Again, the Tesla puts are cheap now. In a weird, well, not cheap. Take that with a grain of salt, but they're cheaper, or they're experiencing that weird level of decay more or less. I do not have any ETFs in the long term. CPI data is out of date. Yeah, that's what people have been talking about. But again, like I said, that debate came in yesterday, but Wall Street was not happy with it this morning. Again, the fact that 47 economists were still off after pricing that in, is a little bit more shocking. So we're gonna see. But I would be watching the yield curve and then rate hike expectations. Again, before you know it, Powell is just right around the corner. This CPI data was for June, so last month. And then Tesla's still going up, SPY hitting a new high on the day. Couple names rocketing, but now we're only down about 0.5%. We opened up about 1.5%. So literally last 20 minutes, big volumes is coming in all across the board, and you are up about 1% from the lows of the day, but you still got a long way to recover. Again, this was pre-market when the CPI came out, so just keep that in mind. Cash open strong. For the most part, there's a little bit of volatility, but yeah. And again, just take note of the industries that are doing good. There's a couple that are really, really good right now. It's kind of surprising. There's Netflixonian. Actually, let me check one more. SPY needs to go to 370. Which one was that? I thought we'd be down at least 3. Only 0.5% now. Well, we were down 1.5 at most. I mean, last time did we drop? I think we did like 2.7 on the last surprise. I guess maybe we're a little bit more used to a surprise here, but again, last time was a pretty big reaction. Do I agree with this move? Yeah. Just because it's like you guys have to zoom out. Just pull up the pre-market. This is where you were at 5:30 a.m., 5:29. So again, when we look at it intraday and you boil it to a 10-minute period, this thing looks bullish as hell. But is it really that bullish? I don't know. And again, until we move out the range, but there's a lot to digest from this. That's the way to kind of put it. But I'm down to get both plays. I grabbed the SPY for today. I'm looking at a couple plays I want to grab right now. But like I said yesterday, I'm just going to make sure they cover earnings. And I'm looking for like earnings plays more or less. Let me see. That's July 15th. Wait, when is their earnings? July 20th. Okay, I bought a Tesla put for next week. It covers earnings. And then I'm going to go grab one more earnings play if they're not up too much. Again, and the idea is, I think those Tesla puts, I believe they are down on the day. And I pretty much used the profit from the last play. But that one's super far at the money. Yeah, that play should be cheaper. Spent $150. And the play should be cheaper, a.k.a. you're buying that premium slightly lower than where it was yesterday. But it is at the 700 level, so be careful. How much time? Just 2 weeks. So it's a short-term play, but thankfully it covers their earnings by a day or two. So that's why I was like, all right, could be interesting. You can go for a Tesla call too. That was the mistake I made last time. Remember, we talked about it. And honestly, I would wait for the end of the day or a little bit here. You can't buy them at the same time, but then it just increases your break even. But hopefully by the end of the day, if the calls get cheaper, I would go for the call as well too. And again, just keep in mind earnings and keep in mind some of the volatility that'll get set up. Think of banks are risky. I don't think they're. I mean, a lot of people have been talking about the value of banks, but I mean, they have been getting clobbered. But if there was able, if they could feel a little bit more confident about the consumer, I think banks offer a very unique, upside. So I'm a buyer of banks, but it's risky, but I don't think it's like, oh my God, the most riskiest trade you can make right now. In a weird way, I think oil is a little bit more risky in the sense that just look at the oil markets and how volatile they've been lately. The thing about is just they're not going up. The thing about the bank stocks, they're just hit by what's going on here. Again, the consumer benefit off high rates. Banks would get really clapped by a recessionary event. So it's a weird mix right now. I would not buy Tesla for the long term. Not yet. Again, I'm going to be buying Tesla whenever we get like the final leg of all this volatility. That's when I'll probably be looking to grab some Tesla. Eat up. 8%. No way. So Netflix contracts are up 8%, even though the stock is down 2%. That's crazy. That one is crazy. Scam us. Obvious bull trap. Shouldn't we be falling more? I think we're in a weird middle right now. We're back down to 1%. Remember, up here it was 5%. Pull out from pre-market. You'll see we're still kind of in the gutter. So just give it a little bit of time and we're going to find out here. But just expect volatility. And if I can remind you anything, today isn't just about today. You still have tomorrow and Friday, and then that is going to start getting us ready for the Fed. So just don't forget about the 2-day digestion. So anytime we even look at the CPI and we look at the market impact, usually it factors into the next day. So just keep that in mind as, we're going to probably get a multi-day move here, especially with the fact that we haven't really moved in the last 4 or 5 days. So just don't forget that one either. Dollar's been going crazy. SPY has stayed within this range quite tight. Again, we have yet to break that 370. That's why we got the play on it today to see. But, this could take a day or two. Conoco XOM. U.S. stock sink as faster inflation points to bigger rate hikes. EWG hit 32-week low. Unfortunately, that play is still clapped. They're clapping us on that one. I'm going to cry. Enphase. You still know. FedEx play I closed out. I think I made a couple $100 on that one. Not in that one. I still have the Costco, which I'm down on, but not the FedEx. Delta's down 7. If Delta comes down, those continuations might actually be cheap. Low key. Can they get any worse? Find out on the next episode of Airlines. Is that 30? Oh, no, they're still up 100. Give it a little bit. Canadian interest rate. Yeah, 2 minutes, and that will be if they do 75. That will be their first 75 basis point hike. Tesla there. I did not buy VGK puts. I could consider it, though. Again, the VGKs have been a little bit better. Let's see. Yeah, some of the VGKs just they're not traded. That's the only problem. But I do like the VGKs a lot. At least we know those ones will move. Sort the pops. But I already have, remember, I still have one of the VGKs. That one is at least up 200% still, but everything else, I'm trying to see if there's like further out the monies. I keep watch on it still though, but just right now the spread is 100%. Not worth it. Netflix popping out. SPY might make its third high of the day. Dollar is still up about 7 cents off of 29. So is this really peak inflation? Arguably, but it's not. That debate's not coming up too much. But it is. I mean, it's possible that, you know, probably out of the next 3 inflations, they'll come down. But I mean, at this point, I just think a lot of people are stopping the guessing game just because we just, you know, nobody's been close, or at least the official estimates haven't been. And that's kind of been the problem. Dude, Microsoft's still down. It looks just like yesterday. And then Apple's hanging up out here at the top. Google 1.7. Amazon's up 1%. Amazon had a positive note on it today. So there it is. You're getting a little bit of downside. Is that 232? Okay, I bought a Netflix put. That one's for earnings as well, too. Again, I told you guys that I think I'm going to throw like $200-300 across some of the bigger ones. I wanted them the other day before they went crazy. But like I said, on some of these, like those are up 5% from yesterday, even though the stock is down 2%. And then now I'm going to have to start. I'm going to look for some calls now, too. Biden speaking, you're seeing headlines. You buying? I just bought a put on that one. Again, I'm just playing the earnings run-ups on any of these. That's what I'm actually going for. Snow calls. I could like that one. I want some of the more bigger tech, but I like how Snow has moved. Well, that's disgusting. Apple. God, it's great. Praise the Lord. Oh, man. Tell him. Tell him. End phase ready to break out. Snow's been very strong. A lot of the software plays. Again, yesterday with like Microsoft, they got kind of clapped, but they have been decent. Okay. Okay. Microsoft calls for earnings. So far, Apple puts, Netflix puts, Tesla puts, and then I grabbed Microsoft calls. Those ones are actually cheap. But let's see. Again, they've been underperforming the last 3 days. CPI data we in. Because it's like it's like slight catalyst, but it's like like I said from yesterday, I'm just thinking about earnings and the thing about today. I'm just like, yo, why is it like the premiums aren't that bad considerably like watching this move? So I thought this would have jacked up the premiums and messed it up, but I'm like, hey, there's an opportunity to get a little bit cheaper calls, get a couple of puts after a bigger move down, but then not really any movement. It's there, but again, I'm just keeping in mind the next catalyst more or less. Canada raised a full point. Yeah, I think they might have actually. All right, let me check. Canada 2-year yield extends. Canada hikes 100 basis points. Holy shit. Yeah, they've never even done 75. They just jumped straight to 1%. Oh, man. Hot dog. Yeah, that's confirmed. Canada is right. Dude, that's surprising. That's again, even though you're not dealing with it, it's more global, international, but just for the sake of central banks and kind of, remember how one person leads the other. People were waiting for 75. So now watch our 100 basis point because I don't know. That may have kind of opened the door for some higher estimates on our part. That's wild. So, again, the only country to not raise rates 75 was Canada. And then right now, they just went 100 basis points. So, remember that picture I showed you yesterday? Where is it? Let me find it. Here. So, look at this. Canada was the only one who have not hiked by 75 or more. They were only doing 50. And then all of a sudden today, this morning now, after our inflation report, they just did 100. So I would watch Fed futures right now because you might see people talk about that here. Again, that's what we brought up early in the morning. Market wants 125 now. It might. And then Tesla shares are pricing in 7% move for earnings. Dude, that's crazy. Yeah, Canada real estate might get clapped because Canada, a lot of them have fixed or they have adjustable mortgages in Canada still. So a lot of the Canadian mortgages are tied to the other thing. What do you think of Kathy Wood's assessment that they need a lower rates, not raise it? I don't think we're gonna have that discussion. We gotta rate. We have the rates. If you're talking about rates coming down at this point, you would be a big problem. Again, the yield curve would uninvert. It would mean something was wrong. Again, inflation would go crazy. It would contradict what a lot of people have said about the 70s. The fact that you don't want to go, raise and cut, raise and cut, raise and cut. So, nah, we're just not gonna have that talk about Kathy. No, Kathy, no. Yeah, but no, the Canada thing is interesting. Is the Canada move bullish or bearish? I would kind of argue it's neutral. It's like it's bullish because it's like, all right, the rest of the world is trying to stop inflation, but then it's negative because now you just opened up the door for a North American 100 basis point hike. I mean, that's it. Our neighbor just did 100 basis points. So now after a second surprising inflation report, it doesn't help the conversation in Fed futures that we might price in 100 now. Because, again, we were talking about that yesterday. This morning, we got the report. We brought it up. Again, a couple of people, like right now, the Fed futures are above 75. So it's not as if the market wasn't already kind of having this idea, but in a weird way, that was kind of a policy surprise on Canada's part. Yeah, honestly, like right here, like I think the odds right now are at 40% for 100 basis point, which is wild to me. 275. What are we at right now? The Canadians just raised by 100 basis point, 1 full percentage, and they have not done more than 50 since all this happened. Yeah, so right now we're at what, 7.5? Holy crap! Wait, what? We're at 7.5 to 1 right now. No, that was for May. How come that one has not adjusted? We're at 1.75. So 250 is still. This is I think this is 75 and this is 50. They're doing it right. I don't know, but that's like, so right now, yeah, I think 100 might start getting priced in. Right now, I think we're at one. I think we're at one. I don't know if we're at 1.5 to 1.7 or 1.7 to 2. You think we'll retest lows on the day? I mean, it's possible. Like we were saying, I think until we get below 370, we're not going to really know anything. So right now, I think we're at 1.5. Yeah, we're at 1.5 to 1.7. So then 75 would take us to what? Like 2.2 to 2.5? Yeah, so 2.2 to 2.5 is 75. And then this right here is 100. 2.5 to 275. Yeah. Quite simple. So right now, the odds of a triple hike are dropping because the odds of a quadruple 100 basis point is going up. SPY didn't even notice VWAP. I mean, we're doing the dance. I mean, this time, you know, lately with the VWAP dances, we've kind of like sold off into it, but this time the chart, it looks like it's facing up. So we will see. The euro dropping affects the use in buying power. I mean, it doesn't apply to today. I mean, broadly, we're just having our inflation, and we've talked about the euro stuff a lot. Just quite simply, it just makes the euro cheaper relative to the dollar. So it's good if you're exporting, bad if you're buying stuff. What's the day? Today's Wednesday. How are we looking? You think the EWGs could hit July? They could, but that's it. It's just right now it's down to the wire. Was it inflation expected to come in lower? Again, that's why today's inflation, I'm very disappointed because it's the second time it's happened, but pretty much there was a lot of things that were expected on this report, and only thing that happened was the only thing not expected, which was it went up, and it went up by a very, very big margin comparatively, and the range was already wide, was already very, very wide. Again, we went from 8.6 to like 8.8, 8.9, and then it comes in at 9.1. But you know, you had people talking about 8.1. You had everybody factoring in lower. You had a little bit higher. You had people talking about, you know, certain things coming down, and it just didn't happen. And then again, this was another one where services inflation went up, and all across the board. Again, here is one of the. I think this is one of the coolest stats, because this is the thing that you could tell that markets, like, have you noticed now people are reacting to inflation and CPI a lot more than they did a year ago? And it might be explained through this picture, because this is the month-over-month diffusion index. And what this is showing you is the amount of categories. So diffusion indexes are calculated by aggregating the CPI component weights, where month over month is above or below the defined threshold, smoothed with the 3-month moving average. So what this is pretty much telling you is the amount of categories that are up over 4%. So what we're noticing here towards the end of the year, and especially this year, is that you're watching 75% of the categories are now above 4% inflation. So that is why people are getting, partly worried about this report here too, because now this trend is continuing. You could see a new trend emerging where it's not just gasoline, it's not just food, it's not your, remember when used car prices, you remember when they were like, oh, inflation is because of used cars, it's because of used cars. Well, now, you actually had a almost 1% decline, or I guess 0.5% decline off of used car prices, but inflation is still going up. So you have more categories, broadly speaking, are affected now than any time we've seen since this all started. And then Algo ramp on stock sales could see follow through today. The third largest sell program of the year rolled through the stock market open. Equities took the selling in stride. Orders of size are typically not single events. They tend to happen in clusters, and that probably means the stock market could easily be in store for more losses today. So there it is, everybody complaining about it. You had your third largest sell program at the morning, and then they're saying there's a lot of algo selling and activity today. Algo selling and buying, but they said just get ready for more selling. Crypto fear index 15,150 or 15,100. YCS should be moving. It doesn't make sense. Economists are so wrong if all the data is available in calculations. Well, I mean, it's one thing to say the economists suck, but it's another thing to just highlight the confusing nature of inflation. Again, just like this is like the reverse moments where we watch gas come down and energy come down, but now inflation is still high. It's like those moments when we saw gas go up and then inflation didn't skyrocket. Inflation is just naturally confusing. But I am disappointed that it just, we're living in a different era when data just keeps coming, consistently comes in off from the estimates. You see what I'm saying? So like that, like I brought up earlier, it's very rare to watch that happen back to back, where every economist is, again, to have 47 people all be wrong and to say that these are the best in class, best in field. It's just, it's rare, because usually after a big mess up, you kind of get, it's easy to find out what it is. JPM dropping. Delta finally broke through. Delta puts her up. The Microsoftian. Oh, was that candle real? That was a little. No, that wasn't. We're right below view up. Ooh. Long it all, I'm telling you. I grabbed a call. on Microsoft for earnings. I did grab more puts today, but I feel you. Just in gen. You never know. The market is not a perfect science. People expect these economists to be fortune tellers. No one's expecting it to be fortune tellers, but again, there is a relative degree of consistency, I guess is what it's called. It's like a weatherman, right? No one expects your weatherman to be, a fortune teller. But it's like, imagine if your weatherman for the last 2 months is like, yeah, man, there's no way it's going to rain. And then all it does is rain every single time. It's kind of just like, okay, I don't even know if weatherman's a good example, because I think economists have a lot. These are good economists. I mean, these guys are not bad. It's just the fact that I'm trying to highlight that statistically speaking, it's very, very rare to watch everybody miss back to back like that. That's kind of what it comes down to. You know what I'm saying? It's just like that in and of itself is kind of an anomaly. And that's where I'm like, all right, I don't like it. That this is very volatile. I feel you. But now watch the yield curve, because that's just the next thing. What happens, happen. You got the data, but don't underestimate. People are already looking for the next step, and what this is already doing to the dollar and bonds. Again, the bonds had a very big reaction already. Again, TLT's coming up. Let's see, and again, we're going to be fighting between 1% and not. Yield curve is now inverted by 16 basis points between the 2s and 10s. Canada just raised by 1%. My goodness. Roblo for earning. It could be good. Could be good. Another one, Hindenburg. Correct spelling of Hindenburg. Oh, they corrected it. SPY's coming down now. Let's see. Delta's on the low. Remember, they had earnings. Bonds are kind of taking off a little bit. Dollar's still near the low of the day, but we are coming back again to the lows. And just don't forget the relative context of today and where we were at pre-market. But we are about to hit the intraday low right now if this keeps continuing. We're back to where we opened. The 1s and 10s are flirting. Yeah, the next one's just going to be the 310, because that's the whole point, is that after this gets deeply inverted, then all that matters is the last indicator, and Powell can't ignore it anymore. Pretty much, if this goes down to negative 30, negative 50, all yield curves are going to be inverted except the 3 and the 10. And that right there is the last one that Powell could say, oh, it's not inverted. And that's kind of the next step to here. But this just increased the odds. Again, the odds of there being a recession because of our inflation response. The yield curve today, this number going higher increases those odds of that type of recession and pivoting, more or less. What's your take on the year-end hike with midterms? I think we might pause by November, but I don't know now after watching Canada today. Let's see how Powell responds. Again, this is another one of those scenarios where we know now Powell is going to raise 75, but I don't know how he's going to take this. Again, if it's going to sound like the same speech from last month or not. So hard to say, but since the beginning of the year, a lot of people have been talking about pause around midterms. So I'm still keeping that in mind, but it's still pretty hard to say. 57% chance. There it is. Yeah, that's for 1%. So literally now, you are pricing in 100 basis points more than 7. Again, it's going to do what it did last CPI. That would be, if we were to watch this play out like last month, pretty much by today, leading into like the end of the week, you're going to watch this price in 100. But it might be too early. There might be too much time on the clock, but let's find out here. But that is moving up. Fed future odds are moving in terms of rate hikes. On my first vacation, going camping by myself. Started with you during college. Now we taking paid vacations. Love you, Josh. God bless. Red, white, and peach. Enjoy it, man. That sounds fun. Nice camping trip. Relax. Chill out there. Get some nature. Does inflation exist in nature? I don't know. I feel like do the trees grow taller or something? I don't know. I'm just trying to make inflation jokes now at this point, so I don't cry. I don't want to cry. Enjoy. Be safe. Wear mosquito spray. Because that's it. I don't like them. I don't like the mosquitoes. You know what I'm saying? I don't like them. Red, white, and peach. Y'all remember Jay Powell's tremors during the last press conference? He was a little... Again, how do you think Powell's going to act at the next meeting? I think that's a big question we should start asking right now and really start to think about it, because it's like, yo, this is a remix to last month. It's like last month, but it's a little different because it's not hitting you hard the same way, where last month was really, really surprising, but it's a lot of the same features. And now the market is quickly moving towards pricing something that was never discussed before. You see what I'm saying? So I don't know. It might be a little too early, though. I feel you on that, because when is the next Fed meeting? I think we have another week or so. Where is it? It's going to be July 26th or 27th. So, yeah, we have one more week to burn, actually. So, you actually have a little bit more time. You have one more week to burn, and then earnings is going to start, and then it's going to hit right here on the 27th. So, that's the difference. Last CPI, there was a 2-day delay between CPI and Powell. This time around, it's going to be about 7 to 10 trading days. I'm going to pin us right at this level. Well, we've seen that a lot throughout the week, so let's find out. But, I mean, there's a lot cooking today, and the volume's already high. So anything can happen. And, again, we opened up with one of the largest sell programs all year. I don't know if that's surprising to you or not, but that means bigger open on the downside than some of those January months we had, January and even March. UNG. Everybody in the UNG. I did stand-up last night, and inflation jokes are working. Oh, hell yeah. Send me your stand-up, bro. I want to hear this. Let's go. You got a record of it or a recording? We could play that during bathroom breaks. If it's 75 would be appropriate, and I don't know if people would get mad, but 100 is just extreme. At like even then, 75, up until last month, I thought was extreme, but I don't know. I think 75 they could get away with it, but the question is, are they going to do what Canada just did and then go one step ahead of the curve? That's why, again, I mean, the fact that we're pricing in 100 basis points is wicked. I don't even know the last time we had 100 basis points. I could go look it up real quick if you want. You guys could do it with me if you'd like. But that's just very rare. Again, even Canada this morning, again, about 30 minutes ago, Canada, they literally just raised it 100 when they've never even done 50 or 75. So let's take a look, but I don't know. I don't think modern speaking, we have to go back to like the 90s, 425. These are all rate cuts. That was a raise by a quarter, 425. This is 2004. Quarter. Six. Again, 1993 was the last 75. 5.5, 5.2, 6. So 475 to 5.5. What's that? That's 75 right here. Yeah, and then they did 0.5% afterwards, and then they started cutting. So 1994 was in 1994 was when we saw 0.75, and then SPY popping a little bit. There, let me move this a little lower. 80s, all cuts. 850, 930 to 96. Dude, I don't know. I don't know when the last time we had 100 basis points. Again, this is already in 1988 now. 6-7, that's 25, that's 25, that's 25. That one was 50. Maybe in the 70s. 6-7, 7-2 to 6. Right here, 86. Oh, wait, no, that was a cut. Never mind. You went 7.25. 8.2. This was 0.75. Then they cut. Right here, this is 884. You went from 11, and then in 2 months they went to 1175. I guess no, that's 0.75 still. Jeez. So I don't. Again, you doubt the Fed will do it, but right now the thing is, this is just what happened at the last CPI. The Fed futures are moving. So if the Fed futures price in 100, Canada just did a surprise 100 basis points. I mean, who knows what's going to happen? Is the best way to put it. 70s oil shock, is that when, again, in the late 80s they were doing 1%, but you don't really see it. Again, here in 1981 they raised 4%, so there you go. Again, this is just like back end 1.1 a point and a quarter. So 1980s, 1970s was the last time you saw 100 basis points. 1980 on the dot. So last time we did 0.75 was 1994. Now this time around it's 1980. Just that 1980s inflation, energy crisis stuff. And then we're right below VWAP. J&J's on the low. Tesla coming towards the high. J&J selling off. If the market was pricing in 100, wouldn't that force J-Pow to go with it? I would argue yes, because he bitched into it last time. So that's the thing. I think the Fed futures control the market more than anything now. Again, Powell doesn't care. Powell is in the back seat. Powell is not giving any guidance. That's why I think it's very interesting. Is everyone too hedged for the market to go further? This price actually makes no sense. It's just a slow boat crash. Again, just think about how long it took for us to respond to inflation. And again, there was a time a year ago when we hit a new high in inflation and the market would rally 3%. So it's just things take time to develop, both good and bad. It just eventually now, as things stay a certain way, that's why we watch kind of these slow moves. But there's definitely a lot of algorithms and effects because of options and the hedging. I wouldn't say it's a non-factor, but it's just like there's so many things right now. But just don't expect the market to kind of move as fast as some of these ideas, especially when we're trying to forecast very big changes or big actions or lack thereof. UCO oil's dropping again. Disgusting. Dude, 94. Dude, it hit 93 this morning. The premiums are weird today. Again, that's why I was like, some of these puts, it sucks because if you get a rally on any of those puts, if the earnings premium doesn't keep them up, they're going to get absolutely washed. But the fact that like some moves right now, it's just the premiums had a bigger move on the intraday sell-off here than the gap down here, which is kind of odd. But then I think it just highlights the wonkiness right now with all the options. If we hit 10% next, that would be crazy at this point. A little pop on everything. Yeah, pretty big candle on the SPY. Cue the comments. Why are we ripping? Tesla's up 1.5, 708. J&J was on the low. Visa's moving up. I think consumer staples, not. Consumer staples are number 2. Discretionaries are number 1 right now. So everything is still red, but big pop there on the SPY. Starbucks on the high. You're down about 0.5% on the NASDAQ, 1% on the Dow. That was the outperformer earlier, but not anymore. And then SPY is down 0.85. USO back to pre-Ukraine invasion levels. That's wild. EIA, crude, 3.2 million barrel inventory increase. Oil's about to get smacked. Interesting. So there was a build. The estimate was a draw of 1.5 million barrels. There was a buildup of 3.2 million barrels, but it's oil's ripping off of that. I don't know why. Again, that was so maybe that could be factoring into it a little bit. We just got oil data, but oil's going up on it. SPY hitting the high. This is the 4th time here today. And there it is. Ethanol stocks rise. Where's UNG? XOM. Yeah, watch energy plays. UNG's already up. Everything is backwards today. That one's weird. Again, people were waiting because that's why oil's been down. They said if EIA confirms a very big build in inventories, that could have brought oil pretty low, but I don't know why oil's catching a green candle on that. So give it some time, but oil's only down 0.16. EIA numbers came in. That was a build. Oil candles kind of reflect the market, but we just got a little bounce there as the dollar's declining. And then bonds have moved up to the high of the day, but still down overall. And yield curve and Fed futures are kind of the big focus and problem here with what we're dealing with. But we hit the 378 high again. Let's see if we break out. Again, we've had a lot of trouble here over the last couple days and even today. So just keep it on watch. Squiggly line confusing. Dip buyers coming in. Again, a lot of algo action today too has already been reported. But the thing is, we are still here. So we'll find out, but I think anything could happen at this point. But we've done a lot of dancing. We've done a lot of dancing, and it's still only been an hour. Volume is much higher than the last couple days. So in the first hour, you've done, right now, 7:30, 1 hour and 4 minutes in, you've done as much volume as 50% of the last 2 weeks pretty much. So every day we've done about 40 to 50 million in volume. In the last 2 weeks, it's been low volume, but right now we're already at half of that. So let's see if the momentum continues or not, but there's still a lot in store for today, especially relative to the last couple weeks. Chips are blasting. Yeah, Qualcomm killing it. Qualcomm, AMD's on the high. Upstart's on the high. The We Did It, We Made It. That song is called Enslow by Uncle Ansys. You can find it on YouTube. Can we get more of that TA action from yesterday? Bro, I gave you some elite technical analysis yesterday. Y'all was playing with me, man. I had to save it. This was my best technical chart. I should post this on Twitter because, honestly, this is the Bloomberg Commodity Index. But that's why, right now I don't think it's moved too much. But this is what we are looking for. So that's the interesting part, especially after today, because we got the inflation report going up, but the commodities aren't necessarily playing along just yet. So let's see what happens. I'm not trouble. What dude? This is real. Bro. I'm telling you, you have no idea how deep this goes. I'm telling you, this is elite technicals right here. I'm not like, it sounds funny when I say it, but like for real, it's like that right there, bro. That analysis. I'm gonna come back to that chart in a couple months. I promise you. I'm gonna come back to that chart. It is gonna make a lot of sense. I promise you. They playing with me, man. They playing with me. Watchlist. I got clapped yesterday. I took a little power nap, and a power nap turned into a full blown inflation. So, and then I was just really, really clapped. I was not feeling good. Some of y'all were trying to gaslight me into making the watch list. You're like, I don't know, man. They're like, this is ominous, Josh. They're like, something's wrong with Josh. I don't know, man. I'm getting really bad vibes, Josh. I think something is extremely wrong. It's like, nah, man, just chill, relax. It's the first one all year. Don't worry. Usually, like, you got to give me, like, there's, like, 1 or 2 watch lists that I can miss on a year usually, but I don't think I've missed a watch list in, like, 2 years. So that one was, unfortunately, broke the streak. But, yeah, I was clapped. I was clapped. I don't know how to describe it to you. But it's good. You felt naked. And again, CPI, I mean, most of it, all we were going to react to was the morning also. So I was like, it's kind of good. We discussed a lot of stuff already. Gave you the breakdown, short and sweet. Again, services, wages, real estate, all of that stuff. It was a big factor. And again, everybody was wrong too. So that was interesting. It was suspicious. That's good. That's good, though. If it felt suspicious to you, that's good. That means you've had a lot of consistency with this. So that's why you're like, this doesn't make sense. I think my COVID is peaked. I hope. I thought it did. And then yesterday I was like, ugh. Where on the chart would there be normalcy? I don't think so. I think the chart where you get normal, I don't know. That's a great question, actually. Very, very great question. So Fed Chair Peach is asking, where does this chart indicate us going back to normal? It might be around here, but even then, I don't think we return back to normal without a recessionary event, more or less, if that makes sense. So, but that's a very good question. I don't really know if I can answer it, just because I think that's where this becomes more difficult to answer. But great follow up. This is commodities. So this is a very simple chart. This is looking at the impact. Again, this commodity chart is the reason why some people are forecasted a low CPI today, and why people are saying it's out of date and all of that, because commodities have been dropping a very big amount. But just don't underestimate the commodities' influence on the market and everything, where we're saying if commodities bounce from here, your inflation narrative is going to return and it's going to hit with a vengeance. But if commodities keep dropping now, even though inflation is high and all that, you're going to have the recession fears start to pick up a little bit more, because essentially commodities are falling into recession before everything else. Whereas people expect a recession, commodities will get hit the hardest initially. Bonds making another move. We're holding up pretty good. I don't know if this will be the bottom or not. The only thing that's good about this level is that we've been here for about a month. For about what? A month? Exactly on the dot. June 13th till right now. Which last times we've ever danced around, it kind of, it wouldn't hold the same spot exactly. So that's the good sign. But, I mean, a lot of the data and everything else is still, doing its thing. VLD hitting the high is hawkish. Kind of, but gold just hit a 9-month low today. Repeat line. CPI is a month late, so 9.1 equates to where the chart is a month ago. Yes and no. It's like that's problem number 2. That's what we talked about yesterday, because this is the end of the month, but then it's like commodities were still expensive halfway through. So it's like that's just the problem. You know what I'm saying? It's like right last month you had a lot of volatility in commodities. That's where it's interesting, where it's like, yeah, the CPI is delayed, but how delayed is it when now, every other category is still going up too, though? That's the point. That's why it was a little bit of a problem. So it's a month delayed, but I don't know if that month delayed makes any data non-worthy of consideration, if that makes sense, right? Yeah, exactly. Every data point is retrospective, and it's just not as if, though, it wasn't as if it wasn't an anomaly. Just don't let them fuck with you again, is what I like what I'm saying. Just don't get fooled this time around. Like, do you guys remember when in 2021 everybody was saying that, oh, CPI is only high because of used car prices? Please tell me you don't forget that. Please tell me you guys don't remember that half of y'all were gaslit into believing that for the first 7 months of CPI, you were blaming it all on used car prices until Russia was invaded. Yes or no? And that's the green sector right here, green. But like, what do you notice is that 1, 2, 3, 4, 5, 6, 7 from the end of July 2021 till today, 7 of 12 of CPIs, car prices have came down. So do you see where I'm saying? That's what they did for the first half. So it's the same logic here. It's like, okay, yeah, you could blame gasoline, but the point is the data is showing us more categories than not. 75% of categories are all running above a neutral rate that the Fed says they're going to target by the end of the year. It's BS. So that's the problem. So that's why it's like there is retrospective data, but I don't know how much you could write it off. And again, what we saw with commodities in the last month, it was like half high, half low. So just take all that in for the data. But that's what makes today so just confusing or deeper than really we could have expected. SPY is breaking out now finally. Again, you are still below CPI release, but we have now broken above 378. We've hit that about 3 or 4 times. Again, take a look at the first candle there, pre-market. We still got a little bit of a ways to go, but we are now finally moving out. You could cue more of the, why are we going up? This is bullshit. It's rigged. Supposed to go down. I feel you. But keep watch. We're still negative on the day, about 0.5% on the SPY and Dow, but NASDAQ might go green, which is interesting. So energy is green on the day, and now consumer discretionary is leading by 0.72. You just got possessed. No, that was an elite. I don't know if you're familiar with like the covenant. You know what I'm saying? It's a big problem, honestly. It might be a big future problem. I don't know if they feel me. This is stupid. So here's the bullish estimate people are bringing up right now, and it's the amount of rate cuts now being priced in. But that relates here to the yield curve. Again, like I'm saying, the deeper the yield curve goes, chances are you're going to have a recession caused by inflation response and increases, or AKA the deeper this goes, eventually Powell is going to act to correct it before you know it. But discretionaries are leading. SPY is going up a little bit now. It's a first break at 380. I have no idea why oil is running off that data. I wish I could tell you, but I don't. Like, oil is going down when the data is bad, and then when the data is good, when the data has been good, it's been going down, and when it's been bad, it's been going up. So right now, there was a fat oil build that the EIA confirmed, and then it just shot up. So I could not explain that one to you today. It could, again, China has been kind of lingering in the background as far as oil's concerned, because that's been messing up demand, but still very, very, very hard to say. CPI at 9.1, federal funds at 1.517. How will their weak response make an impact to slow inflation? Well, people are going to call for what's already happened with energy and oil, right? You've already watched energy prices drop 20% with the Fed at 1.5. So, but now, I mean, people are already talking about 100 basis points now. Twitter moving up. Remember, there's positive Twitter news. Qualcomm leading the way there. Microsoft came back up. I don't know if the plays went up. Microsoft, dude, the call stayed the same. And then I'm assuming the rest of the puts went down. Let's see. Netflix 230, Tesla 500, and then I got the SPY daily. It's called leverage. Puts went down 10% on the Netflixes. I think the Teslas probably got fried more. NASDAQ green, Enphase gassing, Apple. I thought the Microsofts would move, but they're still down. Qualcomm's leading. Where's Apple? Apple's in the green now. The 500. The Teslas, I think those then went down 50% now. From 150 to 100. And then Microsoft's didn't move, and then the SPY put. By end of the week, SPY put is down $60. It's not too bad for now. No sense, the market in a nutshell. Well, we're until we get back to the pre-market levels, I'm not really like, I just think this is the first hour, and this is the most volume that we've gotten in a pretty long time. SQQ on the low now. Apple again. Between tech running, dollar dumping, I'm guessing the market is that the Fed is going to back off a little bit. That is part of the bullish thing right now, but it's not fully there. Right now, it's like 18 basis points of rate cuts are priced in for 2023. So we're still talking rate hikes, but again, as that yield curve gets more inverted, that is signaling pretty much there's going to be a pivot eventually. That means short term is rising, and then the low end is coming down now, right? So that tells you something about kind of how the market's feeling in terms of the future. That's why I'm saying the deeper the yield curve inversion, the more likely a recession caused by a reaction to inflation. Jump swim. All right. I need to go to the bathroom. Follow me on Instagram at the Trading Fraternity. I love you. Inflation sucks, but you're okay. You're okay.
Of Economics and Public Policy joins us. She was also a member of the Council of Economic Advisors during the Obama administration and was chief economist at the Labor Department. Professor, it's great to get your perspective today. The question we're asking, does the Fed go 100 basis points now?
I don't think that the Fed needs to go 100 basis points now. They have a plan to raise rates 75 basis points at the next meeting. I think that the report suggests that there's no reason to deviate from that plan, really in either direction. And, if you look at these numbers, I understand how startling they are. And I understand how much pain they're causing families to see prices going up after like this month after month. But I do want to point out a few things to consider. One is a large part of the increase in prices reflected rising fuel costs, and we already know those are starting to come down. And there's nothing the Fed can do to bring down fuel costs. So that big contributor is coming from our international problems related to Putin's invasion of Ukraine. And we know we're starting to get a little bit of relief on that. We're also seeing that nominal wage growth has started to slow. So the fear that the Fed might have that we're entering a wage price spiral where wages are rising so fast that we have to rise prices even further, and so on and so on. We still don't have much evidence of that. And I think if we're looking at the actions the Fed has already taken to tighten, those actions are still working their way through the system. So the biggest risk we have in terms of a recession is the Fed over tightening. And so what we want to do is not overreact to data as it comes in, but put that data into the wider perspective of what we already know, and then figure out, is there enough information there to alter our plans? I would say that I don't think there's enough in this report to say the Fed should alter its plans.
So she's saying 75.
Professor, mechanically,
is oil going up? I'm like offended. Dude, that was like the biggest build. And they confirmed it with the EIA, but man, that's wild. That's actually wild. Bull trap for retailers. Let's see. What's the odds looking? You guys are 72% red. Okay, the chat makes sense now. Chat makes sense. So make sure you like the video, but I see why they live the move right now. Again, the only thing I'm seeing is that, like, okay, this move's coming up. It does feel a little awkward considering some of the negativity and all the theories floating around. But the only thing that makes me like, okay, we haven't done anything is that, we're right here. We're still below. Until we get to like 382, we're still below the release level. So we'll find out. But momentum has been ticking up over the last like 20 minutes here. So we got tempted with another low, or like the opening level, bounced up, ripped through VWAP. Oil numbers came in, and then oil in the market have been ripping. It could be the dollar dropping off of that, which, again, you're watching the dollar now go negative 0.5%. The dollar is actually going down a ton. Holy crap. So that oil moving up, I think you're watching a more direct of a correlation. But that's definitely impacting it, because take a look. We didn't see this once last week where the dollar kind of starts to come back. So if the dollar gets to, 28.60-ish, like another 10 cents on the dollar, we start throwing back into next last week's level. So I think that's where some of the bullishness is coming from here, but we are still below. So give it some time to match up, but dollar is dropping, SPY's going up. NASDAQ is now green, 0.39. The euro has been getting whacked, even the yen, but they probably reversed a little bit off of that today. We'll see. The 3-month 10-year, well, that's not going to invert until, it depends on how low the 10-year goes, actually. So you see, so if the 10-year drops and then Powell is going to raise 75, I don't know if, you could probably do the math right now, because the 3-month is at 1 point, what's the 10-year at? The 3-month is at 1.517 right now. It's probably going to go to 2.2 or 2.5. And right now, it won't invert, though. Unless yields drop 0.5 basis point, pretty much TLT would have to get back to the same price as April 6th. And then you'll have your 3-month 10-year inversion. Now, where's April 6th? Right here. TLT goes back to 130, and Powell raises 75 in 2 weeks. The 3 and 10-month will invert. But pretty much the only way that inverts is TLT has to go back to 130. So if TLT goes up to 130 and then Powell raises in the next 2 weeks, you'll have an inverted 310. Oh, we got Kanara in the house. Good morning. Futures struggling with 3.810. We'll see. I mean, volume's picking up here too again. Out over the last couple of days, we've been doing about 40 to 50 million in volume. You already have 29 million here in the first hour and 30 minutes, roughly. It's my birthday and I passed Elon Ari, my man. It's always a joy seeing that name over the years, my friend. I know you even go deeper than Elon, baby. Horn! Happy birthday. Your birthday is on the day that we had 9.1% inflation. So hopefully you never forget it. You can be like, I was getting older when I was turning 20-something, and inflation was turning 20-something. I said, why? But the inflation because of Putin. He's a Putin. He put inflation up, so we gotta put him down. Yeah, I know. And grab a Hummer. Happy birthday, buddy. Happy birthday. I love it. We need to get you one of the Applebee's. We gotta get you a candle and an ice cream melt. Oh, it's good. It's good. Okay, sorry. Good morning, good afternoon. Read the line, quote. End of quote. What? Oil's still ripping. Let's see, Microsoftian. Could this be earnings? Didn't the first round come out this morning? Airlines were bad. The other day, Pepsi was good. Next week, let's see with banks, but I don't think this is earnings yet. And then again, we have 3 notes this morning. It was a Citi. Hold on, let me find it for you. I don't want to be wrong on this one. Please hold. Here it was Deutsche Bank, Citi, and Bernstein. They all said that earnings are all priced in so far. They said that pretty much that they don't expect earnings to have an effect this quarter. So although some people are saying, yeah, earnings estimates haven't been revised, Citi, Bernstein, and Deutsche Bank are saying, nah. So some people say it's earnings, some not. I think it's still too early. We're going to find out. I'm in the camp where I think earnings are going to, I think there will be some black swans or grim reapers kind of, hidden in there. But right now, I don't think there's any market effect from earnings as of today. I think this is just purely inflation and then oil and dollar, but mainly, again, inflation and now what it's doing to the yield curve and what it's doing to Fed futures. I will trust Burry over Deutsche Bank. Why, bro? It's not like Deutsche Bank gets rated every other year. It's what do you mean, man? It's Deutsche. Oh, this is a good one. I like this one. Look at this. Look at this picture. Chad sent this to me. Mr. Fortiani. Oh, this one's fire. No rate hikes needed until 2023. Inflation is transitory. We will achieve a soft landing. Oh, no. The quotes. These are like direct quotes, too. That's what's scary. That's the one I don't like. That's the part I do not like. These are direct quotes. That's a good one, though. That's a good one. Today's my birthday. I missed the happy birthday last year. I got to get it this year. Let's go, Mr. Gibson. Horn. Happy inflation birthday. It's crazy. At least we could celebrate a birthday and not rising inflation, shelter, and food costs in 70% of categories, all having more than 4% inflation, which the Fed said that they could probably achieve by the end of this year, which we've totally found out is false. But happy birthday, baby. Happy birthday. Post it on Twitter. I'll post it on my Instagram. God bless the call. Praying for all of you. Let's go, baby. Ooh, is that a new sticker? I've never seen that one. That's good, baby. I love it. Your age has increased 1 basis point. Happy birthday. Oh, it's Miss Perez's birthday too. Happy birthday, Miss Perez. Let's go get that long term. I got a job offer at Deutsche Bank. That's good. Any insight? No, that's great. If you got a job there, it depends what you're doing. Deutsche Bank has a interesting reputation, but I think it's a great place to work. I like working at banks. Does this reaction mean that the market doesn't care about data releases? No, it's just this is a confusing data release. Again, right when the data came out, your stock market dropped 1%, your dollar shot up about 0.75%, the yield curve inverted further by 1/10 of a basis point or 10 basis points, and then there was one more thing that happened. But point is, it's like there was a lot packed into this, and every economist was wrong. So we still have the Fed coming up here, but now this is like that 2-day effect where the market is kind of moving things around. 85. Where's the other one? Was it 372? Volume is high. Let's see if it breaks out from here. See the NASDAQ react. Went positive. I mean, we were down 1.5. That means it's already recovered 1.5, 1.6 so far. But again, the dollar dropped dramatically. This is the biggest dollar drop we've probably seen in 2 weeks. Again, you haven't watched the dollar take a 0.5% move down in a 30-minute hour period in a very, very long time. So dollar really got crushed on the second half of today, which has only been a 30, 45 minutes, but still pretty wild. The SPY 377. Yeah, I kind of want to do it, man. I think I'm going to go for one more. Okay, I grabbed another weekly. So 2 days. That's the second one. I'm down like 30 or 60 bucks on the first one, but I went closer to the money on this. Seems like we about to close green. Well, you guys are at 72%. Remember we were saying usually when it's like over 70, it kind of ends up there, but I mean, we'll find out. Bank of Canada top end policy rate is slightly above neutral now. Ay. So now they're the second one, Canada and I think New Zealand. Both of them have rates now that are higher than neutral, which again, for the think about that. It's one thing to reach neutral, but it's another thing to go above your neutral rate based on what your Fed has decided. So what's going on? A lot of things. Amazon's in the green now. The previous CPI, I don't know. We moved down on the last CPI, but I haven't checked the ECMI yet. Let me get that for you right now, and then we can find out if you want to do a comparison. This time around to last June. So last June, 30 minutes in, we were down 1%. This time we were up 1/4. So actually, compared to last time, we are positive. Yeah, we're actually green right now. Very, very odd. If you look at it comparatively, this is definitely not as bad as a reaction as last time. Last time we got absolutely wrecked. Remember the confusion? It was similar to this. Wait, what's that? So here's where we are right now. Again, and this is about 15 minutes delayed, but this is within the first hour, or we're approaching the second hour. So you're on the top end right now. Last time we were down about 1%, or you were down almost 1.5%. So you're actually following a positive response, believe it or not. We front ran it well, we did that on the last meeting too. Should be drilling down new lows we did last time. This time we rallying. TSM news. Amazon's coming up. TSM's up 3. TSM popping though here at the top. Good call out. I don't know what the news is, but it's moving. Revenue of Taiwan's major Apple suppliers up 30% year over year in June. That came out at 852. So that was the latest update. It could be old news you're reacting to, but apparently there's something about them and Apple. SEC approves rules to reverse proxy advisor requirements. Don't we get another? I mean, CPI days are filled with volatility. So I wouldn't be surprised. Unity selling off. Unity's down 20 right now. Jeez. Unity, big volume, and it's moving down. I forgot. I think there was news with them in the morning. Let's check Intel. They're up. They're about to go green again. Qualcomm was on fire all day today. All the chip makers are up 3% right now. You're getting a big, big run on chip makers. Twitter, remember there was the Hindenburg bullishness on Twitter. Tesla's still up another 2% now, 2.7. They were down 4 or 5% earlier. And again, NASDAQ's the only one green. SPY a quarter, Dow down 0.5. NVIDIA's up around 3% right now, or 1.5. Unity still on the low. SPY is trying to make another high. Dollar has hit a low 5 minutes ago, but it's kind of chilling out, so we'll see where this takes us. I don't get how we are going up. I mean, so far, this has been a bullish CPI reaction, which is odd. But again, I think the dollar move is what's having a big effect here. I would not underestimate that just because we haven't watched the dollar move in the last 2 weeks. I think that's pretty much it. When we're giving it more time here, and then oil went up too, which could impact the dollar as well. Like oil's ripping. I knew oil was in an interesting spot, but man, I did not think a 3 million barrel build was going to shoot it down when people were reacting negative to that preliminary data on it yesterday. No, yeah, bad news was good for oil, and good was bad. So, but that's very, very weird. SPY breaking out now, 380. S&P is now green. That's it. Cue the rage. SPY has hit a high now, and again, looking at the impact so far in the second hour, this is a average positive reaction. Puts now. I took it a little bit ago. Again, the last one, we grabbed one in the morning set. I grabbed these ones already dropped $20 there, but it's already looking a little bit dire situation now. The market closes green. I'm going to retire, and you should do too. I guess I'm just having more fun. I think it's the best way to put it. I ain't going to retire just yet. That's it. The only time I'd retire is to take a nap because I am deathly ill. Other than that, I think we good to go. It's just going to be, I mean, it's good. I'm having fun. I'm glad I want to throw some plays out there anyways. You know, it's, again, been a little cautious if you think about the last couple months. So, I mean, on some of these days and leading into earnings, I'm having fun. I'm willing to throw out these plays if they're not going to work. You know, we saw a lot of bullshit. Just remember what happened. Like, again, I was down 50, 70% on Teslas last week. Then they end up flipping. You know, we're in the middle of what's it called? You know, you're getting just a lot of volatile moves. So I think there's going to be some good ones, some bad ones. There is stuff that's confusing, but I mean, the story is continuing. I mean, we're learning about the Fed right now. We're learning about the economic situation. The yield curve is inverted. I mean, quite frankly, if you really wanted to right now, I could tell you, like right off the bat, don't make any plays until the yield curve renormalizes, and that will be your guaranteed money play. That's kind of how I've been viewing it too. Like we don't have to make, if we really don't want to, you don't have to make one single trade up until the yield curve reinverts if you're willing to wait 6 to 12 months. If you don't like the bullshit and you don't like the volatility, wait 6 to 12 months. Wait till the yield curve comes back. Wait till Powell pivots, and you'll have a home run play waiting for you guaranteed. That's kind of how I'm looking at it. Oh, 380. You can go to trader hibernation if you'd like, because that will be a catalyst. Again, that's what I'm saying. That's today. It's very, very simple. Again, the yield curve and how it's moving. That's it. If you want to wait for this move, that will be the big money play. I could almost guarantee it at this point, but it's going to take 6 to 12 months. Maybe it happens faster. I mean, today's event moved this by triple what we've seen, so you never know. But if you really are getting frustrated, though, and all of that, there is a broader play that just, it has to develop, and that's why I'm like, at the end of the day, we're getting information, and this story is moving along the way. Again, we have 4 or 5 more months till the end of the year. You're watching inflation move in a direction. You're watching rates. You're watching bond markets, so it's like there is something there. There is something there. The yield curve is currently inverted, yes. When the yield curve uninverts, what ticker would the play be on? You could play anything. I mean, you'll see what I'll do when it happens. I don't think there's point in talking about it now until it does. But it's an easy play. I would sell everything in short. Like it's not even. I wouldn't even. But I had an idea too. But we'll see. It's just something that you'll watch it happen. But it's just something that it needs to develop to that point. But once that does happen, that will be the Fed pivoting, and it would hold a lot of implications, and people would get very, very worried. You're not confident? Well, I guess if I don't sound confident to you, then that's unfortunate. But lack of confidence could be good at times. I mean, I do doubt the theory a little bit, but I am fairly confident that there will be some level of signal created through this. So if Jay Powell, he doesn't even have to pivot back to quantitative easing, but simply if we go from inverted yield curve to uninverted and Powell goes to cutting rates, that's it. It's very, very straightforward. The Fed wouldn't cut rates unless there was a problem. And that will be when our problem hits. That will be when recession arrives. That's when we start dealing with what we really got to. You think everyone's green because we're covering? I think it's the dollar dropping, and then people are reacting to a potential of the Fed pivoting a little bit, or again the yield curve and what that's insinuating. But clearly, to me, it's the dollar dropping. We haven't watched the dollar drop this rate in 2 weeks. So take a look at the 1 minute dollar chart. When was the last time you watched the dollar go down? Almost 50 cents, or I guess in this case, 25 cents, when it's been staying it's gone up 25 cents, but it hasn't dropped 20. That's 2790 to 270, kind of 2 Thursdays ago. And look at what happened. Those 2 Thursdays ago, we rallied big, actually. So last time we saw dollar anywhere close to this scale of decline in the last 2 weeks, look at what the market took us back to 390 from 373. So you witnessed this 2 weeks ago. Dollar made a weird downside move. Things chilled out for a little bit, and we moved up, and I think it does kind of correlate with some data. Or I guess a week ago was the minutes. If you think about it, people have nowhere else to put their money except to buy the dips. Well, cash. I mean, a lot of people are holding cash still, but yeah, people. I mean, that's the problem with what we're facing. But I don't think people are in the camp yet of like, I don't think you're forced to buy the dip, but I mean, it's clear your opportunities of safe haven are definitely dwindling more or less, or it's just difficult. That's it. Inflation is killing inflation already killed cash. That's the paradox with it. It's like we said, like if you want to buy food and gasoline, your dollar is weaker. But if you want to buy a fucking growth stock, your dollar is 50% stronger. I promise you. I mean, go look around the stock market. Again, if you want to buy rent, if you need to rent a house or buy a house, that's not the case. But some areas you're watching that dollar increase. I mean, if you want to go travel to Europe, your dollar's stronger. If you want to go buy goods from overseas right now that you don't need, your dollar is stronger. But your oil, your gasoline, your necessary inputs, those are the ones that are up. So that's why, again, this is the insidious nature of inflation, more or less. So we're hanging out here at the top. Gold is starting to move. United Steel on the high. Chips have been very good all day. Excuse me. AMC, GME, still up 0.93. They're loving it today. But where do I see Amazon? Well, Amazon is probably going to react to some of the earnings early on. Remember, they report right after Netflix, so I don't really have a technical with it. I think, again, a lot of the market, you could see kind of if you just go pull out any stocks 14-day chart, and you could just see that we haven't really broken the 14-day low nor gone above from about 2 weeks ago. So kind of keeping this in mind just until the earnings come in. I don't think anything outside of those, unless it moves outside, I just don't see it as meaningful. Oil is less than 100 right now, and oil somehow started rocketing after the oil build. Oil's up 1.75, but still below 100. And then 380, that is still 380, then back to 378. 378's the stubborn level. Rally time if everyone thinks inflation starts coming down. A couple people brought it up, but we're going to find, let's see what Powell does. And right now we're debating 75 or 100. Some people think that Powell doesn't want to go too much, but we'll find out. But it's definitely in the cards now. Again, now that we've had 3 surprises, it should be expected. But just the problem is, every estimate has really been off over the last after the last quarter. Pretty much everything has been very, very bad. So we'll find out. But it's definitely that will be in the debate or the discussion and narrative in the next week or two as we get closer to Powell. We're ripping, we're lessening our supply and long-term driving prices up. I mean, again, there's been a lot of negative supply stuff, but that oil was coming down a little bit leading into that data because we already knew there was a build, but they're waiting for the EIA to confirm it. So I can't tell you why it went up today. Again, I think oil is just wonky and what we're dealing with it. But that move today on such a big build, especially from an EIA report, I'm pretty surprised that it moved like that. But it helped bring the dollar down and SPY moved up with it. But it was definitely a weird move. Elon tweet on Hunter. Someone tag me on it on Twitter, or I'll find it. I think I actually know. Yeah, my Twitter finds Elon real quick now. It used to not. Damn, Elon. Damn, Elon coming he's coming for it, bro. Here's Elon's latest tweet. You can see it on the screen. Wow. That's crazy. He said A+ for cinematography. Okay, Elon. Okay, Elon. You need to read the past headline on the EIA report and look at the actual report. What did it say? Come on. Right, it's fine. He could talk to his people. Trend flip. Let me see. EIA says natural gas piles dropped last week. EIA to delay some of this week's. No, that was the old one. So they say EIA report, gasoline was 5.8 million barrels. Estimate was -1 million. Distillates was 2.6 million. Estimate was 1.7. Let's see. I don't have like the text of it. I just have the key headlines. But if you could break it down for me, that'd be nice. Otherwise, I'll keep looking for it. They said consumption to grow 3% in 2022. Further increasing the nearly 100 barrel a day deficit. That's what they said. Do the headlines even matter anymore? Depends what kind of headline. And then they said oil production hitting record high in 2023. So they pretty much said they expect demand to go up. Is that why you're saying it's going up? I just know people were talking about it the last couple of days with the builds we've been getting. So it's been very, very wild. So total stocks 11.2. Total stocks excluding SPR 6.5. I don't know if it's coming out how you expected it to, but I'm not seeing what you're seeing on there. UNG new high. Again, UNG was part of the data too. Nord Stream comes on 10 days from Sunday, I think. Or so July 22nd is the day. Or from yesterday. Or it's like July 22nd or July 20th. So in between Wednesday and Thursday of next week. Yeah, UNG starting to pop off a little bit. Russia, Gazprom cannot guarantee the operation of Nord Stream in Germany. Again, if by June 22nd, July 22nd, if it doesn't come in, it's clapped. That's what sucks. That's what sucks for the EWG plays. They literally scammed us. Then let's check the UNGs. Whoa. We have the 23s, right? Damn, our UNG plays are up. They're hitting a new high then. Please hold. Woo. Yeah, it expects demand to rise for nat gas plus supplies fall. Yeah, I think I saw that. They said they're expecting demand and consumption to go up, but I think I don't know. I think it's just overall confusing because some of them, like I'm saying, the just broader estimates of what, how big those crude inventories went up, it's just very big. There you go. Oil's dropping though, finally. Yeah, UNG, we're at a high. I think it's at $4. Yeah, these are the 23s, 380. It's at 380 to 400. We bought those at $1.50. Josh, you got some egg bites? Oh, I miss them, man. I miss them. I need some of those. Chilean peso, yeah, copper, and they're about to have another rate hike. We'll see. Yeah, Gazprom said not sure to reactivate. So, honestly, if you want to go for that play, that would be the black swan. It would be going after EWG, or you could even go for VGK. Again, I'm still holding one of the VGKs, but the EWGs, that's the one they're scamming on. Let me see the VGKs again. VGK I like, but even then the spreads on those are very, very wide today. VGK still juiced. EWG puts, they suck. They're not. Again, that's the move. We can go after individual plays. Like if you really want, just play Uniper and then play what's it called? SAP. Like you could go for the individual names, but that's about it. And then that would be to play any of the downside related to if Gazprom or if Nord Stream doesn't reopen. Yeah, Unity's still falling. They're down like 20%, hitting another low. There's the SPY kind of coming back down to the 380, or actually we're below 380, 379. So VWAP has been climbing on all of that. Again, we are about 5 minutes shy of the second hour, and you have 35 million. The last 2 days have been about 40, 50 million days. Let's see. So you got SPY. Yeah, I got SPY puts, Tesla puts, Microsoft calls, and Netflix puts today. So I got 3 puts, 1 call. Sounds like a... Just don't Google that. 3 puts, 1 call. Sounds like a dirty website, honestly. I don't like it. The yuan, I'm assuming it's probably strengthened or weakened with the dollar, or earlier on until the dollar flipped. The yuan is strengthened now. Again, everything is strengthening after it was weakening just because, again, this was a massive dollar move. I still have the EWZ. That one got clapped, but I still generally like that idea if we do watch commodities and oil come back. But, I mean, pretty much, I think the oil, when we got the first EWZ, this oil fiasco did not help us on the commodity index. So the total crude inventories increased 2.4 million, but total petroleum dropped 700,000. The headline number does not include the 5.8 million barrel release. So I see what you're saying. You're saying petroleum staying up, and then now the number's based on SPR. So pretty much without SPR, it's not really a build. Then it might have probably hit the estimates. I feel you on that now. Delta earnings, I think they forecasted like a 12% loss or like 12% like margin pressure or something. Dollar's rallying back a little bit, but dude, dollar is still down heavy. But we'll find out. I mean, ironically enough, the correlation with dollar and oil, I mean, it's spot on today. So let's find out. I'd rather sit on cash than short. I feel you. It costs money to short. That's the thing. And it's not really, again, the premiums are still kind of wonky. Like I said, I'm keeping in mind earnings. Like, although I did 2 weeklies today, I am keeping in mind just earnings in general. The suspense is driving me crazy. Shout out the dollar. Total petroleum should be headline numbers since they're big fluctuations. Yeah, and in the petroleum, I mean, it's related to the like the final products and some of the gas stuff. Expect some earnings. I think a good amount will beat, but I think we're gonna find somebody has to guide down big, and that's kind of just what I'm keeping my eyes out for. But other than that, I think it's gonna play a lot like last earnings, where we're gonna start off one way, then you're gonna get freaked out by one thing, and then a majority of everything else will end up not being as scary, and then that's it. Summers limits on what could be done quickly on inflation. Larry Summers, again, he had a report a couple days ago or a couple weeks ago. I'm sure you've heard about former Treasury Larry Summers. He just made a statement right now. He's been talking to Biden and Yellen, so he kind of has some pull. LimeWire is back. I've heard. Rhythm, RYTM, Biotech, that one moved pretty crazy yesterday too. And then Apple, everything's kind of chilled back out. We're all negative again. So everything's red across the board. We started down 1.5, then we bounced right back up. We were green by like a third on the NASDAQ, and now we're red a quarter again. And then SPY went green for a little bit. Now it's down 0.5%. And Dow has kind of stayed the same price all the way through. Yes, euro close. So 379.50 or 80. I think Europe was actually good too. Let's take a look. And again, compared to many CPIs here, or the last CPI, we're having a bullish reaction. So Europe was down about 0.73 to 1%. They didn't move too much. China did good. So we got an interesting breakdown. We'll see here, though. Euro close coming in hot. Get ready for a pivot. It's either going to pivot us up or we're going to start coming down here. And then we'll see and do the VWAP dance again. Yeah, this is a very positive response. So, ironically enough, let me show you. So here's the update. It is about 15 minutes behind. So I'll get you guys updates, but comparing this CPI to the last CPI where we had a big surprise, it's noticeably different. So within like about an hour and a half last month at CPI, you were down about 1.5%. And right now we are up just under 0.5% since the report came out. So pretty interesting. Keep that in mind. Or I think this is going off the open, not necessarily the. It's not counting this. It's just counting the opening bell. So factor that into. Of the odds for 100 increase. They did throughout the day. I haven't checked here in like an hour. So let's take a gander. They've came down, but they have increased. So pretty much we started off this week with a 0% chance of 100 basis points. And then right now you're pricing in about 44%. So it's 50-50 right now, give or take. Market's like firmly pricing in 75, but all that's happened today is people are talking about the odds of 100 basis points. And again, you started off the day with that probability being 10%. Now it's at 40. This week there was 0% chance of it, but now there is a 40% chance. And then further inversion on the yield curve. That's another big part of the story today. 100 won't happen. It's a dumb narrative. Although I feel you, the problem is as long as the Fed futures price that shit in, we learned very quickly last month that Powell has, like, what is Powell going to do? Powell is not thinking for himself at this moment. So if those Fed futures price in a certainty, that's it. It's, put the nail in the coffin at that point. Yeah, he only needed 24-hour notice, man. That's crazy. Like, what? You can't even do that in real estate without it being a crime. Like, what? This guy's crazy. Yeah, it'd be insane, but pretty much I wouldn't write it off and I wouldn't bet on it. You see what I'm saying? That's it. Simple as that. I wouldn't say 100 is off the table, but I wouldn't necessarily I wouldn't be buying the Fed futures at 100. If you want to try to go for money, but I wouldn't do that. So it's like I give it a couple days. We at least have a week and a half, 10 trading days until the next Fed meeting. So a lot could change leading up into that. And then I would also be watching again the dollar and yield curve, but Euro close 4 minutes in. We're starting to make a little bit of a move down. So let's see. Is the market ignoring the Fed funds rate? Not right now. The market is the Fed funds rate. So when they say the market is pricing something in, it's literally the Fed funds rate. So that's what I'm saying is I don't think Powell has the backbone to ignore what the market is doing. So whenever one comes up here, how many days? 2 weeks? You have 2 weeks and 2 hours. Whichever number is hitting 60%, Powell's going to do it, no doubt in my mind. Just off of what he did last time. So if in the next 2 weeks this narrative takes hold of 100 basis points, it's going to happen. But right now, it's 50-50, Habibi. 50-50, you know? Very good odds. 50-50. Anything can happen. Yallah. Yeah, market is pricing in rate cuts right now for Q3, or for 2023, Q1 2023, but it's not pricing in a full quarter yet. So the odds of a rate hike are coming up, and that's where you're going to find people try to, get bullish on that, but it's not even 0.25%. So until you get 0.25% priced in, it means nothing. But it is moving up. That's why I'm telling you, watch the yield curve, because chances are, if rate cut odds start to increase, what's going to happen? The 10-year is going to shoot up, and then your yield curve is going to get further inverted. Like I said, if TLT goes back up, if TLT goes to 130 and the Fed futures stay the same, or Powell raises even by 75, that's it. Then that is a 3-month, 10-year inversion. Every single curve across the line is going to be inverted at that point. So we'll see, but just give it 2 weeks now. It's really up on how these things move, how the Fed funds move. But people are talking about rate cuts. It's on the table, but it's not necessarily like a big, number that's like, yo, that's going to happen now. Boom. You'll watch that get front ran by the bonds in TLT. Up good, down good, choose. Yallah. Amen. Amen. Funeral stocks, CSV and SCI are holding. Are the claims still high? That was the trend in 2021. That's why they did so good. Yeah, PPI comes in tomorrow. That can't affect it for sure. I don't think we're going to have any other big data points like that. This is probably going to be the biggest one. So we'll see. And then anything that can move dollar and bonds. Central banks keep talking about front loading, implying lower hikes in the future. That or even cutting back. But the thing what's his name? Was it Barkin yesterday? He discussed it. Like he's saying, we don't want to make the mistake of the 70s and react so aggressively to every data point where the Fed gets thrown into this period of raising, cutting, raising, cutting, raising, cutting. But again, that is the expected outcome, sadly, though. I can't even say it, or necessarily. You just broke my English language right there with that one. I've in the cult. How high rates go till the government debt becomes unserviceable. Unfortunately, the Fed does not give a shit about that. I think they even said that. All the Fed cares about is unemployment. Unemployment and inflation as far as making that decision. So when they're making that decision to raise rates by 75 basis point, they are not looking at the government debt. They're literally just saying, well, employment has enough room, so we could just do this, and then that's it. So I feel you on that assessment, but I'm here to tell you the Fed is not looking at that. They really do not care. QT. Well, we'll see. I think tomorrow, 2 days, July 15th, we should watch the balance sheet get reduced. That's the next bond rollover. Yeah, Fed does not care about the Fed. That's just not their concern. Again, it's just not their mandate, not their job. They're looking at PCE, they're looking at PPI, they're looking at employment rate, but they are not. Last thing they're looking at is the government debt. Collecting. Well, here, hold on, chat. Twitch chat. It might be necessary. Margin with these prices, say 20% if you could cover. Huh? You're getting charged 20% margin? It depends on what name it is. I think that's the big effect. Chicago report. Let's see. Go. There you go. We'll give you one new Twitch mod to hopefully help with everything. Welcome to the gang, Charlie. Welcome to the gang. I think you earned it. At least for the Twitch, you can hold it down. I know you guys got like serious gambling things going on in there. So God bless. I mean, use margin now. Oh, if you'd like to. So hopefully you're on stream. So somebody's asking too. Again, if you're not familiar with the stream alerts, be very, very careful with any of the plays. Here, I'll hold on for a second. Because some people are having trouble reading them. If you're not familiar, again, I would be very careful with that if you don't know. But usually it's ticker. That's the 4 letters or 2 letters. Then I go with the date. And then if you see C, that's call. P is for put. The amount of plus or minus is whether I'm short or buying. That's how you get it. And then the price at is the price that I'm paying for it. So like on the last one for Microsoft, that was an August 295 call, 10 of them at 64 cents. So that is kind of how you read it. Again, you got to be careful with them. A lot of them, even on the last like SPY one, I told you guys, I even put it on the stream alerts. I went like 0 for 5 on the last SPY weekly, so be careful. But plus or minus is the quantity. The ticker should stand out. C is call, P is put, and then plus 10, plus 1, minus 1, that's the quantity, and then the at is the price that I paid for it. But like we said, just be very, very careful with them. Again, all trades are done on stream, so if you have it, let me know on stream here too, and we will be able to give you a breakdown of them. Yeah, and be careful too, because if you think you're the only one with the idea of trying to like go after the plays, that one got debunked last year as everybody just circle jerks each other. So be very, very careful. And yeah, and if I say August, and if I don't give an exact date, I'm talking about the middle month. Exactly. Great addition to that. So if I say August, I'm talking about middle month. Unless I say August 5th, August 12th, or August 20th, I'm always referring to the middle month. Again, even when I say it out loud here. So it's like if I say I'm grabbing a November put, I'm getting the middle November contract. So thankfully, there's only one here. But if I said I'm going with July puts, I would be the middle month would actually be right here. So on any of the July contracts, I will give this specific date. I know, where are we? 378. I've always wondered. Monthly, not weekly. The second week is what it's considered. The mid-month contract. The butterfly, I do not think I'm up on it. It's always third. Is it third week? Third week. Could you see Black Swan from bank earnings? Not really. I don't think so. I think bank stocks, I mean, we already had the stress test, and they're going to announce a ton of buybacks. I mean, it could have a big effect, but I don't think it's going to be the Black Swan. I think Black Swan is going to come through just like a big company really guiding lower. That's it, and kind of changing the trajectory. But I think the banks are just kind of all struggling, and they've had that, and it's just, I don't know if earnings is going to surprise them unless something comes out of nowhere. You know what I'm saying? Like, unless you really get a what's it called? Unless it's like just they super guide down. Or it's like, yeah, like mortgage activity just grinded to a halt. So who worries about national debt if the Fed doesn't? The government. Pretty much that's up to Congress, the House, Senate, the president. That's who is responsible for government debt. Or the Treasury. I would say they have that responsibility, but not the Fed. The Twitch link. Oh, yes, we have Twitch. If you like Twitch, if it's laggy. And then odds. Some people are getting more bullish on the poll, but we're still holding the same odds here. Again, UNGs, those plays have been fire since we got them. They're up over 100. Let's check these. Oh, the puts came back. I actually thought these were going to be down. Okay. So the 370s, I bought them at $1.20. These ones I bought at $1.50. So that's actually kind of interesting. I thought, dude, it's been 2 hours. I thought those are going to decay to shit. Bodine. Oh, we got a hype train too. That's it. Oh, yeah. Chart, you are, bro, 80 subs, bro. Gifted. Horna. Y'all better say thank you to I haven't hit the Twitch on. I hit the YouTube horn too. This is hype. I love you, baby. I thought you said stream alerts were free. No. Long-term alerts are free. And again, anything that goes out on the stream alerts, it goes out on stream. So any play, like again, the Microsoft play I'm talking about, you watched it actually before the stream alerts. So that's why we say it's freemium. Again, stream alerts is for people who can't be here all the time. Again, if any news happens, any breaking news happens, stocks, data, there's a big play, who knows what it is, you'll get alerted. But again, if it doesn't get alerted on stream, it's not going on the stream alerts. So technically, you could either pay the premium or you could pay with your time. And that's just how it works. Yeah, Charlie has gifted 80, bro. 80. 80 of them, bro. Charlie. I don't think Charlie gets to pick who gets it, but I don't know. If you're getting he's like, Charlie never picks me. That's crazy. Yeah, or if you want to support the stream, you could get the alert. Amen. 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 There's a lot of people who do that too, which very, very humbling. And hopefully we make sure you guys get the best of everything. Servicing debt means paying treasury bond payments. Yes. Charlie is the Chad father. He's taken the Twitch and fathered them. He showed them the way of the Twitch chat. He showed them that nothing is too serious, that we play, understanding options expire, and that we are here together as one, and that all deeper arguments should be on a different platform. He fathered them. He gave them memberships. He said, you will become like me. He gave them their badges. He showed them what it means to uphold the badge of honor. He taught them about the honor. He taught them about the armor in general. It's amazing how far they've come. Now he has 80 children. Now he is the father to 80. He could make his own little army. It's beautiful how it's developed. Oh, oh, 71 for Midwest though too, man. Don't sleep on Midwest. Let's go. Now you got one, Toy Soldier. Look at that. Chad looking out for you. Yeah, Chad looking out for you. The Book of Chad, such wondrous stories. Amen. Y'all competing out here. Even Dan is too. Man, God bless you guys. Thank you for supporting and holding it down, especially in a 9.1% inflationary environment. You guys are the real heroes. That's all. Y'all have provided memberships in a world where inflation is 9.1. That's amazing. That is absolutely amazing. Hey, Chad. Horn. Let's go. Level 5. That's it. We hit the top. Just like the Fed selling out. Been here way longer than 30. Oh, yeah. It says 24 months, baby. You good. Thank you for everything. Plenty of updates. Plenty of downs along the way. The knowledge is forever. Hey, man. I can't wait till we even make it till the end of the year. This year is going to create some monsters. This year has created a lot of bitterness, a lot of monsters, a lot of learning, so many things. So hopefully we get clarity by the end of the year. Amen, amen, amen. Your new beloved advisor. Well, God bless you, man. Get ready to, again, we're about to enter one of the fun times here of the stream, and that's earnings season. Earnings season mixed with the Fed. So next few weeks are going to be good, but, I mean, if you could find a way to have fun in the stock market during this environment, just double good on you, man. Double good on you. Some reason it showed 13. Yeah, 24, baby. 24. Kobe. Tesla's coming up. Apple, everything. So we hit VWAP and started to bounce. We kind of started to sell from Euro close. 11:30 was right here. Came down a little bit. It's only been 20 minutes. Again, volume is a little bit higher than any time this year. So we're going to see what happens. Feel like this year has been the opening beach scene from Saving Private Ryan, just months long. Yeah, 100%. I feel it's just right when the year, that's it. Just it started and just bah, 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 bah. It was D-Day, man. Crazy. It's crazy. So 379.34. The CPI has came out 9.1. Again, we could do the breakdown again if you'd like. I have so many charts that we went over already today. Again, the different factors and all of that. Again, here's a little quick CPI recap if you guys want it. Maybe I should probably stream alert this because I know some people. Excel. I'll watch later. It's good. It's good. There's a lot. There is a lot of things to go over. So let me get all of my pictures up. This is picture 1. Actually, no, I should start over because I should start from the back. So this is one. Here, you'll see them all. So we're going to start here. Again, CPI came in 9.1. The number one most surprising thing about CPI, all 47 economists, people expected it to come lower. Nobody expected it to come in higher. And that was the first part about it. Core dropped a little bit, but headline hit 9.1. But now the thing that got people is, this is what we were talking about yesterday, it was the little factors. So it was the stuff that shows more stickier inflation, and that's why gasoline had the biggest impact since March. That is what went up. Autos went down, but that's where a lot of people are talking about. Even though gas was high, it was still an overall pretty high CPI. But that's the first part. The second one now, this is probably the biggest set of data that we got from it. That, again, it's actually been a bullish reaction. So maybe I should throw in this picture here too. Please hold. But if you want to see the overall reaction, here it is. This one might piss some of you off now. This is a above average response since it came out. We're right here at like almost 1%. And last CPI, we were down 1.5. So keep that one in mind. But the thing about this, where even though core came down and people were worried about it, is that 75% of the categories on today's CPI were up over 4%, which is highlighting that, hey, this is a new trend breaking out if you don't realize it. This has been happening since the beginning of the year, a little bit halfway through there, but the big problem that occurred, and this is where some people are worried about it, is that 75% of categories went up above 4%. And now, to factor this in, what are people talking about? Another big thing that happened right when the CPI got released, the yield curve, it doubled up pretty much how much that it was inverted. And now people are talking about the Fed pivoting, as well as now the potential of a 100 basis point rate hike, which is now 44% following the CPI release when it was originally at 10%. So that's one of the factors here. Again, here's some of the data, but the fact is this was broader based inflation. It's 9.1, but 75% of the categories were up above 4%, which is the target rate the Fed said that they would be at around the end of the year, which some people now are calling into doubt. So now this is what we brought up yesterday, shelter costs. So even though core CPI calmed down a little bit, when you start looking at shelter cost and everything else, this is the services more or less, we're watching this go up. I showed you this chart last month, and this chart was a big part of the problem. But again, rent is going up. Core services, even outside of rent, still found a way to increase. So even though we saw a slight decline in some food areas, you're watching services go up and everything else shoot up across the board. And then here are the two factors. This is what's went up. Again, food actually saw a bigger increase at schools. So price of food at schools in certain operations. This one was very surprising. I'll show you on the next chart kind of how it played out. But other than that, it was all gasoline. There was where was it? It was like transportation maintenance. This one had like a 1% weighting, but that went up 2% there. And then the only things that went down this month was window coverings and citrus fruits. And then TVs dropped. Airline fare went down, but you could see airlines were going up almost 20% every month up until now. So they finally cooled off. That's why it's like anything that declined here, it was coming off of a big increase. So pretty wild to think about. And then cars dropped too, car prices, but car prices have dropped 7 of the last 12 CPIs. And then finally, like I'm saying, here's just the chart breakdown. And this one was the biggest increase. Surprisingly, again, like rent, where's rent? No, this is just on the food category. I don't have the rent one. But food was food moderated, but some categories went crazy. But again, basic knowledge to take from this is that inflation all across the board has increased. Service inflation has gone up just as much as goods inflation, although gasoline had an outsized effect. Even if you excluded gasoline, we still have broader inflation pressures from food at schools all the way down to rent, shelter, gasoline, oil, all of that. Or oil, like motor oil and vehicle maintenance actually went up in price. So that's all of it. That's the quick rundown. Again, there's a lot, but like we've been talking about, you got to watch the yield curve. That was a big surpriser. And now this narrative of 100 basis points, those are really the big key takeaways from here. And now we have about a 2-week window until the next Fed. And now people are going to try to forecast how the Fed is going to respond. Yeah, shelter is not peak. Shelter just keeps going up too much. Honestly, that's the part that kind of sucks. Because now it's like, remember, shelter didn't move for like half the year. So, like, you got to really think about that. Like, for 2021, most of rental it didn't move up. So where's the damn chart? Where's our pretty picture? Here. Like, you see this? Like, look at rent of shelter, bro, up until... when? August 2021, maybe end of the year, it didn't even break out from the highs of 2016. 2016. Do you see what I'm saying? So it's like the rental costs, they didn't, the rental costs just did not move up until recently. And now, even though some of the other factors, you're like, okay, well, gasoline is up a lot. It's like, dude, now rent is having a run like it's gas. So that's a big part there of the problem. I don't know if we'll be able to see it on here because I want to show you the month-over-month increases. And again, this is like some of the big problems you got to realize. That's why when we read these charts and we're looking at what went up and what went down, you want to look at the history. Like, look at fuel oil was like one of the decliners at 1%, but the last 4 months, look at how much it went up, right? Again, same thing here with airline fares. Airline fares from February went up 5%, 10%, 18%, then 12%, and then now it's finally going down one. So you got to keep that in mind. But rental prices, I don't even know if they're in the top. I think too much energy and food is in the way. Sporting events admission went up 2.9. Yeah, rent's not even on here, surprisingly. Just because, again, there's just so many categories of the CPI. Hopefully you just have to go down on this list, but I don't have any further data. Now there are higher rates, less people are able to buy homes, more pressure on people needing to rent. Yeah, it's wild though. It's just everything is still because I do agree with that concept though. I do think that could be factoring into it, but just don't forget the way the CPI factors rent is like it's batshit crazy. So there's also those factors as well too. But I really couldn't explain why the rental one is. I think it could be some of the pandemic stuff ending and now, evictions and other stuff where it's like you don't have pseudo rent control. But other than that, it's odd that all of a sudden, rent is on just a tear. And I say it's odd because we witnessed the rent go up a year ago, but now we're just feeling it a little different. Thoughts on car repos doubling? I think it's bad. I think cars will get bad once they start hitting the lot. Like once people really give up on the cars and once they, it's worrying. You want to look at it and it's like one of the next industries people are talking about, but it's not necessarily like you need that supply to hit the dealership lots. We need to see you need to see the amount of cars go up. I have been seeing it right now, the amount of luxury cars popping up for sale. The supply is definitely increasing. But it's you need to watch the amount of Honda Civics go up. So here, let me show you. You guys want me to show you how to track autos? This is not sophisticated, but I think you'll like it. This is what you got to be looking for. Go to cargurus.com and enter in Honda Civic, okay? And then do mileage nationwide, and then I think cars what's the lowest? They can't sell cars on a lot by 10 years, right? Isn't that the max? So I think you're 2012 minimum. I don't think they sell cars on the lot older than 10 years. Right? Now, where's the total number? Right here is what I want you to look at. Amount of listings. Okay? Yeah, I think you can't. Yeah, because they don't let you finance cars longer than 10 years. Something like that. So look at this number, and now go across the types of cars, right? I do this for luxury cars because, again, we be flipping a couple here and there, but it's good to go. That's fine. You could have my zip code. It's San Diego. That's downtown San Diego. Love to see y'all there. God bless y'all. Y'all can pull up on me. Just be nice and give me a hug, and don't give me COVID. Last time I met a Chad, I got COVID. I'm just putting two and two together, okay? But still, it's all love. But look at the amount of listings. That's 13,000, okay? 13,000. So now let's go to, I'll show you. This one's weird. I'm going to show you Lamborghinis next. But right now compared to 2019, I know there's probably triple the amount of Lambo listings. So there's 251 Lambo listings. See, these are already coming down in price. That's crazy. A little bit. But just go through any cars, and if you really want to get an idea, just go through here. Just go through different listings of different cars, and based on the amount that's available for sale, that's what I'm using to determine the health of the car market. Just because, that's what I'm saying. You need to watch those numbers come up because those numbers are really, really low. If you really, again, 13,000 Honda Civics from 2010 to 2022, I feel like at one point there was you could, at 2019, there'd be 40,000, 50,000. You see what I'm saying? So that's what we want to see go up. Again, if you start watching Ferraris and Rolls Royces start to have more than 1,000 listings nationwide, that means the people in crypto and the people with money are dumping. So, but that, I think once inventory goes up, then we could really talk about the repos and everything else. My stepmom works for Toyota in marketing. There's some insane metrics she looks at. People who are risky to finance are those who are most likely to be repeat buyers. They'll buy a car they can't afford, then 60% of the time they'll lease and buy another. She's worried about repos from them. Yeah, definitely. Again, anybody is we've seen the behavior. You know what I'm saying? Consumer behavior, how people were acting with hot money. Again, a lot of people. You were locked in the house. You got a stimulus check. Then houses got too expensive. Some people settled for a car. Some people are like, fuck it. If I'm going to stay at home, if I'm going to live here, I'm going to go through this. I'm going to just go get me a car, call it a day. But I'm talking about the point from buying the car to hitting the lot, where it's they buy the car and they're like, okay, whether they can't afford it or not, it repos. But from the time they can't pay the payment to the time it becomes available supply. Once it becomes available supply, that's when we have a problem. So right now, I think it's still kind of early. Although the numbers are coming up, it's we have to, and again, it could happen overnight. You never know. You might wake up next month or wake up one day and boom, a bunch of cars are just available for sale. That's what I'm talking about. And that's where so even though there's a worry with subprime, which I do believe the worry is warranted, I don't think we've seen those cars hit the lot. I don't think the guy underwater yet, I don't think his car has been repoed and put up for sale again. You see what I'm saying? And until that happens over and over and over again, the supply situation in cars is still going to be relatively low. So supply and demand will fluctuate. Yes, and pretty much we need more. Once there's going to be a tsunami of supply based on defaults, pretty much, and that's what we're assuming. So we're assuming that hey, a bunch of people are going to default. That means there's going to be a tsunami of cars that are going to hit the market. But the point is, they haven't hit. Right now, the tide is pulling back, and we're watching the shore, and you're like, oh shit. Look at what's happening. Used cars, oh my gosh, the rate is 20% in Washington, D.C. People are defaulting, but you have not seen an influx of GMC Sierras hit the market. You haven't seen the F-150s flood the market and people now reacting to that, because that's when you're going to get the shift. That's when now car dealers, you're not going to go to a car dealership and not be able to find, a bunch of cars. You're going to be like, oh shit, now there's 10 trucks for sale that I wanted. And now there's, oh shit, now within a 50-mile radius, I could get 10 of the car I was looking at instead of 2 or 1. Same will happen with real estate. Not really. There's no Dodd-Frank for cars. If they were, nobody would have a car. And cars depreciate. That's the difference. Except for 2022 and 2021 and 2020, cars naturally depreciate. Cars are like a toaster. It's not like a house. So, but again, that's the risk for anything, just in general. But theoretically speaking, the tsunami of supply has yet to hit in both of those markets. But cars are more likely to, just because, again, it's a toaster, more or less. That's why, I was surprised when I had cars go up in value this year. That's why I was like, I have to sell a couple. I was like, I got to take it, but it's a toaster. In my mind, I hope you guys realize that your car is equivalent to a toaster. Even in terms of like financing, it's a toaster. So supply demand doesn't affect real estate. Wow. Well, that's not what I'm saying. I'm just saying the supply is very, very low still. Just like I just showed you on Car Gurus, 13,000 Honda Civics. Go tell me how many houses are for sale and compare it to 2019, compare it to 2020, compare it to 2021, for crying out loud. Again, you're getting lied to with a lot of your data reports or a lot of your news media. Again, the latest thing for real estate, they said 15% of people canceled their purchases. Oh my gosh, that sounds so bad. It's the worst since 2020. But the average is 10%. So it's up 50% on the average, but if you really think about it, 10 to 15%, that was a 5% difference with a 100% increase in rates. Not that worried. And again, Dodd-Frank, just most people, they're not, again, you have a lot of subprime car borrowers. You don't have subprime real estate. Right now, I think the amount of subprime borrowers is the lowest it's been in history for real estate. What is holding up the car supply? Well, there's just time from default to default to repossession to resale. That takes a decent amount of time. Yeah, 260 Civics per state doesn't seem like a lot. Yeah. Now, just imagine that with houses. Let's see. But I don't think when was the last time we got real estate data? Sri Lanka imposes nationwide curfew. %50 chance. I think we have a lot of time, so we're going to find out, but it's definitely up there. Definitely up there. Let's see. Let me see. Hmm. 10-year rate swap. Oh, that's 20. Damn, they don't have this data? Let me get to quarters. There's this. I have the seriously delinquent rate from Freddie Mac and Freddie Mae, but so yeah, this is just one. I have a lot of data on this actually, but this isn't the quote unquote. This doesn't give you like crazy like look into it in the sense that it's not like looking at active mortgages and all that. This is just from Fannie Mae. I could do Freddie Mac too. But this right here is the serious delinquent rate for real estate. So let me see if I could get this for cars and I could show you and we could, compare them. But like this is what we're saying with real estate. It's just like if you go and look at the amount of delinquencies and you kind of look at how some of this stuff played, it's very low comparatively. Again, if I showed you this one related to a couple of years ago, again, in 2020, you had like 3%. Right now, you're at less than 1% on Freddie Mac. It's 0.85. That's just delinquencies. So that means that's not necessarily foreclosures. Again, here's all of them. I could even get 90 days delinquent. And again, I would argue that all of the pseudo rent control from the pandemic is factoring into this, because this coming into this is still low. It's higher, but you can see the trajectory has been dropping. I listened to Josh Brown yesterday. They're starting to see defaults on prime car loans. Yeah, that's why we started having this talk, because some people are asking when's that going to hit next, because that really has been a good story over the last couple of days. Let's see. All right, that's a real estate. Macro. Auto defaults. EWZ down. For now it is. Unless oil comes back to life, then it'll come back with a vengeance. There, all right, let's take a look. Data library. There's quarterly sales, inventory, pricing. All right, I'm getting some more data for you for the autos. Oh my gosh. I have inventory data, and that's just bad. So like literally on this June quarter compared to last June, yo, that's actually like, it's crazy. Let's just see the amount of compact cars. The index is showing 12 for this month, and then last month it was at 55. Jeez. Yeah, so all auto inventories are just like days to turn. So 19 days to turn the inventory. So pretty much there's 19, the average. So let me show you this chart. This is inventory average across every single category of cars. And this is how many days to turn the inventory. So right now you're at average 24 days to sell all of the available cars. So again, look at right here. That's what we're talking 2020. There was 98 days of inventory. And then right before the beginning of this, in February 21, it was 59 days right here. So this is 59 days of inventory, and this is 90 days of inventory prior to everything. You know, the lowest we ever were at was about 60 days of inventory in 2015. By like, what, 2019, we were around right here, and this is, that's about 77 days. But yeah, so like that's what I'm saying with inventory. It's just it's very, very low in the car space. But once this number starts coming up here, that's going to be with the defaults. But I mean, there's a very big glut to get back to normal, more or less. Moving big S. No, this is all cars. So again, this is like we could get the data on everything. Like I could add cargo vans. I could add I just use the average of all of them, but every single one of them looks almost exactly the same. Let me see. So like large SUVs, there's 36 days or 24, but again, last year at June it was 60 days. It's all pretty much the same. Let me see. Auto finance and price. The data is actually not that good. Like, it's not as updated here. I'm getting the average new car rate is 4.4. Surprisingly, last June it was 5.5, which makes no amount. And there's what? There's 1.4 billion in auto loans, or 1.4 trillion, or 1,469 billion. I don't know how many billions that is. So here is the total amount of auto loans in America, just North America. This is, again, 1,400 billion. So I think that's about it's either 14 trillion or 1.4 trillion. A lot of trillions. New loan balance data. $1.4 trillion. Not bad. If you think about, again, that's just a lot. It's not like real estate, you know what I'm saying? Yeah, the delinquency date. So again, actually, we don't get the delinquencies until later. So that's why it's not. This isn't updated. This is from March. So here you go. Here's your auto delinquency rate. This is the amount that are actually over 90 days delinquent. So you're right here. That's about 4%. 4% of car loans in America are 90%. Over 90 days delinquent. 4% of them there. And last time you were at this price was 2017. So this was 2017. Last time there was an equivalency. Even then, 2017 to 2020, the delinquency went up about 1% right here. So from here to here. But that's, again, this is 3 months behind. So we'll see where June ends up. Let's see. Real estate. We could get some up there. What plays for repos? Hard to say. Very, very hard to say. Wait. Industry. Where is North America? I don't know why it's showing me UK. So what's the thesis? Delinquency rates are at the bottom. Auto market, we want to expand our positioning. Now is the time. The point is wait till the supply feedback, kind of like the bullwhip effect pretty much. But what I'm saying is that autos, although defaults are ticking up, we need to watch inventory increase, and that's when you will witness the crash of the auto market. That's when you will witness the price come down on vehicles. That's when we're going to start seeing that's when we're going to start seeing the lagging effects, more or less, of the banking effects if people start going bust on all of these. Let's see. Dollar down. All right, hold on. Bloomberg life insurance? No. So that TBT, yeah, I'm in the shy. The TBT ones we sold out last time because they expired. It sold me out at a profit on the last one, but I still have the TBTs. And then I have an old TLT. So 2010 Civics with 200,000 miles won't sell for 30,000 anymore. When supply increases, but if supply does not come on the market, again, that's kind of the whole thesis here. I don't think you're going to I think everything is just scary until that happens. The bullwhip effect. So is this one it? Yeah, this is delinquencies as total of all loans. This isn't the right data, though. I'm trying to get you the same the same charts from here. It's just I'm only pulling up Europe for some reason. But here is delinquencies of total percentage of loans from the Mortgage Bankers Associations for Q1. And that one, again, it's weird because we had more at the beginning of 2020. Auto repo would be shorting any of the bigger loan providers. I mean, pretty much there's 1.4 trillion of loans. Whoever has the most exposure to that. And you could even go after the subprime loans too, like Santander. They have more subprime ones, all of that. Is that retail REIT? So this is for REITs, and this is actually came up, but I don't know. No, this isn't day. This is just dollar inventory. Twitter trying to push for highs again. Things will get better when McDonald's brings back the prime rib, the McRib. Honestly, I think you're right. I feel you. It's very weird. I can't get that data yet. I'm gonna have to play around with the real estate stuff for y'all. But the car stuff, again, you could go after some of those banks, but I think we got a couple months at the very least. You have a lot to see things get worse. America's first short Tesla ETF will go live. Wow, TSLQ. No way. That's nuts. That's actually big. Damn, are we in 2018? What's happening? Wait, why? I thought it's offensive. That's insane. Dude, those ARLPs are still up 100%. Y'all playing with me, man. Are you for real? Yeah, bro. Have you noticed Cole's been slightly just going crazy there in the background? What is in that ETF? Probably 3 times short Tesla. And then mix in with some corporate paper. Brought to you by Tesla. Twitter board starting the TSLQ. Dude, that's crazy. That's a funny name. Y'all know why they put the Q, right? That's to insinuate bankruptcy. Because when a company goes bankrupt, and it still trades, they put a Q at the end of the name. So that's the long-standing joke. It's like Tesla Q. Like that's why I said like they would say that back in the day in like 2018. Yeah, SARK is short arc, but the Q is funny. CPI data was 9.1. Yeah, it's going to be interesting that it's because like if it's an ETF just shorting one stock, like I don't know how that's going to work. Because at least the guy who made the short ARK, like you could have shorted ARK, the ETF, then you could have went down and did like every single thing else. Like you could have went for every company individually. So if you short Tesla Q, you're kind of buying Tesla. I don't know, but without it. Market volume dead. Well, be cautious. I mean, today's definitely had more volume than the last couple days combined. Like we're already at 42 million. So we're here at the second hour or third hour, and we have just as much volume as yesterday and the day before that, not including any of the after hours activity. So volume is still pretty elevated. I mean, market chilling out now for sure comparatively. Again, post CPI, this is one of the biggest reactions on the upside. Or is it above average response? Actually, I got one for you. Are you ready? Here, let me show you this one. First, here is today compared to last month. All right? So here's today's reaction compared to last month. About 3 hours in, we are about 0.5% up today. Last time we were down about 1.75 and we closed about 1%, right? So that's where you're at now, looking better than expected. Are you ready for this one now? Chad? May 11th. Let me go to the SPY chart on May 11th. Interesting. Very, very interesting. May 11th was right here. Okay? So here's May 11th, though. So this is today versus last month. And now compare it to May. Oh, shit. Please hold. Oh, I just broke everything. Oh, man, I did it again. Hold on. Please hold. Sorry, we're just sorry. Right here. Here's May now. The red line. So May, you were up 1%, dropped down, went back up around the same time, were give or take the same level, but then you ended up down 1% by the end of the day leading into the next day. So that's a little bit of a surpriser because I'm trying to find out if this was the biggest positive response we've had in a year, and it's the second biggest. The only other time we were that big was May. But May ended up negative. So here's now all 12 CPIs. And like I'm saying, here's May right now. May and this month are the highest on the upside. And anytime it's pretty much ended up lower. And we've ended up around here, if not to the lower end. So very interesting. Some interesting data looks. But, ladies and gentlemen, we've been here for 3.5 hours. You got 3.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Everybody get the body moving. Move around. 10. Can't do 10, do 5. Can't do 5, do 4. Relax your jaw. Relax the shoulders. Chest to the sun. You know what I'm saying? Legs in front of you. Relax a little bit, bro. You made it this far on CPI, okay? I'm going to go to the bathroom. Some of y'all looking weak as hell today like the dollar. I'm just kidding, man. Get that chest to the sun. You know you strong as hell. You know you young safe haven, bro. Come on, man. The rest of the world weak and you strong as hell, even though gas price is high, because that chest is to the sun looking strong like the dollar. Okay, don't get me started, but do all that. I'm going to go to the bathroom. Okay, I'm going to move around a little bit. I'm probably going to cough a couple times and go. So I like to do. And then that's it. I hear they're talking Biden Middle East trip. All right, so do push-ups. Listen,
sometimes
you're 3 hours in Caledonia.
Who is
Inflation
in the room
is
who's not in the
9.1.
room. You just mentioned Iran as
I
somebody
wish
who
you
will
saw
not
this
be in
clip.
the room. That's
Damn,
one.
okay,
And
I'll be
others,
right back.
Russia is not in the room. Of the two of those, if you're sending messages by this trip to Israel and then to Saudi Arabia, to whom is the more important message being sent?
Well, I think we're sending messages to two different people. Let me remind you of a little history. In 1987 or so, we had an operation in the Gulf where we reflagged Kuwaiti tankers. And the reason we did that is so that the Russians could not increase their influence in the Gulf. They had said they would be glad to reflag the Kuwaiti tankers. So we rushed in and did it ourselves to keep them out. I think Iran is much more of a regional problem, but we've seen recently with Putin's discussions with the Iranians that their relationship is getting closer. It has never been too distant. I served in Iran at one time and used to be amazed at the amount of Russian equipment, trucks, jeeps, etc., that the Iranian military had during the time of the Shah. So it shouldn't be surprising that we see those two countries together. But I think we're sending one message to the Russians and a different one to the Iranians.
Mr. Bachelor, let's go to a different part of the world that you know terribly well, and that is Asia, and particularly in the Pacific. We had the loss to a tragic assassin of Shinzo Abe, the former prime minister, who had been, as far as I could tell, a real bulwark for U.S. interests in the region, particularly with his quest for an open Indo-Pacific, perhaps standing up against China. Is there anyone who can stand in Shinzo Abe's shoes at this point?
Well, I don't think there is, but the question right now, Prime Minister Kishida, who had worked as foreign minister for Mr. Abe, has done a terrific job and has a quite high approval.
Man, Shinzo. That is not Chris Como. I don't think people talk about the Comos anymore, man, okay? It's not 2020. That's it. Yum. Yum on the high, CLX, Coca-Cola. What a day. Microsoft went up, but I don't know if the premiums did. Then the SPY puts came down now. Those are willing to move. I was surprised on that, but they ended up coming back down. You got like 1 penny, 2 pennies on the Microsoft, which is, again, everything's still negative, but still. Banks, if banks come back good, remember you have bank earnings tomorrow, so Morgan Stanley, JP Morgan, if you want to play for them. The premiums are, I think they got smashed today. They came back to life yesterday, but then they got back down to, they're back down at a discount on out the monies. Why is the market green in some areas? I think it's because the dollar coming down and relaxing. And again, this has been a positive reaction, believe it or not, even though we're still pretty negative. But I think the dollar kind of chilling out, that's what got things going. And then even some people discussing the possibility of or what the Fed futures are showing with some rate hikes cut or pricing in a cut by 2023. So those are kind of the bullish parts. And we had a 1.5% reaction last night leading into it. So that, but ultimately, I think the dollar, this is the biggest dollar weakness we've seen in the last 2 weeks. So, and last time that happened, literally, if I could show you guys something again that I've already shown you, is just last time the dollar had a drop this big. Like when you go look at the dollar chart, you haven't had like a 30 to 50 cent drop in a long time. But last time that happened was right here. And just take a look at where the market was. It was at 390 after bouncing off at 372. So I really think, there's a lot going on, and there's a lot of narrative going around, a lot of ideas. People are trying to figure out what it is. But at the end of the day, I think the real big key is the dollar going down. I think that says a lot. Sad part is dollar drop still is dollar high as hell. Yes, exactly. So that's the paradox to it, right? So it's just, that's the short-term reaction, but longer term, you take a couple steps back. It's like the dollar is not chilled out, but just in the last 2 weeks, it's the biggest decline in 2 weeks, but it's still super duper high and not in a good spot. Even previous CPI, you think the market will drop? Dollar RSI was overextended. It could be expected. What's your take, brother Chad? Last time we were ever up this, no CPI positive reaction is held. That's what I'm trying to say. I mean, there's some that have gone there, but on average, if you do better than average on CPI, you go to 0% unchanged. So that's the best outcome. But every time we've gone up, it has gone down. Just for the last 12 CPIs. So from July 2021 till July 2022 today, we're up right now, but again, like we've shown, every other time it's went up, it has came back down. So we got to give it a couple more hours here and leading into tomorrow, but I think there's a lot going on. Again, it's not as if we're not making any assessments. Like, you're not waking up today and being like, boom, this is what the market's going to do because of this. It's like, no, we have 6 different things we need to be watching now. You have to watch the data, the 9.1%, any future data, the dollar, the bonds, the yield curve, oil and energy, and then now is the Fed going to do 100 basis points? Are they going to do 75? It's like there's like 7 different things that we're dealing with right now. So that's kind of the issue with it. So we'll see how it plays out, but it's definitely more than just, okay, market's going up or down today. It's like, nah, there is a confluence of factors that are feeding off of each other, and now we're talking about a lot of uncertainty in the sense like we are upcoming events. We don't know what's Powell going to do, what the Fed futures are saying, what are the earnings going to do. Yeah. So you have to filter the noise. And that's why I do believe the dollar is a good one to be looking at, and that could simplify it. But I mean, today is not simple. Today is definitely, it's well beyond your 9.1 CPI. But again, that CPI coming in, surprising every economist in the world for the second month in a row, that still has its own weight in and of itself. So there's just a lot going on right now. And again, today we woke up to the 3rd largest sell program in the morning. We've bounced up so far, but I mean, you got a lot going on. I don't know, I hate to keep saying that, but there's no easy answer for today, and there's not going to be an easy answer for tomorrow and where we go from here, just because we have a lot of things moving around now on the pricing table. Yeah, just let the digestion happen. Amen. Amen. You're not going to win in the cage fight. It is really a cage fight, but it's like, I don't even know, bro. It's like a cage fight, and then they're throwing like chairs in there, and then there's just like a bunch of other things that they keep throwing in. You know what I'm saying? Appreciate you. I appreciate good questions, man. Just keep it positive, in the future, and that's always what it comes down to. I know the name, so it's good to see. That's it. We just want positivity and good questions. Always welcome here. Again, I feel like there's a lot of good questions today and a lot of good input. You guys have all thrown in a lot of different stuff. You're seeing a lot of feelings, emotions, and I know people are surprised. Some people are excited, pissed off. So it's good to see, but I've been loving some of the discussion. So keep it up, Chad. Keep it up. Yalla. The cage fight could still catch the hands in the locker room. Damn, you're coming for the spy, bro. How old was I when I hit my first 100K? I think I was probably like 17, 18 or something like that. Going in there. First 100K came around the same time as everything else. The first 100K is like a big goal, though. I remember first 100K. Your first 100K is going to feel so like crazy. And then that's it. Well, again, my first real big paycheck came from a house flip. Again, I did my first flip at 18, and I think we walked away with it was like 300 grand, but then I split it with my partner. So I think I walked away with 150 or like 125. And then there were some like taxes and stuff. Did you come from money? No, we did not. Again, my parents had real estate before the bubble exploded, and there was pretty much like somebody said it yesterday. I don't know, but there was like my parents were rich for like 3 months, ever. That's it. I just remember there was one point in life where my parents had real estate, and like I remember I was able to ask for something at the store and not get my ass beat. And I remember it. I remember my dad even bought a BMW. He was doing good in real estate. And that was it. But it only lasted for about 3 months. And then they lost everything. You see what I'm saying? Like we went from, bro, like, I mean, usually if you're coming from another country and you're raising 5 children, chances are you're probably going to be on the lower end of the spectrum. So it's like we lived a very, very, just a normal family life. My parents didn't make too much money, and then they got into real estate, but then they lost it all. And I told you yesterday, they lost everything. So it wasn't, they just pretty much, they got into GameStop in 2004, 2005. And then I don't think they didn't have money till like 2007-ish, and then it lasted for a couple months, and then that was it. Thanks for the follow. That's probably the fake, Josh. Don't get clapped. I love you. Has there ever been an event that caused more volume after hours? Yeah. Elections, Brexit, any random political events, random China devaluations in 2015, all of those cause huge volumes. Mm. My parents own GameStop. No, real estate is what I call GameStop. So back in the day, bro, like I don't think you realize like everybody and their mom was just buying real estate, making money. You didn't have like again, I was young. So like I wasn't like a real adult. Like I wasn't like active like I mean I was trading stocks. That's when I started my career, but it wasn't like I didn't know what I know today. And like back then, bro, like my parents were putting houses under everybody's name just because there was no credit checks, all that. Like some people are saying, oh, if you guys got real estate, you had money. No, like, bro, you were getting houses for 0 down and 0 credit check. Like, do you realize that? Like, it was something like, that's why I call it GameStop, because you could do pretty crazy. Like, people were making a lot of money. Again, if this was the same thing like now, 80% of you would have a house. Like, you see what I'm saying? Like, that's the difference. Is like, if it was the same situation back then, 80-90% of the Chad would have a home just because it was so easy to acquire, and it was just like the internet. Like, again, imagine how people heard about GameStop and then everybody started buying it. That's what it was like in like 04, 05, 06, 07. It was just like real estate. Everybody was just like, oh, I could get a house, boom. And then you knew a loan guy, and the loan guy was like, yeah, all you do is sign here, boom, just fill this out and say you did this, and boom, you're gonna get the loan. And then that's what they did for 4 or 5 years. And everybody, that's why I said nowadays that's it. Nowadays it's a lot different, just because you have Dodd-Frank and all those other things. That sounds terrible. More than just a special few owning a home. Atrocious. Well, it was how it was done, right? So it was just the fact there was no lending standards, and like there was no verification. So it obviously created a problem. Dodd-Frank is the thing that slowed it. The Dodd-Frank limited more people getting a home than anything in American history. I'll promise you that. But looking at it today, where everything's crashing, you're kind of thankful for Dodd-Frank, because then it's like, well, shit, that maybe this is why we don't have subprime mortgages going through the roof today. But it was a problem. But you have to realize it back then. You're like, oh, man, everybody could get a home. You got to realize, why were they willing to do that? These bankers were all scamming and making money left and right. So at the end of the day, they gave average Americans were able to get into a home, while the bankers were just making hand over fist in commission. And then 4 years later, when people like my family were kicked out of everywhere and were down to losing everything and being homeless, the banks already walked away with the commissions. So they didn't even care. And then now it's turned into ever since then, the standard to acquire a home, the lending standards have been borderline prohibitive. But I mean, I don't know how to say that with this real estate market now. Yes, a ninja loan, no income, no job, no asset loan, term used to describe a loan that's been extended to a borrower with little or no attempt at the lender to verify certain attributes that predict the applicant's ability to repay. Why are we down minimal? The quick answer is the dollar dropped the most in 2 weeks. That's the quick answer. The other answer is that although we've seen this before, any other time CPI has been up this much, it has turned into a decline. So still got a lot of time on the clock, but let's see what happens. UNG in the money. Yalla. Again, we're in the money till October now, so Hopefully that goes crazy. But those plays, I think, are around 200%. Like 450 is 200, I believe. Yeah. October, yeah, they're at 425. So you're about 25 cents shy of 200% on those. Would they ever remove Dodd-Frank? I don't know. I mean, Dodd-Frank has been, again, it's been prohibitive, but like, I never thought in my life I would say, well, maybe Dodd-Frank is having a positive impact right now. You know, because that's just it. Like, when I look at real estate now and I look at how fast things have declined in so many other asset classes, and then I'm looking at real estate and I'm like, wait a minute. Shit, I guess it's 70s. Real estate didn't decline either, but in a weird way, I think Dodd-Frank is actually helping out a little bit in terms of stability right at this moment, right here, right now. But 99% of my life and career, I would say Dodd-Frank was one of the worst things ever, just because it stopped a lot of middle class and even lower class people from getting a home, especially when homes were cheaper a couple years ago. Dodd-Frank was the reason why a lot of people, even when houses were cheap, they didn't get them. But now it kind of adds stability in the sense that, well, at least there's not, big mortgage risk in the sense of subprime borrowers, but it was very limiting. It protects the 1%. It really did in 2013. Again, like 2013 to 2017, real estate doubled and tripled in value. People don't realize that, but you were able to do it where it's just like if you had access to money, then you were already winning. That's it. That's all you needed. Like, again, I remember, like, as I was starting out when I was younger with my real estate career, that's why I had to go to hard money loans to actually build it out. Because I remember my first real qualified loan, it was super low. Even though I had a lot of money, I just didn't have the 2 years history, and then I had cars, and I bought stuff, and then I didn't know how to file my taxes when I was younger. It was a mess. It was an absolute mess. So, like, you could have had $1 million cash, but then if you did not know how to file your taxes, if you took too many write-offs, if you didn't have 2.5 years of income verified history and tax returns, even if you had $1 million cash, they would have gave you $200,000 for a house. So the only way to buy any house would have been to go and buy it all cash, since it was very hard to qualify under Dodd-Frank. Just like the inflation, exactly. First access to money. Those are the ones who benefit. That's it. They always would. They always would. We started dropping on the last CPI about an hour in. So pretty much the drop, you lost like daily gains 3 hours in. So around where we're at right now, it started to go back to break even. And then by the 4th or 5th hour, you were negative from the morning. My first house at 18 was a hard money loan. So my first house I ever purchased was a flip, because I flipped it. That's it. So my first house I bought was not to live in. It was not to do anything. It was just a pure trade, more or less. But I used a hard money loan. That's why, I say it, people laugh at it when I say it. They're like, oh, don't ever use hard money. But it's like, there's a time and place for it. And especially like when you're building up. And again, I split that deal with somebody too. I started the same way I tell all of you guys, where I'm like, yeah, at first, you're going to have to eat some dog shit. That's it. At the end of the day, I had to take loans that were a little bit harder to go about. I had to go with a partner. I got less money on the back end. I got burned on the taxes. So this stuff I didn't know. And then that's why, but I said it, until you build up your track record and portfolio, eventually you're going to open up the doors to get easier capital and all that. But, I had to start just straight up hard money loans. I mean, I've used hard money a lot in my life, but you have to build up to it, and then eventually it's like once you could get to the point you don't even need a partner, it's beautiful. But you're gonna spend a couple of years building up. Again, I started with $100,000, $200,000, $300,000 properties before we started moving up to $3, $4, $5 million ones. So it's just part of the game, but that's why, I mean, I think Charlie said it earlier. There's always an economic hustle. Just, if you start early and you get in it early, I mean, you're more likely to benefit off of it in the back end. Yeah, we still got the EWG or at moment of truth on it right now, pretty much, because it was down earlier today. It's either going to fall in the money and we get something or we get clapped. You think it's a good time to flip homes? If you could get a good deal on it, that's it. Just run the numbers and don't be crazy. Like I've been seeing some house flips like hit the market, and I'm seeing what these people are listing. I saw one guy list at $6 million, and after 30 days of not getting an offer, he's already lowered it to $5 million. So I'm like, damn, this is crazy. I missed the donut. I searched up. I couldn't see it, Jared. I don't know. I think I missed yours yesterday. All I saw was Pothead Investors one. If you could ask your question, though, again, my bad on that. What do you think young individuals should look out for with this economic state? Protection, and just being wise, like going back to the basics of Richest Man in Babylon, and like saving and getting yourself an opportunity to generate income, so that you would be you'll have available capital once the opportunities are just everywhere. I asked about Myrna puts expiring mid-August. I don't know. I think because they got a lot of news with again, like booster this, booster that. I'm surprised they're at 172. They're at the 100-day high. I think you could have more upside than not, but I think it's kind of risky. But I'm feeling that play a little bit more than I'm not feeling it. But I still think it's kind of a coin flip. You have certain things in your favor. Again, the plays have been up over the last couple weeks. It's near like the high of there. 172 is still like a high price for them, so could be decent. Rehabs are selling full price. Yeah. It just depends, but I've seen some, as long as you're not trying to get the highest point possible, you could still flip very good in this market. Like, again, Lending Tips is still doing a flip. I don't know. This guy has like 2 or 3 flips he's working on right now. Again, but he's secured them at very low prices. But you just can't be asking for a lot of money on the upside. So that's the problem when I'm trying to go and flip anything. Is that I'm just making sure that the back end, that price I hope to get, I'm making sure it's not too crazy. That's about it. Abby Y weekly under 30 could move higher. XLV starting to break a little bit. Abivi is nice. Again, Rinvock is on July 15th. Actually, yeah. Bro, low key though, I might want to go both ways. Because Abivi has what's it called? Abivi has Rinvock approval PDUFA on Friday. So remember, anything bad, Rinvock black box warning dropped the stock 30% last time. But then Rinvock positive news brought it back up 20%. So that could be a good catalyst. Why are those so expensive? How much time? I wouldn't get too much time if you want. I mean, more time the better, but you could get some really nice cheap plays. And the puts are damn expensive, though. $7 higher, 7 lower would be 143-ish. I guess not too bad. Recent house here at 31 offers, but they priced below market. Whoa. High ticker. Man. When is Abivi ex-dividend? Oh, 7. Oh, tomorrow. Shit. Today. That's interesting. Because I was thinking you could even buy the shares maybe. And then you'll get the dividend. Netflix popping. SPY just had a big pop. Again, around this time we started to give up. So it's actually kind of interesting that we're hitting a new high right now. FU SPY, Fed swap shows 1 in 2 chance of July hike for 100 basis points. U.S. successfully tested Lockheed supersonic missiles. What's today? Today's Wednesday? Here's where you load them. Yeah, the puts came down a little bit from earlier. At least if it's weekly. Some of the earnings one, they pretty much dropped like 10 to 20%. Tesla's the one that dropped the most on me. We really going up on 9. Now everything is green except the Dow. So now you could get a little bit more mad about it. It is a 9.1% inflation that every economist in the world missed for the second report in a row. And we are now almost right back to where the release started from. But then again, that just means whatever happens from here, you spent all day doing absolutely nothing. Premium's not moving off that. Where's Abivi? No. 9 days. It's expensive. Did it fill it all? Hey, I'll take it. I'm going to grab a put too, but I grabbed a next week Abivi. I went for the far out the monies. I'm hoping Rinvock helps out, but I like them. I was going to go for the ones closer. I was going to go for the 20-cent ones or just grab one of the 157s, but I'm kind of feeling it a little bit. Abivi, July 22nd. It's super. Again, we've played Abivi, though, and the further you are out the money, I've seen it where I've caught a $10 move and it won't go up. So that's the only thing you got to watch out for. I got a call on Abivi for July 29th. And again, there's ex-dividend tomorrow. Rinvoq news on Friday for FDA, so it could still go down too. I'm keeping that in mind. July 22, not 29. So it's already coming down. The puts didn't move too much. How does X divvy? Because usually there's demand coming into it. So that's like good news, bad news for you on Abivai, because pretty much that means there's demand coming in leading into X dividend, but then following X dividend, the demand might fall off and you could just watch it come down. We've had interesting ones. Again, you've seen Altria day after X dividend go up. So it just kind of really depends on what's happening. And then SPY at 381 after hitting the high. I mean, selling Funko calls on my stocks, but next one is late August. They'll get more dates as you get closer to it, as like earnings and all that. But if it's too far away, then nah. After August, next one's like 100-day. Yeah, so give it like a month or so. Check out Clorix. They boosted Divi by 2% today. They're doing good. Very, very good. Bro, I saw gasoline go down yesterday. Bro, I drove by a gas station and it said 630. Or I think it said 570. And I was like, what? I started tripping out. I said, it actually goes down. And then I started thinking about the recession and economic activity. And then I said, what? Does that mean I said, I don't know how I feel about this now. I am very, very confused. I'm very conflicted. And still, no, I did not know, bro. I did not know. I was like, is this good? Is this bad? Now I'm like, I'm happy at the pump, but now I'm not as happy about the economic state. I'm like, did all my brothers and sisters in this glorious country, or have they now been affected by demand destruction? And I said, oh my goodness. It was crazy. It was crazy. That was the first time in like, I've seen like a consistent decline in the price of gas, man. It's amazing. It's amazing. That's why next month's CPI is going to come down. I guess so. It did come down. It did come down. Yeah, I believe there's no Fed meeting in August. Not sure what this means, but you do. A new monetary article discusses a way to gauge the stance of Fed monetary policy. That is how they measure the Fed's instrument settings in light of the economic wind. Settings relative to economic conditions. What is it? Percentage points? I have no idea. I think it's saying how they adjust to data, the flip-floppingness. That's why the 70s might be higher, but that one I don't know. That one I don't know. I paid $3.60, so this time I'm making 22 cents. Is it good? Do you guys do like gas station owners? Do you guys get more margins then on some of this? And hey, bring the price down, Nepal. Okay, you gas station owner. Yeah, right now. Stop playing around. Bring down the prices. Right now. Again, in Switzerland, if you trade wheat, corn, or any commodities affected by the war, they say you could potentially get charged with war crimes now. Isn't that wild? We read that this morning. I said, what? That's why I was like, damn. I should sell these weak calls then? Is that my bad? I did not mean to. I know, man. Switzerland I don't get it, bro. Like right when I get a girlfriend from Switzerland, I'm like, hell yeah, bro, you did good. And then Switzerland stopped acting neutral. Now they like charging war crimes on playing commodities. Like, what? Hold up. I'm like, this ain't even like, dude, that's a scam. That's a scam. Sega and monkeypox. We haven't heard about it like as much. It's not dominating like the news flow as much, but I mean, it's definitely a potential play. Like, you know, it's kind of on and off. It just kind of depends how it plays out. But I don't think monkeypox is going to create a COVID type market reaction, but doesn't mean a biotech can't profit off of it immensely. Germany switching to call, either short Russia or short any of the Europe plays, but they're very hard to play. They all got premium. We still have the coal play, and the coals are great, but I would either go for coal or wait till July 22nd as we get closer to the date. Then we could go from there. No way we close above 380. Just hold up, bro. Right when you said that, he's going 380, 150. So we're up 0.25% on the SPY, 0.5% on the NASDAQ, and Dow is only down 0.06, about to go green. 100 basis points is priced in at 60% now. 63.7. Wow. Yeah, 100% is a certainty right now at this point. So get ready, because that means by the end of the day, everybody's going to talk about that. And then by tomorrow, everyone's like, yeah, market's pricing in 100. We really believe it's 100 basis point now after 12 hours. We've all came to the conclusion this is what must be done after we missed everything. But now we know it's 100 basis points. SPY's coming up. But yeah, that's another one. Where's the Fed futures or the Fed? There, dude, the yield curve keeps going deeper negative. Down 0.19. Disgusting. This chart's not even updating. It's not even showing you the 1.9. There it is. So again, that's the ironic part. As we rally, the yield curve goes further inverted. I'm telling you, this is a very big deal. Again, this is a micro indicator for now, but obviously watch with the dollar. But I mean, that tells you something, that we're hitting a new low on the yield curve as we hit highs. So I think every time we've gone a little bit higher, the yield curve has taken a dip. I still have the Lambos up. This was for our car assessment. That's why. That's why. I think it's possible for gas prices to lead inflation to a degree, but not entirely. Again, you know, to watch commodity destruction leading into economic slowdown, and even with demand destruction, I mean, you'll watch it for a point, but, you know, we're going to find out what happens. But I don't think it'll be the factor that will lead everything down. This was for our car assessment. It was. Again, just look at that number. Just remember that number right now. In all of the United States, just seriously, I'm not even kidding, 251 listings for any type of Lamborghini, okay? Just keep that in mind, because watch this number go up and watch it equate to auto industry failure, recession, all of that. But until this number is still pretty high for Lamborghinis. I don't think people realize that. You know, back in the day, it would be like 4 Lamborghinis, 10 Lamborghinis max in the whole United States that weren't, again, that would hit this level of selling. So, yeah, good luck. See, again, like this is like my car. My car was a year newer, same amount of mileage, and I sold my car for $50,000 more a couple of months ago. I don't know if there is any more Uruses. But yeah, these are kind of coming down, but they're still expensive. No one talking about the 1 year 10. The 1 year is not as important. Again, the 2 year, 10 year, like we've been looking at, that's it. And then what's it called? The The 3-month 10-year. That's the final one. Ghetto spreaded the Lambo. Would 100 basis point be good? It would be good because it would say we're stopping inflation and like the Fed's trying to do something, but it would be bad in the event that you run the risk. This is why the yield curve is getting inverted heavily. You run the risk of the Fed tightening too much. And if the Fed tightens too much to respond to inflation, then before you know it, the Fed is going to pull back. And if the Fed goes from overly tightening to pulling back, warning, danger, Will Robinson, danger. So 100 basis points is bittersweet. And the last time you did 100 basis points was 1980. And it was a shit show. Why is it a warning? It's good and bad. The warning on the yield curve is right now, one, yields are already inverted. What it's telling us is that the 2-year rate is higher than the 10-year. So what's happening even with bonds is people get worried as Powell raises the rates, right? If you know Powell is going to raise 75 or 100 in 2 weeks, right? You know for a fact short-term interest rates are going to go up. But then if you think Powell is going to cut rates by 2023, then you think long-term interest rates are going to go down. So theoretically, the Fed is going to force the short end up. And then as now the market's like, yeah, this isn't going to last. Fed is going to break something. We're going to be cutting soon. They start buying the long end of the curve. Hence, the yield curve is inverted. That's why the short-term interest rates are higher than the long-term. But now, as people are anticipating stuff, if the long-term rates come lower and we're still on a trajectory of raising high, that means you're going to get a very, very deep inverted curve. Again, after today's inflation, people are expecting this to go to 0.3. I said that in the morning when we were at like I think we were at like 0.13 or something. Right here, right when it came out, we were like 0.13. But now this is expected to go to 0.3. And again, I could tell you right off the bat, if you go to 130 on the TLT, based on just on what the Fed is going to do no matter what at bare minimum, if TLT goes to 130, the 3-month 10-year is going to invert. So, but this is the logic of it, as now people are expecting the Fed to do something in the short term and then pivot in the long term. This starts to invert the yield curve. And then once it gets inverted and then the Fed has to correct and starts cutting rates, boom, the yield curve will come back to normal. But that will be, holy shit, we have a big problem on our hands. Yeah, it's at 20 right now. It's pretty much, I'd wait till 30. And then we're going to see what the Fed does. And then after 30, we'll see if it's going to hit 0.5. But again, some people will argue if that inversion hits half a basis point, then that's it. Recession is here. Some people would argue that. I don't necessarily agree with it, but I mean, it's definitely something I'm going to be watching out for. So if the Fed cuts rate in the future, it's a big problem. Yeah. Because think about it. Imagine the Fed is like, yo, we got to build up the rates to save everybody. And then then they pull back on that plan. You don't think that would be weird? That wouldn't be suspicious to you? So the simple way to understand that is just that. Again, I have a bunch of videos on this yield curve. That's why I'm very confident in it, because it's not like literally if you got that Pony membership badge, you know damn well, even if you don't have the membership badge and you followed for a long time, like the yield curve is my thing. Like I've been on it for a very long time, but just to keep it simple for you, it's very easy to understand. If the Fed goes from tightening policy to immediately reverting policy, it means something is wrong. It's like a break the glass scenario. Just like in TLT, the second TLT we hit, the Fed announced an emergency rate cut. When they start cutting rates, it's just like the SPR. When they start saying, okay, we now need to take an action to spur aggregate demand, that means aggregate demand is in the poop hole. And that means you have a really big economic problem on your hands. So that's the simple way. I could get into it. I might have to just make a follow-up video, but This is a very complex topic. I'm just trying to simplify it here, where it's just like you got to think about it. We are talking about raising rates. The whole world is raising rates right now. If you mean to tell me 4 months from now we turn into cutting rates, there is a big, big problem that they are not telling you about, or that the data is showing, but it's just lagging. So that's why I'm saying, if that occurs and I get my signal, you will watch me sell a lot of shit, and I will go all in on puts. No exaggeration. It will be fun. It will be fun. So get ready for that, but it's not there yet. Right now, we are just anticipating, and we can anticipate it for 12 to 18 months if we wanted to. That's the problem, is that the yield curve, it's inverted 3 times this year. In the last 2 weeks, it's the first time it stayed there. But it's just like this, it could stay like this for 18 months with nothing happening. So like that's why it's so tricky, because I'm telling you, for the next year and a half, it could stay exactly at this point with the stock market hitting a new high, believe it or not. We've seen that happen throughout history. Again, 2007, the yield curve was flattened and inverted for a long time, and then that's it. So it was for about a year and a half, 2 years before anything came down. I hope you get that. I disagree. Commodities could still gutter. Again, what I'm saying is I'm bearish if the yield curve inversion gets corrected by the Fed and not naturally, then I am a buyer of puts. I will become the biggest bear you have ever met. If not, we're still in wait and see approach. What would make you say you're a recession? The Fed cutting rates. That's it. The Fed is stupid and they're slow, but at that point, it's just there's no debate. You see what I'm saying? Right now, we could argue it. That's the problem. Anything we bring up real estate, we bring up cars, we bring up earnings. You could debate it still. That's it, the whole point. There should be a point where it's no discussion, right? And at that point, if the Fed is taking monetary policy actions to spur demand, I don't think there's a debate about where the economy is going, if that makes sense. There would not be a debate about it. It's just saying you can't explain to me why the Fed would be trying to spur activity when they've spent the last year on the most aggressive campaign to stop it. So that right there would say a lot. So that's when I would say, yeah, we got a recession. It should make a lot of logical sense. Yeah, a lot of you guys are kind of like, okay, so they won't cut unless they need to, exactly, and then they'll pause and see, but that's the whole point. They won't cut unless it was absolutely direly necessary. Just, again, anytime you've witnessed a abrupt action for the government or a government entity to impact the market, it's usually because there is a crisis. It's because there's a break glass scenario where they have to. Let me ask you, when was the last time you saw them cut rates? Please humor me. It was 2020. It was when the whole world stopped. Okay, what was the next time they cut rates? Oh, 2008, global financial meltdown. Again, you could go through the list. There's other times like the 90s where they cut rates and it wasn't a calamity and things went up a little bit, but every time they've cut rates, it is correlated with a recession. No matter what, but it doesn't mean that it will cause a recession. That's the problem. It's just like every time you notice GDP is negative, it doesn't mean it causes the recession, but those factors are apparent. But the point is, if they have to cut rates, then, some people will take it as bullish. I'll tell you right now, I hope you're listening to me. 2018, they did, I guess they did cut rates. And it lasted for like a year or two and things slowed down, and then it would. I guess 2018 is the only time we didn't have real calamity, but I guess we had the 20% sell-off, and then they stopped. They stopped the QT, but that one's actually an interesting one. It was 2019. I think it was 2019 because they started tapering 2018, then 2019. That's when we had the TLT. That's where we hit the second TLT. S&P hasn't closed on CPI since January. Yeah, 5 of the last 6 have been negative. But I'll tell you this, mark my words now, if that rate cut comes in 2023, I promise you the market is going to go up initially. So just get ready, because I'm telling you, market's already taking it as somewhat bullish today. And on any of these days, people are like, yeah, rate cuts, Powell's going to stop. But I'm telling you, if we have an inverted yield curve and then the Fed starts cutting rates, your initial market reaction will be bullish. And I'm telling you today in 2022. So just don't forget that, okay? Because that will add to the confusion with this play. I know for a fact. Because it's a borderline bullish catalyst for some people. I'm ready, son. Now I get it. Yes, it will be initially bullish, and then all your buy the dippers are, again, Uncle said it. When the 3-month on the fall, that's when you don't buy the dip. Hey, so what I'm going to do? Break it in two. Feast in the famine. The cycle ain't new. But that's just the view. It could be 08. Yeah, it could be 02. Could be a plot, and it could be a coup. Either way, I know that I'm going to get through. Woo! Okay, I'm sorry. So, but that's the whole point. But people will take it as bullish when it does occur. That's and that will be a gift to you, because then you will be able to grab a lot of stuff for hopefully very, very cheap, and then who knows what the next 6 to 12 months will look like. We gotta play it now. Well, let's see. I mean, I kind of got a PHILO for you. It's not even a PHILO, like it's not a Jesus PHILO, but it's something I've been thinking about, and it's kind of going to be our game plan moving forward. I don't know. It's like it's helpful, but it's not helpful in the sense that I've been thinking about something, and I have something to give you, but it's not necessarily. I need a game plan for it, and the game plan boils down to Richest Man in Babylon. So I might have to read it to you. But I got a decent one. Let's see. Los Angeles port chief is speaking at virtual meeting. They say port chief needs to deal with stale rail cargo issues. Biden arrives in Israel. I guess he's talking.
For all the people.
All right, let me go get a
region.
drink real quick. Hold on.
Which is why
Follow me on Instagram.
we'll discuss my continued support, even though I know it's not in the near term, a two-state solution.
President Biden's also scheduled to visit Saudi Arabia. The hope is that restoring relations with Crown Prince Mohammed bin Salman will secure a boost in oil production and help ease U.S. gas prices. And a U.S. Secret Service employee who was on the president's trip has been suspended and sent home. A statement from the Secret Service says that after what was called a physical encounter late Monday, the employee was briefly detained by Israeli police. CNN says the worker allegedly assaulted a woman outside a bar in Jerusalem. An official says there was no allegation of sexual assault. In Shanghai, China, COVID-19 cases appear to be leveling off after a recent surge.
Wait, what?
Still,
He ain't even
residents have been
sexually
urged to
assaulted. He just assaulted her. That's it. They're like, there was a report of a Secret Service agent assaulting a woman outside of a bar, but it was not a sexual assault. That means he just slapped her or something, bro. That's it. Like, what? This fully trained defense specialist is beating on people? Okay. That's a wild headline, bro. That's a wild headline. That's crazy. That's crazy. Oh, man. Maybe he was protecting the president. I don't know. Unless Biden, I don't know if Biden would be do you think Biden goes to bars? I don't know. I feel like I feel like I would see Biden in like many other areas, but I don't know if I'd see him at like a bar at like 11 p.m. or something. I don't know. It just doesn't seem fitting, which is kind of good. I mean, it kind of Nah, he doesn't give me like I'll see you at the bar vibe. Like, you know, I feel like I would see Trump at a bar. Hunter's a different story. Hunter's not at the bar either, to be honest with you. He's he's in his room, and I know what he's doing in his room actually. Yeah, it's a little different. So for someone to enter and invest in, would it be smarter to invest but keep it small and hold on to more cash, or hold all the cash? Either way, keep watching. Your first response is beautiful, right? Just start with a little bit and go little by little is a killer in this market. That's all. It's like if you have money saved up and you put, if it takes you 6 months to allocate less than half of your capital, you're going to be in the best situation possible. Well, regardless of what happens, again, even if the economy slows down, no matter what. Why? Because you're still going to have cash, but then you are still going to get to take advantage of some of the declines here and, just to have stuff. So I'm really all about that type of approach when it's all said and done. I wouldn't be too timid in this market and don't be so scared of it, but obviously don't go, full gung-ho trying to buy everything because, you need to have a lot of money for the next, not a lot of money, but some money for the next move. Let's see. Europe, you think more countries will leave the Union? I don't think that matters now. Right now, the big date is July 22nd for Europe. That's it. If that Nord Stream doesn't come on, Europe is going to crash 20% from where it's at right now. Minimum. And that's a big deal. Like, we're talking the whole entire index of Germany, the FTSE 100, all of them will go down 20%. Excuse me. It's safe to assume pipeline not coming back on. It's a black swan. So, like, if it did, it would, it shouldn't happen. It should come back on. Again, like I'm saying, it's really it's expensive in the sense that it's like they should put it back on. Again, your costs are so high that you have to really ask yourself, is this really what they're going to let lapse? And also, too, for Putin, it's an escalation. Like, no matter what, it's just that's just all it is. UNG should skyrocket if Nord Stream doesn't come back on, but it should do it in a very weird way, in the sense that we still have to deal with our other pressures. No. You have not missed any PHILO. You have not missed any PHILO. That's a good question. We said if there's a less than 7% chance of a 100 basis point hike yesterday, and now it's 50, would it be fair to think that the market would be a little bit spooked? Yes, and it could happen delayed. Remember, last time it took about 48 hours. Remember, I was showing you the watch list, and we were going back on the live clips. And remember, it's when they were even doing 75, it was 0, and then it went up to 50. Then the next day, it went up to pretty much 100. So just give it a little bit more time. But pretty much, I think it's fair to say, yeah, there's a delayed spookening priced into this, in the sense that we might react a little bit later. Just don't let this first move, don't get fooled by a false bull, more or less. More or less. Y'all ready for this? Oh, ladies and gentlemen, boys and girls, I got a PHILO for you. Although I love the Lord and Savior, Jesus Christ, man, this is not going to be about Jesus today. There is no Bible reference. I have nothing about God to reference today. That does not give you a representation of my personal life, because God is good and finger to the sky. But we need to talk about money, and we need to talk about future, and we need to talk about how to handle this with everything. But I just, something came to mind to me the other day. I was under the weather yesterday. I didn't have time to get you guys the watch list. And it's honestly wild. I needed the rest. It gave me a lot of time to like sit and think. And I was just thinking, I was like, man, what would be the most helpful for people right now? And I was really thinking about where I provide my value for people. And I was really thinking on where I see myself providing extraordinary value for people down the road, and that was something I was really, really thinking about. I was like, okay, where is the life-changing value going to come from? And I'm like, that's why I said I only have so much of a game plan to give you now. But I got really excited because I started thinking about some other times, and the thing that really, really came to me was defense and knowing how to defend in a situation like this. And being with, where pretty much what I'm trying to get at is, no matter what the market does, I want every single person to be safe. That is what I saw as a value assessment. That is what I saw as important. And this is where I said, okay, if I'm going to give you guys information, if I'm going to try to feed you guys stuff and make sure everything is there, we need to have everybody prepared for defense. Yeah, and having people being ready to say, hey, no matter what the market does, we are going to be good here. Now, I'll tell you, half of this answer, when we were talking about defense, I know right away, half of you guys are thinking, and this is what I thought right away, okay, we're like, how do we play defense by making a play? No, that's not what I'm talking about, because I realize that's half of the answer, but that's going to happen down the road, right? Again, we could talk about the yield curve, we could talk about all of that, but I realize there is just other steps and other priorities that people need to be reminded of, and that people need to start focusing. And one thing I really want to start getting everybody in the mentality of is capital defense, and just literally taking this back to basics and knowing, hey, this is how you are going to defend yourself. And this is now, no matter what happens, if by going about certain step now and doing them early and turning your worry into preparation, this is how you are going to make it out alive and feeling as if you are, more than prepared. You see what I'm saying? So, Chad, I hope you feel me on this, because what I'm trying to say now is your economic defense, everybody needs a wake-up call, and everybody needs to do a double check towards, okay, are we playing with any level of defense right now? And if the worst of the worst arrives, or if the middle of the worst arrives, or maybe it gets a lot better than we expect, are you going to be able to be in a good position? So how can you do that? Literally, how? What are the steps? And this is where I'm saying we are going to have to figure this out a little bit more, but I do have something for you. And this is something I've shared with you. But again, this stuff means nothing if you do not bring it into practical application in your life. What is it? It is the 7 cures for a lean purse. So today, maybe we could go through this little by little. I will read all of them to you. But I do want to focus on just the first two things, because without the first two things, we can't really do anything. So here it is, ladies and gentlemen, the 7 cures for a lean purse. Cure number 1, start thy purse to fattening. ARCAD advises saving 10% of your annual income to start building up your wealth. For every 10 coins thou placest within thy purse, take out for use but 9. The purse will start to fatten at once, and its increasing weight will feel good in thy hand and bring satisfaction to thy soul. Number 2, control thy expenditures. ARCAD advises against luxury expenditures that ultimately become confused as necessities. The gold we may retain from our earnings is but the start, and what each of us calls our necessary expenses will always grow to equal our incomes unless we protest to the contrary, and confuse not the necessary expenses with thy desires. The third cure, make thy gold multiply. ARCAD advises to invest and to compound the investment from these savings. The earnings we will make shall build our fortunes. Learn to make your treasure work for you. Make it your slave. Make its children's and its children's children work for you. Cure number 4, guard thy treasure from loss. ARCAD advises against taking a risk of loss and investing in get-rich-quick schemes. Is it wise to be intrigued by larger earnings when thy principal may be lost? I say not. The penalty of risk is probable loss. Study carefully. Before parting with thy treasure, each assurance that it may be safely reclaimed. Be not misled by thy own romantic desires to make wealth rapidly. The 5th cure, make thy dwelling a profitable investment. ARCAD advises buying versus renting on your principal residence and to use residence to establish a business. I recommend that every man own the roof that sheltereth him and his, and nor is it beyond the ability of any well-intentioned man to own his home. Again, I'm not focusing on that one today, but I hope you got that last quote. Again, this book was written in the early 1900s, and he said, nor is it beyond the ability of any well-intentioned man to own his home. Interesting. Number 6, ensure a future income. ARCAD advises on having a pension and future retirement income. You don't necessarily need a pension, hashtag long term. Therefore, do I say it behooves a man to make preparations for a suitable income in the days to come, when he is no longer young, and to make preparations for his family, should he be no longer with them, to comfort and support them. And number 7, increase thy ability to earn. ARCAD advises to keep developing your own skills to increase your investing wisdom and increase your earnings power. The more of wisdom we know, the more we can earn. And that man who seeks to learn more of his craft shall richly be rewarded. So, Chad, those are the 7 cures. That's what I love about it. Because I realized after rereading it, again, a cure is more or less defensive. Now, I only want to focus on the first 2 for today. I plan to remind you about this every single week. Okay? Because again, like I'm saying, I think the only answer of this is to go back to basics. And I really hope everybody is realizing how defense is going to be key. But again, a lot of the future is implied into this. And what I mean by that is that it's slow. And things are going to take time. And none of these cures for a purse, none of them happen overnight. That's the point. I don't know if you remember, I brought this up to you a couple months ago, and we were talking about, hey, remember, you need to go through your accounts, see where you're spending. Again, control thy expenditures. But have you noticed not too much has changed since then? But we're still kind of on a trajectory somewhere. So this is really what I want to remind you of, is that this is going to be a slow process. And really, is the need for defense really high right now? It's not. I hate to break it to you. Although there's a lot of uncertainty, although there's things moving around, again, what I'm trying to tell you is that this is kind of my feeling. I don't think the defense is going to be valued until it's really right in front of your face. But right now, you're early, and that's good. So I just want to give you this reminder, and I really hope we could start with the first 2 things, saving and controlling expenditures. Right now, I'm telling you, if there is zero plan in place between now and the next 12 months for you to save at least bare minimum 10% of your money, if the economy enters a situation that some people with puts want to see, you are going to be in an awful position. I'm just telling you right now. Again, for every 10 coins that you touch, you could only use 9. That's it. I know this is a age-old debate because everybody said, well, Josh, I can't save. I have kids. I have this. I'm not trying to I hope you realize, too, I'm not trying to say, ha-ha, you're going to be in a bad position, ha-ha. No. I'm trying to remind you that if you could try to get a handle of this earlier rather than later, we might be able to change the trajectory of some things. Again, for every 9 that you use, you don't think it's weird that this book written in the early or the late 1800s, that this information was presented in the 1800s and even back then on the Sixth Cure, people back then were even saying, I cannot own a home. Yeah, that doesn't sound, that's not weird to you? I think it's weird. I think it's very, very weird that over 100 years ago, you would have the same, again, and I'm applying this to savings. Why? Because right off the bat, many of you are going to be tempted with this little insidious logic that you cannot save 10%. That's not true. I'll give you the line. What does he say? He said, nor is it beyond the ability of any well-intentioned man. Chad. Do you realize what I'm about to tell you? If you make an effort to start saving 10% now, I think that is what separates the difference between somebody who has well intentions and not. I believe if you are a grounded person and you genuinely have a positive intention to benefit your life and to change your financial situation, you will begin. It's very simple. Otherwise, I believe your intentions are lying deep down in the crypts of your soul and you are not figuring out the reason, or you can't admit it, as to why 10% is out of reach. Why you can't use 9 out of every coins you touch. Again, 9 out of every $10. Can you live off of 90 out of every 100? Can you live off of 900 out of every 1,000? Where is your intent? Otherwise, you are not taking seriously what anybody is saying about the economy. Otherwise, your intentions are not lining up with it. So please, Chad, that's number 1. Now, number 2, I gave this to you a month or 2 ago. I think it was about 2.5 months ago to be exact. Control thy expenditures. Again, the thing he says is that the gold you retain from your earnings is just the start. Oh, y'all don't feel me. Again, this is the defensive strategy. Our first line of defense is having money coming in. Again, a lot of people, before things get bad, if you could focus on bringing money in and saving 10% of it before anybody and the majority of the world in Main Street starts to pull back, my friend, you're going to be good. But that is just the start. That means in and of itself, 10% is not going to give you wealth, because the next thing goes down to how you spend that money. But what does he say? There's one point I did not talk about last time. Last time, I just told you guys, hey, please go through your bank accounts right now. Go through the last 6 months of your bank account. And if none of you have done this yet, again, where is your intention? That's my real question to you. Where is your intention about your financial future, genuinely speaking? No shade, no nothing, but like, come on, where's it at? But you should all go through your bank account for the last 6 months, and you should be able to find a budget and see where is there excess money going out. Where a lot of you tell me, Josh, I can't save 10% because I have kids. Okay, how much did you spend on your kids every single month? How much did you spend on food every single month? How much did you spend on weed every single month for the last 6 months? You have enough data right here, right now, especially in a slowing down economy already, where you could kind of get an idea of where things are at. So again, if you did not do that as of yet, one, it's probably intimidating, and I understand. But two, where is your intention? But what does he say? This is the part we did not talk about. He says what each of us calls a necessary expense will always equal our incomes unless we protest to the contrary. He said, confuse not thy necessary expenses with thy desires. Oh, man. Chad. I know people don't like absolutes, but I could kind of agree with this. That do you realize that everything you call necessary, you will always grow what you think is necessary as your income grows. And it sucks because step one is going to increase our money. Again, that is the start to your wealth with that 10%. But the problem is that as your income goes up, always your appetite, you're going to say, well, I need that now. It's necessary. But is it? Again, unless you protest to the contrary. You guys have look around. You see what a protest looks like, right? You see what happens. One law goes through, protest. Something happens, protest. Again, some of y'all get worried about protests. Cool. Do the same thing with your expenses. Some of y'all have protested government actions over the last 12 months than what you are spending money on, than what you define as necessary. Very interesting. And again, that has to do with your intentions as well. So, chat, this is where we're going to start. I plan on reminding you about this, but it's defensive mode right now. And it's not about playing defense and sliding your feet and saying I'm in defense mode. No, this is going to be about the next 6 months of actually preparing for a shift in any sort of economy. Do you understand that? And I'm saying any of you with well intentions to protect your family, your financial future, and to make sure that you could keep away from the abyss of actual and utter destruction, then you will pursue this. This is my goal. This is something that I'm seeing we're going to have to focus on a lot. And this is something I know we're good at. And this is something I know is basics and we've already went over. But now I think this is just very appropriate with the timing and the fact that we've already brought up some of it and that kind of, we're going through this fog and it's like slowly getting there. I just want to make sure nobody falls behind with this, okay? But really what I'm trying to find out here, and it doesn't matter what I find out, but more or less, I think this is just where it's going to separate things. Are you well-intentioned about this or not? If your intentions for building wealth are in the right place, you are going to defend and you are going to be fine. But if your intentions are in the wrong place, we have a problem. Again, part of the intentions is literally, it's saying how are you really going to just save money or not? Are you really going to control these expenses or not? Where is the intention coming from? And I really believe if you have that good intention, you guys are going to starting on this right away. But ultimately, Chad is defense moment, okay? So I'm pretty excited about this. I hope none of you take this. I probably should have gave you this disclaimer in the beginning. This is not to increase fear. If you think I have fear, you got it totally twisted. That's not what this is about. None of you should have fear. If you do feel fear, guess what? That's totally normal. And what I'm trying to tell you, instead of being scared, there's actually stuff you could do to get to help ease your mind. You see what I'm saying? We're right now starting a couple of steps and being so early, because I'm saying you don't need to react right now. You really don't. But if your intentions are in the right place, if you want to make sure no matter what scenario you're good, starting now is a very, very wise opportunity. But it's not anything immediate. But by taking these steps, this should bring you some peace of mind, and it's going to make sure you guys are good. And I will tell you now, I will have other things for you to share. We're going to have to go over all of this. There is going to be strategies as the current modern situation creates these opportunities. But again, this is our foundation. This is why I'm trying to bring this up, because imagine how sad it's going to be when we don't have, when the opportunity is there, but the foundation isn't built. Right? That's going to be bad when we've only gotten half of what we accounted for. And then it's like, wow, the situation's there, but we didn't start our purse to fattening. We didn't control our expectations. Now the opportunity to multiply the gold, oh man, now we're still stuck in the, let's try to get rich quick, or in the 6-7 months ahead of opportunity, I started going for a get rich quick scheme instead of planning and preparing for what a lot of people think is inevitable. Think about that. Again, having the intentions that, oh, this is just out of my reach. I'm not going to be able to do it. There's no point to this. No. Again, increasing their wisdom. Isn't that funny what it ends with? Wisdom, knowledge, finding places to learn. Again, we're talking about ideas. Again, the market starts dropping. Economy gets crazy. What, you think you're going to go run into a hole now? No, find a loophole. Go ahead, find a market inefficiency. Y'all keep working on your craft. Again, do you see what I'm saying, though? Because the well-intentioned person who starts thinking like this now, while everybody is still a far, far away before anything has even happened, you're going to be more prepared. And then when it happens, people are going to be thinking about the pain while you are now thinking about increasing your ability to earn. That's what happens when the other 6 steps are built out. So, Chad, it's game time. I really hope you're ready. I hope you know defense just got that much more important. And best of all, you have nothing to worry about. That is the whole point of this PHILO. And I love it. Again, whether you delay on anything I'm saying or not, you are not going to get slapped in the face tomorrow. The ignorance to what I'm saying today is not going to affect you a month from now. And that, I don't know, it's bittersweet. So neither would that mean following the steps today, you're not going to see anything. Do you get what I'm saying? But the point is now, you're going to want to keep this defense in mind. And you're going to want to make sure your foundation, it's going to go through a stress test. So please have it in play. And the one who has the intention to protect themselves in any environment, you are going to walk away from this more victorious than ever. Anything to the contrary, you're at the mercy of the waters. So Chad, it's defense mode. I hope you're ready. And I hope you take that to the bank, baby. That is your philosophy. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts Bootcamp and real estate course. Let's go, baby. Let's go, baby. You know, it's good, man. It's good. That's all you need. You need a little bit of that one in life, man. It's good for you, man. Defense, baby. Defense. Defense. Again, no matter what happens, everybody have to be good. That's what I'm just saying. And how it's going to be done is through these steps, though. That's it. Again, the plays come second, but like I'm saying, man, there's your drop right at PHILO, and uh-oh. But I'm just saying, it's just I want to make sure our foundations are built out. And I really hope so. And the beauty is it's like you have just enough time, but not really, but you do. That's why I'm saying it's a crazy, crazy point that we're at. But we got to get everybody in this mindset now because everything else is just not sufficient. No news right there. We just ended and then it's going down. So let me get you a song. We should get some earnings season. Let's get some earnings season. Yeah, let's get some earnings season.
Hey man, it's a cop. Bitch, I'm popping every quarter, bitch, it's earnings season. Like I'm chewing on the mic, I know you heard we eating. I don't do the pretty lines, I trade a different reason. You don't like what's on my mind, you can mute your TV. They buying THC, we buying TLT. I could go and change your life before, not third day. You should go and change your mind to buy ACB. You should do the right steps, it's the ABC. Talking AKs and 22s, what? I'm talking AKs and 10 Qs, hey. Or the best play, the slow move, hey. Want my whole life for damn school. So sit your ass down while your ass quit the speed. You gon' get your ass clapped cause you confuse what want with need. When they think I bad down is when I'm rising to my feet. You saw me do this shit for free and still make 100 G's. I'ma pull up in a Jeep, one that's made by Mercedes. I'ma buy it when it's cheap and sell it for a preem. Know that water kinda D, so I'm so mad while I think you gon' probably need a team if you gon' run it up on me. Don't bring a crew to a cold fight, better buy some more time. Hold it till there's no time, meet me at the goal line. Dropping this like oh nah, the devil on my phone line, but haters kiss the decline. I'm buying contracts at the money, they said that I'm stupid. If you really think that you should short it, you won't do it. There's a fine line between affording and stupid. Anything I say, please don't do it. I'm just trying to be professional. Living through recession, bro. Kinda feel depressing, huh? You should watch the estimates. Company consensus. Earning season, set it up. I'm about to hit consecutive. Bitch, I'm popping every quarter, bitch, it's earning season. Like I'm chewing on the mic, I know you heard we eating. I don't do the pretty lines, I trade a different reason. You don't like what's on my mind, you can mute your TV. They buying THC, we buying TLT. You could go and change your life before, not 30. You should go and change your mind about ACB. You should do the right steps, it's the ABC. Got a house up in the hills, but I don't really like LA. You know I got a couple mil, but still it's 20 on the play. I break it down 100 ways, I'm talking 50 different plays. Assume a lot of them gon' miss, but one gon' keep me in the game. Damn, now can you get up off my back? They say they making lots of money, but they talking non-gap. Never thought I'd make a milli, now that's what I pay in tax. You ain't really gotta feel me, cause I know God got my back. Don't talk much, if it's a done deal. Plays I make are unreal, but the money's so real. You could hate and uphill, but the plays ain't concealed. I know you heard my mouth swear, you crackhead, you got no chill. I'ma never give this up like the girls I went to church with. Maybe I'll retire when I hostile take Berkshire. Don't fuck with your retire, I got Mivga on my shirt, bitch. But I didn't need an image, put a thumbs up on the Forbes list. Ha.
Please, allow me to show you something.
Check me, man. It's a cop. 2020, baby. Straight up, man. I just hope you in the game. Yeah. I ain't seen this in a minute. I ain't seen this in a while. Seeing like this a little different. No minutes, the word on viral. Thinking that the Chinese did it. Or maybe we started the virus. Maybe they want you divided. Maybe they profit off fighting. I ain't seen this in a minute. I ain't seen this in a while. Seeing like this a little different. No minutes, the word on viral. Thinking that the Chinese did it. Or maybe we started the virus. Maybe they want you divided. Maybe they profit off fighting. Yeah, this one different. You should listen. Take a minute, cause in seconds people tripping, fed decisions, reminiscing of the time we saw this last. Not in a crash, but in collapse. Not contained across the map. First the strain and then the grab. Damn, this is the system deflating, but this coming off as inflation. That's why the dollar's still strengthened. The money ain't moving at all, but you made your mind up real quick. Cause when the 3 month on the fall, that's when you don't buy the dip. Ay, so what I'm on though, break it in two. Feast in the famine, the cycle ain't no. That's just a view, it could be your way, yeah, it could be your two. It could be applying, it could be a coup. Either way, I know I'm gonna get through. I got some armor and I got the tools. I'm playing patience, then I make a move. I ain't been a bear in a minute, I ain't been a bull in a while. I ain't feel them in a minute. All of these bitches got bias. Your attitude or your prices. Chill when you up, but I feel when you negative. Millions of dollars won't make you a better man. Should be a way that the way that I'm. I ain't seen this in a minute. I ain't seen this in a while. Seen like this a little different. No minutes, the word gone viral. Thinking that the Chinese did it. Or maybe we started the virus. Maybe they want you divided. Maybe they profit off fighting. I ain't seen this in a minute. I ain't seen this in a while. Seen like this a little different. No minutes of the word gone viral. Thinking that the Chinese did it. Or maybe we started the virus. Maybe they want you divided. Maybe they profit off fighting.
2020, baby. Call, baby. We back. Cause when the 3 month on the fall, that's when you don't buy the dip. What do you say? Even earnings season, he said, don't confuse what you want necessary. You know, he was talking about richest man of Babylon, man. It's crazy. But we back. Spy just went crazy right when PHILO ended, and then you just got a little quick drop to VWAP right there. So we will see what happens. We will see what happens. Bostic said 100 is in play. Is he speaking right now? I know people were saying that, but I didn't know there was a live feed. Beige Book did just come out, or it's 2 p.m. Ah, yeah, honestly. If that was a 2 p.m. drop, it was probably the Beige Book. Yeah, And again, they use the beige book for like business activity and like businesses. I'm pretty sure red book is retail, and then I think beige book is like their industry connects, and so like or the conditions. Pretty much, this is the beige book is it's like the summary of economic stuff that they take in prior to their Fed meeting in 2 weeks. Skim beige book, business is slowing down, Fed funds at 68. So apparently Bostic said that. I don't know, we need to confirm it. Waller, Cleveland Fed Mesters today. That's later, but I guess no more Bostic, but Bostic was yesterday. If he put it on there, then that's good. Hold it. Hold on, I need to type this email. Love me some fries. Fries are good, bro. Fries are good. Bop, bop, bop. Pop it in UUP. UUP is down a lot. Bostic comments just hit CNBC. Okay, hold on. Emailing Fed Peach. Housing slowing stated too many times in the beige book for my liking. Those are from the Fed contacts. Fed swaps show 3 and 4 chance of 100. That's it, dude. I think, honestly, it's playing out just like last time. I think by the time we wake up Friday or Monday, and, bro, even more invert. Bro, it's almost at 0.3. Oh, my goodness. So yield curve is even more. But just keep that in mind. Again, 0.3 is the cutoff. If it gets lower than 0.3, we got a bigger problem. But again, I think just like last Fed meeting, before you know it, everyone's good. That's it. By Monday, I think we're going to be pricing in 100 basis points. The only difference is we have 1 week and 6 days left. That's the problem. Last time it was only 48 hours. So, I mean, any sort of bounce, it chilled, but we're going to have to see right in here. Delayed response doesn't mean no. Fed has 4 days to change expectation before blackout period. I would have agreed with you if I didn't see last month. Powell don't give a shit. Again, they were in blackout period last time, and the data hit right before they met, and they still found a way to pivot. So at this point, I would watch the Fed futures, and then that's it. It's at 84. Dude, this is such deja vu. Remember last time? It was same timing too. Remember the first time we had it and we kept refreshing this and I kept going back to it on the live. But yeah, it's about 68 or 68% pricing in one. That's already guaranteed. Yep, down to FOMC. Is this the Fed Watch tool? Oh, nice. So here's another tool you could use. This is from the CME group. I think the other one, they're give or take. I think this one just lags like 10 to 15 minutes. Yeah, 70. Yesterday's odds were 7%. A week ago, it was 0. My goodness. Let's see. 68. Yeah, 69.6. Has already, the percentages flipped intraday. Again, we started this yesterday. It was 10% odds. Now it's between 70 and 80. Again, even in the morning, it was like 10, 20% in the morning. It wasn't even that high. And then as all day has gone on, the odds have shifted. Again, same thing with the yield curve too. I mean, I go watch the yield curve this morning, or go watch this morning once you get the recap for today, or once this stream posts, and we were even talking about this going to 0.3 today, but I'm shocked that it did it. That was the next level I was watching for, a third of a basis point inversion, and then this was only at like 10-20%, and then it just went crazy. So again, it's playing out a lot like last time, where we're watching the market like reprice right in front of us, and then as we get more into next week, again, I think earnings is probably what's holding us up a little bit more, but we're gonna find out. But that's it. I think if the Fed futures price in 1%, we're screwed, because it's gonna happen. How is it? It's not spooking the market yet, because right now, like, what happened last time? The same exact thing happened last time. The Fed futures moved, and then the Wall Street came out with their comments. So what do you think is going to happen this time around? It's the same exact thing. Right now, the Fed futures are moving. Everything's moving intraday while everybody's digesting 9.1. Wait till now, all of the comments, and JP Morgan says, yeah, it's 100 basis points for sure. They're going to say, since Canada did it, and now with the Fed futures, it looks like the market's pricing in a full 100 basis point, and now Powell is going to be forced to make the decision all over again. This is like a remix to last month, but it's just like we kind of dealt with it a little bit. So, but I just think once it fully gets priced in and everyone keeps talking about it, then you're going to get the real digestion, the real reaction. But now there's just a little bit of a gap, I think, as the market prices it in, and then we have to react to once it fully gets priced in and stays there. But right now there's just a lot of volatility. Dude, where's my hike? One hasn't hit home yet. It hasn't. Yeah, it hasn't. Because people, bro, even this morning, we were like, nah, maybe it's the same exact thing. It's not realistic until the Fed futures prices it in. And then once the Fed futures price it in, all of the monkeys on Wall Street just start hammering it home. And then they're going to start saying, oh, yep, it's 100 basis point. It's priced in. They have to. And then before you know it, Powell is going to do exactly what he did last time, but instead of 75 now, we're talking 100, and this will be the first 100 basis point hike since 1980. Possible 1.25, not yet. I think 100 is big enough, and then we'll see where it goes from there. RHC. Now they're running the yield curve inversion headline. Well, don't worry about that. Again, it's amazing though that it's moved like this. Like I'm surprised it's already about to hit 0.3, and that's a wild level. Again, last time we've ever inverted, it was like 0.07, and then we quickly went back to normal. But now this this trajectory, it's breaking out. That's it. This is like real. This is real yield curve inversion. That's it. There's almost a 0.5% difference, or at least a 0.25% difference between the 2-year and the 10-year, and that has meaning to a degree. It has a lot of future implications. RHE, regional health properties, shooting up 16%. 1980s was the follow-up to the 1970s. They were still kind of getting out of that high inflation, rapid changing environment of monetary policy. VYG VQ is new Voyager ticker, down 50 cents, unhalted. How come people aren't buying it to squeeze it? Yeah, Voyager Q. See, that's why, again, now that it's bankrupt, they have a Q at the end. So VYG VQ. Puts on JP Morgan. If they're cheap, I should probably get one bank. I still have a short play on Wells Fargo, so that's going to be kind of my negative bank play. But JP, yeah, I mean, they don't look pretty if they fall through. It's kind of like gas prices. Some are relieved at the recent price drop, but still elevated. Fed's trying to get that sticker shock moment, then finish us with 50 basis point. It'll feel like nothing. Yeah, that's true. Dude, we're talking 1% on the next Fed meeting. That's insane. So I feel you, because a quarter is nothing. Remember a quarter rate hike? We did a quarter. Ain't nobody reacted to a quarter. We started with a quarter. Now it's like a quarter basis point is nothing. This is like 4 rate hikes in one. At one point, Powell was on a path that was a quarter every meeting for fucking 9 months. And now we're about to do that in 1 month off of 9.1% inflation. It's wicked. Yeah, quarter was big in March. Even in November, December, a quarter point. Ooh. Now we're talking 4 quarter point hikes in 1 month. Oh, excuse me. Can we do a 150 then lower? Well, even then, if we lower from here, I mean, it's a big one. Yeah, 1% should raise mortgage. Mortgages might go nuts again. But the thing is, as some people are factoring in, that just depends on the yield curve, though. I'll tell you that much, though, is that if the Fed keeps raising, though, and they keep doing it big, at one point, mortgages will stop going up. That's the whole point with the yield curve, because as the Fed gets more aggressive, that means the less aggressive they're going to be in a longer duration. That's why the 10-year yield is going down and the yield curve is inverted. Because right now, short end we know is going to go up, and it is going up, but now it's coming down. But you have to think about it. A mortgage is 30 years. It's a 30-year bond. That's it. And there's no other way to look at it. When you really look at what a mortgage and a home loan is, it is a 30-year bond. So eventually, if the short-term rates do come up too much, there might be a point where mortgage rates don't go up the same rate, essentially, unless it gets above 10, 20% and Powell goes full Volcker. The mortgage rates shouldn't really. There will be a breaking point, and again, you could kind of see it through the yield curve. But we'll find out. History day by day. Understand why recession is bullish for stocks, but why buy now? Again, the only bullish things that we could get out of today, besides the dollar dropping, the only other thing would simply be this idea that now the Fed is going to raise aggressively, which means they may have to cut aggressively sooner than expected. And that is the bullish thing, and it's kind of a false bull more or less, but that could explain it. And then like we've talked about all day today, the dollar declining the most that it has in a while, that is definitely eased up on some pressure. But, I mean, the dollar's still very elevated. It's just the biggest pace of decline in the last 2 weeks. Friday 370s. You got a better deal. Those are the ones I play. I got the 370s, 372s this morning. Is there any truth towards claiming the economy is strong? Yes, there is. It's just not as bad. Like I'm saying, the fact is, and this is where I think a lot of people are getting caught up with it, you could debate everything right now. That's all. It's like to say the economy's strong or good or bad, you could bring up data that's good and bad. You could look at the jobs and you could say this is good, this is bad. Every single thing we discuss is open for debate. What I'm trying to say by that is that there's no data where it's just a home run, awful, no question about it. That's why I said once the Fed starts cutting rates, there's no debate that demand is bad. That's what I firmly believe. But right now, everything is really open. Again, people are like, oh, cars are going to crash. The defaults are lower than 2018, 2019. Again, same thing with real estate. Oh, man, people are canceling, but it's like it's still there. We are still debating about it. Eventually, real estate's going to get so bad, there's no debate. Eventually, stocks and everything and commodities, it's going to get so bad, there is not a debate about it of whether it's not. Unfortunately, we're in the weird puberty where any economic data, good or bad, you could kind of debate and argue aside for it. So there is truth to the economy being good. It's not abysmal yet. And until it does get to that level, people are going to fight and argue back and forth on that. That's kind of how the economy works, in the sense that once it becomes so clear-cut you can't debate it, that's when the reality kind of sets in stone. Again, that's what happened to inflation. You guys were fighting with me when inflation was 4 to 6%. Nobody argued with me once it went higher. Why? Because we were saying it's not transitory. Trust me, it's not transitory. Again, people are like, nah, you see this, and then we saw this go down, and then this, and then Powell said this. But eventually, inflation got to the point there was no debate that inflation was high and through the roof and that it wasn't transitory. So it's very, very simple in that sense. Just wait till there's no debate and you will have your answer. What is good about the economy? It's working. So right now, the economy is still chugging along. You're still buying shit. People are buying shit. These companies are still up, all of that, right? The economy is just genuinely working. As long as it's working, that's good. What's not good is when it stops working. So that's the good part. It may not be a good enough answer for some people, but the economy is still operational and it is still leading people to be able to accommodate most of their needs and even non-necessities at this point. It's not working. I'm barely buying anything. I don't know. Check your bank account. Stop lying to me. That's why I said y'all need to go do the bank account assessment, because quite simply, if you go look at the last 60 days of your bank account, have you been spending money? That's it. And how much have you spent? That right there, something's working. Something because again, people have not been fully squeezed and pulled back just yet. I haven't. So if you could show me 2 months of bank statements with zero money leaving, I would be very, very surprised. Again, and I get the reality of it. People are spending on shelter and food. That's just one part about it. But in general, again, it's still operating. The money is still moving around, but it's definitely not the pace at which we saw a couple months ago or a couple years ago. I was sucked in, spending more than I realized. $24 a week, food and beans, paying the mortgage, but may walk away soon. Canceled Prime. So So you're telling me besides mortgage, your expenses have been $80, $92 on a month? That's amazing if it is, but I don't know if that would represent a lot. I just don't know how accurate that would be for a majority. One of my accounts had a $1.87 balance for 6 months. Damn, son. Mm-mm. 401ks will be decimated. You drinking the Fed's Kool-Aid. I'm not. If you think I believe any of these fools, you got me twisted, like super crazy right now. Again, I'm just the timing of the boat crash. I'm just like, again, people are like, the boat is sinking. The boat is sinking. I'm like, nah, it might hit an iceberg and it might sink, but there is no water fully in the boat. Even if there is water in the boat right now and it's at the hull and it's not enough to, it's not weighing things down the same. Like, I think a lot of you guys are chewing up this, the news media. Bro, you know how many, like, dude, the inflation is a hot topic right now. Again, economic slowdown, recession, bro. They're making more money talking about it than not. I promise you. So it's just, I genuinely think that it's not, it's just, again, until I'm talking like wait till there's a real hit on something, then you're going to watch things slow down. But for the most part, people are still operating. People are still arguing. That's it. It's just like nobody has hit a point where the economy is so bad that they're focusing on what really matters. Like, we're still arguing. We've been in a recession for months. Well, you are definitely more than happy or welcome to believe that. And honestly, too, well, that is factual depending on what area you are in the economy. Again, like they're saying, the lower end consumer has fell off. So it's like if you were at a certain lower level already, you're definitely feeling it different. But it's not as if this is, again, like I'm telling you, like I've witnessed my family lose everything. And I'm looking around today and I'm like, dude, these people are spoiled. Like, we are spoiled right now. You mean like if this is what a recession is, then man, what the fuck did my family go through 10 years ago, 15 years ago? This is bullshit then, because this is light work, man. This is baby food. So it's just very, very different in that sense. Some of my family's getting laid off. We're in a recession. Again, depending on industry and where you're at, it's definitely you've seen some of those declines, but until it stops working for a good majority of people, things are going to hobble along. You know, it's just limping along more or less, but it's still moving. The movement is still there. It's only like this because people are spoiled and aren't preparing, and that's why it's going to come crashing down. So again, I have more belief in that than saying right now, oh my God, the economy is already in a recession. It's bad, because it just doesn't make too much sense just yet. It's just things are slow, and that's the negative of macro. It's slow. That's it. There's just money moving around, even for people to go broke, for companies to go bust. It takes a lot. Like, again, it took Bitcoin a 70% decline for like 2-3 months. Wait, Netflix chooses Microsoft as partner for ad-supported service. Microsoft kind of popping off of it. Netflix, I don't think they're moving, but Netflix chooses Microsoft as partner for ad-supported service. They choose to offer lower price service with ads this year. So Netflix is coming out with a cheap flicks. It's going a little positive. When's earnings is next week? I don't have a Netflix play. They are cheaper. $50, $68. I'm going to go with that. I grabbed it at 211. I grabbed a Netflix call. I'll take it. Again, I bought a lot of puts today too. So now Netflix, I think I got a Netflix put also. So that was just kind of unfortunate. I played this news a month ago and lost on it. So we'll see if there's actually like a real follow-up. I appreciate the skeptical mind, even though I'm on the extreme end. Honestly, I appreciate the discussion too, man. Hopefully, again, whether you agree, disagree, or not, I do hope this doesn't. I'm glad to have the discussion, and I hope you see it. I mean, my best point, and again, back to what we even said with the PHILO. If you even feel like that now, there is ways we can make sure the any economic slowdown doesn't hit you the same way. You know what I'm saying? But really what I'm trying to say is that there's a lot of timing and opportunity. Oh, I typed in TTD into the Twitch chat. I meant to put it on here. Yeah, TTD's getting clapped off of that. Yeah, so TTD to the downside off that news. Microsoft, they got a little bit of it too. Netflix didn't have a show movie premiere that resulted in a net gain in subscribers? Really? I guess so. Last time it was, what's it called? Last time it was Squid Games, so that was 2021. Put on them both. I grabbed a Netflix put earlier today, and then I just so now I'm both ways for Netflix earnings. Just bad timing on my part because I lost like 20 or 30% on this one. Then I grabbed this one, and then I grabbed Microsoft calls just because they were the cheapest ones for tech, and I wanted to get some call exposure. But no, like I'm saying too, depending on whether you agree or disagree with where we're at, what I'm trying to say is that there's still a little bit more time for opportunity. And what I mean that is that before the economy really does slow down, you have an opportunity to buffet yourself and get a little bit more defense, and also take advantage of the opportunity on the way down, even if it is affecting you to a certain degree. So what I'm trying to say is that there's more pain to come, and whatever we're dealing with now is really just the pregame, unfortunately. Did you grab the call? I grabbed the put because I wanted the downside with today and leading into earnings. That's why I grabbed it. And then now that news is big because it's not only are they offering, not only is Netflix offering a lower cost service with ads, it's pretty much now we have a time frame that it's going to be the end of this year. So that news is hitting CNBC now, starting to move up. The calls went up. I think they went up a little bit. I think they went up 50 cents, actually. That was like 20, 30%, 220s. Yeah, we bought them at 211. They're at 250 now. So it's actually starting to move. So that news is hitting CNBC now. So, again, it's just TTD on the downside. You could even go for Microsoft maybe on the upside. But the fact is now we know we have a time frame to a new Netflix offering pretty much. So that could be very, very good. Very, very good. So those plays didn't move, and now it started moving. Good call out. You were able to tweet it out first. That's good, baby. We got it. We got it. The cult, baby, all together. Yeah, Netflix turns positive after picky. You had a 5-minute jump on that one, maybe like 3 minutes, but it's good. The play hit, but like hopefully it just continues coming into the earnings. Josh, after the bear preach, now you bullish. No, relax. I'm playing the news with earnings, bro. And I got a put earlier. I got clapped on the put, and now I'm getting hooked up on the call. But remember, I told you my plan for earnings a couple days ago. I said, don't be surprised if you watch me throw out $200 to $500 on every big company, even both ways, just as I start to set up. Again, I think it's going to be a big earnings season, so I'd rather have more exposure than not. I did make a lot of plays today, but it is what I told you over the last couple days. Some of you should remember me saying that. Yeah, Netflix earnings is next week. That's why. So that's why I even went with July 29th on there. Got a little bit more time, but we'll see. You got insider info? No, fast news is what we do, man. Shout out Troy. Shout out all the chads who help out as well, too. We just got that one quick. And I went with Microsoft just because it was cheap, honestly. The fact that I only played Microsoft in Netflix, I feel you, but I only grabbed Microsoft because premiums were the cheapest out of any big tech on the upside, and I just wanted some upside exposure because I bought so many puts. I didn't catch TTD. If you did, that one could have been pretty. Yeah, Netflix session high. Again, I think this one is holding a little bit more weight just because now we know there will be a low offering Netflix service by the end of the year, and they're going to be incorporating ads, which is very different for the company. That's just a new revenue segment, but I wonder how that's going to factor into the earnings next week because that means they're probably going to mention it. Plenty of people will go for the cheaper option on Netflix. It might, yeah. It's just, I don't know if you got, well, will you do ads, bro? Because I don't like it. But the baseline is that, boom, Netflix has an opportunity to add another service. That's it. So it's different than raising prices. Now we know there might be a $4.99 Netflix coming back or whatever the price is, and they're going to have another segment of revenue from advertisements. So it's actually a very, very big change. That's why I was willing to take it. I only grabbed one, but we'll see. I don't think you get ad block on TV. Ad news for Netflix, time to buy puts. I feel you too. That could also mean they need money. yeah, exactly. Some of you are like, Netflix is freaking out. They're like, all of a sudden, they're like, by the year end, we going to have advertisements, you know, since we don't want to be like Hulu, but now we going to be like Hulu. Because I never understood Hulu, bro. I was so offended. I almost broke up with my girlfriend because she has Hulu. And I said, you mother. I said, what? I said, you pay for a service that still show you ads for televisionable content? Oh, my God. Then I said, why do you even love me? And I said, I don't get this anymore. I said, I do not understand your line of logic. And that's it. So just be careful because that's now Netflix. But that news came out. Nice little pop there. About, 2%? Yeah, Hulu's crazy, bro. Straight up. She was watching a TV show and then got played 19 ads. And I'm like, bro, Chad will cry if I send one ad. And I'm like, how are you watching 19 ads and paying for it? I'm like, this is amazing. That's wow. They really just testing the consumer. They're really trying to put y'all to the test. So Ivy's going up. Plays went up 50% now on the calls, or widespread. The spreads are just widening. Now it came down a little bit. I thought it was about to go nuts. And then UVXY on the high. SPY ticked up. TTD was negative reaction. And Microsoft, I'm surprised Microsoft didn't go higher on that. How are you going to have ads on your own originals? I mean, again, if it brings them revenue, like a $4.99 Netflix will be, it's honestly a great inflationary product, to say the least. Like, you know what I'm saying? Imagine Netflix this whole time. They captured most of the world. Then they raised prices on most of the world. Then they had this nice run for the last 7 years. And then right when things are coming down now, all of those good Netflix shows, if no one's ever, like, dude, what if it's $4.99? You mean to tell me that's not like a gift here in this inflationary, recessionary environment? Could end up being good. But it also, again, I think a lot of you astutely calling out, it could kind of highlight that they're, kind of worried about profit growth. That could be up there, but it is. We don't know the price. I don't know what it is. Yeah, exactly. It's not their normal subscription. It's gonna pretty much, they're saying they're going to come out with a cheaper subscription that's cheaper than the original subscription. And if you don't mind watching ads, boom, you got it. They desperate for real. It's either or. It's either on it. I definitely can agree with. It's like a mix between. It's like a desperate move, and it's either gonna prove to be desperation or it's gonna prove to be a nice little pivot. You see what I'm saying? So that's where it's gonna get very, very interesting. I think more people will downgrade than adding new users. Maybe. That could be part of it. It's a new model. That's what, like, so overall, it's definitely going to be interesting. People don't subscribe. Well, no, because right now, isn't the cheapest subscription like $15? So if you could go down to $4.99, I feel like, I guess, $10 a month, $120 saved a year. You just got to listen to ads during fucking Stranger Things. Netflix to accept EBT stamps next. Oh, you think so? Maybe if they could partner with somebody to monetize it. Yeah, but now this is the first time they can make money off of fucking good content, though. Because remember, they burn a lot of money, and only way they make money is through subscribers. So now, I mean, again, they could put $100 million ad next to one of their shows. So who knows? It just depends who's going to advertise on there. You think advertisers are covering the difference? Well, again, you just now have, again, now you could offer ad space next to Squid Games. That has never been available before. So you got to ask yourself, is there any business out there willing to spend $5 million to go and put yourself on 2 million showings of Squid Games? You see what I'm saying? Or again, how many of the little Johnson & Johnson and AT&T companies are going to pay, $20, $50, $100 million to have 2 years of just brand awareness through all of it? TTD puts early. Maybe. Actually, Netflix is making a move if TTD goes again. Honestly, I think the fact, too, TTD, you could just double whammy, play the news and downside. Just depends how cheap they are and when's TTD's earnings. August 8th, so make sure you get enough time. You're pretty early on that one, but you could try to go for the double whammy. AbbVie, because AbbVie, I liked AbbVie. I liked how it was looking. I liked healthcare. It flipped on me right when I bought it, but I like that. Ex-dividend, it could still go up, and then at the very least, there's Rinvoq news on Friday. FDA PDUFA for AbbVie. So if anything can make it move a ungodly amount that's not really priced in, it would probably be some FDA news. But then it could go to the downside. I was going to buy downside puts, but I've yet to do that. Why was there no watch list? Because I'm sick, and then I'm with the fact that most of the key that we were going to discuss was going to just happen right in the morning anyways. I figured it was double whammy. We could have maximized it. Apologies if it messed up your schedule. You should have it today. I'm not going to take a nap, and I'm feeling a lot better, but we will see. Don't worry. It's like the first missed watch list in like 24 months, so not too bad. Barkin. He said headline and core too high. He said June's CPI report showed inflation was broad-based. Barkin says want to have positive real rates at 2-year horizon. He said CPI report strengthens case to be resolute. He said there is near-term recession risk. June rate was important signal Fed would take inflation seriously. He said elevated inflation readings make that harder to achieve. He said Fed's focus should be on controlling inflation, not growth. He said Fed economy will be better in medium term with inflation under control, and he supports a 75 rate increase in June. Or he supported it, not July, excuse me. Don't apologize. It's good. Honestly, I wanted to even see what would happen too. I need to play around with the algorithm a little bit. Sometimes they don't really reward you for posting every day. But I know some of you guys were freaking out. I apologize. I posted, so if you're subscribed to the channel, I posted on like the post thingy. So, like, I put, like, text that it wasn't going to be out there, but you'll be good if anything. And, again, we talked a lot about the expectations on the day before. Why are stocks up with bad news? Because the dollar is down on bad news. MG and I, TDD sympathy. We could probably run a 3 watch list week and do some YouTube shorts. I want to see if the algorithm would reward that. I mean, it would be nice. But I do know a lot of people, they do check in with it as their daily thing. But we'll see. That one was I died. I don't know yesterday was wild. Like, believe me, again, there's if I haven't missed a watch list in a minute, usually if I do miss it, it's like either I genuinely forgot on a holiday or it's just like wicked. Barkin's Fed focus should be on controlling inflation, not growth. What time is it? 11:47? We could all spam TikToks and Instagram reels like Andrew Tate. I mean, I think we could pull it off, but it's a lot of work. Bobby Watt butterflies. I feel you. Should we try that? Maybe we should try that for a week where we just buy the daily butterflies. Ooh, I feel you. If they're cheap enough. You're going to need to make a face, take 2.0. Well, it's cool. Well, again, like the PHILO, man, I know exactly what I want. Like, what my goal, especially in this environment, man, I don't give a shit about anything except for if shit hits the fan, I want to make sure anybody willing to listen has the proper defense and will be properly informed and have what they need to do, because I know very well, I think some of you guys are going to come out very, very successful from it, and that in and of itself is going to be the goal I'm looking for. Again, I was thinking about a lot of different things. I've told you guys stories. Again, we were talking yesterday. I literally watched my family lose everything, So it's something where I think with the right information and being a little bit ahead, that is the main goal I see. So whatever it takes to make sure people got that, and I know very well, again, as the macro starts playing out, I'm gonna get that signal, and it's gonna be easier than it is now to figure it out. So I'm very excited about that. But that's the main mission. So however we have to get that across, again, I'm going to be here every day. You're going to have your watch list, all of that. But that is going to be the main focus and my main goal to make sure that happens. Microsoft did not move off that. Netflix came down after topping out. Yeah, PPI, jobless claims. Oh, Friday, too, consumer sentiment. That could be the one that sets things off, too. I forgot about that. I totally forgot about that. Consumer sentiment on Friday. Because remember, last time it messed some things up. Or was that last week? Hold on, let me check. Yeah, consumer sentiment on Friday. Yeah. No. So that will get you more digestion. That will get you people reacting. Pretty much if the consumer sentiment is just as bad as the inflation report, then that's probably why we're kind of holding up a little bit. I wouldn't put too much weight in it considering the dollar's move today, but I forgot. That is definitely probably the final big catalyst on the week besides any earnings. And then bank earnings as well will get us in an attitude. Netflix is chilling out from that little run. Positive volume differences. Where is the volume? We still got an hour 15, hour 10. 61 million. So we finally getting some bigger volume. No, we have info tomorrow. We have PPI and jobless claims, but then Friday, consumer sentiment comes out, and that one has been a really big release as of late. I'm in a coat. Trump going in on Elon. Oh, wait. Oh, it's a tweet. I thought it was a video. Dude, I love. It's like when you make Trump mad, bro. You just go. Trump and Elon are the same person. What am I saying? They both do this. Honestly, I hate to break it to some of y'all. They are the same person. He said when Elon came to the White House asking me for help on his subsidized project, whether it's electric cars that don't drive long enough, driverless cars that crash, or rocket ships to nowhere, without which subsidies he'd be worthless, and telling me how he was a big Trump fan and Republican, I could have said drop to your knees and beg, and he would have done it. Jesus, dude. Oh, now there's another one. Now Elon should focus on getting himself out of the Twitter mess because he could owe $44 billion for something that's perhaps worthless, and also lots of competition for electric cars. Bro, they're the same person. I don't know. Convince me they're not. Convince me they're not the same person. That they don't react the same way. Where they're like, oh, I like this. I like this. They're all like, they're cool with like joking around, but then the minute they get offended, they're like, look at this guy. I'm going to pick him up. They're the same person. It's okay. It's okay. You're right. Elon is way smarter. I feel you. They probably have different IQ tests, but they're very similar. Oh, man. I know they were chill a couple days. You don't remember that, though? That's what I'm saying. They, like, both united against, like, a common enemy. Like, 2 months ago, they were friends. And they're like, yeah, oh, Trump was like, it's great. It's great. I like what Elon's doing. You know, we have Truth Social. I don't know, Twitter. Twitter's a mess. These guys are a mess. You know what they're doing out there. They won't even let me tweet. I've been trying to tweet for a couple of years. Now I said, fuck it. I'm going to go make my own. TruthSocial.com. You want to sign up? Go sign up. It's booming. Rocket ship. Amazing. I'm the best. You know, they started doing that, and then even Elon, like, they were chill like a couple weeks ago, and then that's it. Then Elon was just like, I don't know. Trump's wait, why am I talking like Trump? I'm supposed to be Elon. It's because we're the same. Oh, well, fuck it. He said Trump's too old. Trump can't do it. He's going to be dead by second term. No, it's not going to work. Hold on. I got to launch a spaceship. And then that's it. Then they started, and then all of a sudden, now they're just mad. I heard you talk bad about Trump on Truth. You get banned. I heard it's like that, like everywhere, for everything nowadays. I don't know. I don't know if I'm speaking from personal experience, but I don't know. Something about that sounds reminiscent of a lot of things. What do you mean, Josh? You're offending everybody. How you gonna? This is like, am I Elon or am I Trump? I don't know what's happening right now. Stop it. Stop. No problem. Ban him. Get rid of him. Trade war. Elon war. Electric EV. I'm gonna buy Twitter. What am I buying? I don't know. I don't want to buy anymore. I'm over. No, bad deal. They have bots. Everybody knows they have bots. I'm sorry. I can't stop. Do I talk with my hands? Of course I do. What do you think? Have to. That's a good comment. He said, in here you see we have the centrist skillfully offending all sides at once. That's good. Exactly. I can't do an Elon impression. Honestly, I don't even think I could talk that slow and then do like I don't know how to do it. And honestly, I've just kind of, in a weird way, I feel like Elon with a Trump voice kind of flows. Something about it. But we'll find out. It'll come there eventually. Eventually, I told them eventually gas gonna go to $12. Look what happened. Eventually. Yep. Truth.com. What? Power hour in 3 minutes. Yeah, I think if I listen to more Elon, I could probably do it. But I guess we got bigger issues now in the market. We'll get to that eventually. SPY lined up with CPI? No. I mean, it's kind of inverse. The only, like, if you flip the chart around, it would be, except for CPI is breaking out and the SPY is not broken out to a low. Should call and put, should we sell premium? Yeah. If you could keep this, if you could keep the ranges small, I don't think there's a problem with any premium sales right now. Again, we're going to go with 2 weeks activity, 2 weeks massive volatility, and then 2 weeks off. And then 2 weeks of massive volatility, 2 weeks of everybody calming down. Again, that's kind of been the trend for the last about 60 to 90 days. SPY ripping again. Coming in 2 minutes till power hour. I think we had activity yesterday at the same time. Wasn't it right here? Yeah, same. Bro, it's like the 10-minute rigged or like leading into power hour because that's when we started selling off yesterday. So we'll see if we come up here. We're actually at yesterday's close. Again, we still have to give up a little bit of the gains from pre-market. We're still below that, but we're starting to move up. SPY at 380. Again, we still got a couple of data sets this week. Dollar's still down. Still a lot of digestion, and now it's almost about 75% priced in on the, what's it called? On the Fed futures for a 100 basis point hike on 2 weeks from now. Yep, you're at 76%. Ooh. SPY moving up, 318, 381.14. Netflix coming back up again. Again, Netflix ad service news by end of the year. That's coming out there. Where's Microsoft? I want to know if he's going. And Abivai, and then the same 2 days ago, dropped 1 hour before close. Well, this is our final hour, and honestly now, this just makes the ECMI look that much weirder for the day. What odds, what OD, what do you mean priced in? So Fed futures, based on the federal funds rate, that's a Lamborghini. That was for our car debate. Based on the federal funds rate, the futures, so you could buy a futures contract on what you think the Fed rate will be in the next 3 months. So based on what people are buying on the Fed futures, it's pricing in the odds. There's a 76% chance that the Fed is going to raise 100 basis points, given how people are buying the Fed futures today. And all of it was through people piling in the Fed futures today. I think if you want to look at it, you could do /ZQ. Yeah, so here's the Fed funds rate. So this going down means the odds have shot up. So like you could have shorted this in the morning and you would have made bank because this thing does not move. So like as you can see here, the last couple days it hasn't moved, and then all of a sudden the Fed futures just plummeted because now pricing has changed in. I've not read The Psychology of Money. You know, someone made millions on that move. Well, yes and no, because we watched that happen in real time. So like when this shit was only pricing in 10%, you could have jumped on it this morning. So if you woke up an hour after the Fed or after the CPI, you could have easily played that. It's just a really risky trade because it's not supposed to move. So if you go for it and it stays priced in, like that's it. Again, it could cost you a lot. Most people don't really trade them. So like if you look at the volume on these, like it actually looks pretty high, but usually these assets are not traded at all. There's no mother effer in their right mind is really trading these unless you have a big bond position or you're working as like a dealer. You just don't do this. Like nobody trades this. That's why it's ironic that such a small portion of the market could have such a big effect. That's why they will start speaking on the bond vigilantes. Winklevoss tweet. June 9.1 already out of date. I fixed it for you. October, transitory. November, greedy corporations. December, supply chain bottlenecks. 2022, supply chain bottlenecks. February, oil prices. Putin price hike. And then what is today? Yeah, but what is the reason for today? I forgot. Huh. What would you guys say would, well, what do you fill in the blank for here? I don't know. What would it be? No, what would you guys put? Give me your best one. Give me your best one, Chad. I'm going to tweet the best one. Transit manipulation, backwards looking. Peak inflation. Safe M. I don't know. Oh, Safe M. Sanderson Foods. Big red. That thing's huge. That's the whole chart. 3% in one candle. Check news. SAFM. I'm not seeing any news right off the bat. Check news on that one. SAFM. Sanderson. Tonal lays off a third of the workforce. I'm not seeing anything on there. Again, there's news on Tyson earlier, but I don't know what's called. That's a big candle. That's a big candle. Yeah, big candle. I mean, volume's pretty big for how much this thing doesn't move. But I feel that's a weird one. Europe could be, but I don't know what the excuse. I think it would be backward looking is the excuse. Recession fears, dollar strength, algorithms, transitory stagflation, greedy gas station owners. I forgot about that one. The Saudi visit, is that why he's moving here? Or are you saying that's the reason for 9%? Those spreads are wild. You're wild. Yeah, the chain. I'm not really... I don't know if until I know the reason why. That's interesting. And Abivire plays are down on the bid, up on the ask. But again, that's the one we made. Econ freebasing. Okay. The 10-year sold off. It was the high. That's because people are pricing in rate cuts in the future. So that's the problem. That's why the yield curve is so inverted today, because all today showed us was that 2%, or that the Fed is going to raise really aggressive on the short term, but then people are talking about the Fed raising so much that they're going to have to bring it back. So that would make long-term rates go down and short-term rates go up. It was just bad. It was the perfect storm of news to cause a yield curve inversion. And then Sanderson, shares down 3.7. Reader interest increases. No news to report, though. I hear your congestion. It's good. It's good. It's authentic. You know, you're really in the game, bro. You're really in the game. 9%. This is the peak, really. I think so. I think that's really the excuse. They're like, nah, it's outdated, and this is the peak. For real. We mean it. Like, we mean it. Like, this is actually the peak. What do you mean the peak? That's not a peak, Habibi. Have you seen a mountain? The mountain don't have 15 peak. It's a one peak. One point of the mountain and come down. Habibi, what are you saying? They're like, nah, for real, man. Trust me. It's like this. No, this time I feel. It was already priced in. The funny part about your comment is that everything is always like priced in, except for the earnings estimates this quarter. And then there's 3 banks saying, nah, nothing's going to happen. So I don't know. Like, if that's the ironic part about this market, that's why I'm saying I'm willing to go grab all these plays on earnings companies, because the only thing that is technically not priced in is earnings estimates, but people aren't really reacting too worried about it. So maybe it is priced in. I don't know. We'll find out on the next episode of Recession. Watch it come in at 15% next month. I mean, again, unfortunately, it's just like, I don't think our reactions would change if it came in. Like, that's why I've been saying the last couple of days. It's like, dude, all the damage has already been done. Like, even like, don't you think it's weird that now that inflation is hitting the highest points, you're not feeling it? This, like, you felt it more last year. I'm telling you, I promise. Again, the price of lumber, the price of a graphics card, the price of cars were still high, everything. It's like, the ironic part is I was seeing more inflation last year and the stuff going up week by week by week than I do now. But now the number is saying it's 15%, or now the number is saying 9%, so on and so forth. Regular people. I like to think I'm regular. I think I live like a pretty regular person. I mean, I don't spend like a non-regular person. I promise you that much, except for houses. But it's like, I'm telling you, like, it just, like, we were like, bro, if you wanted to buy a graphics card in November or last July, a graphics card was double the price that it's at now. You see what I'm saying? But that's just a computer chip. Anything you could really, really think about, it's there. Was the Lambo worth it? Yeah, I made money off. Again, cars, houses, those are kind of the outlier. But I promise you, I think most of our average like spend, I spend the same. Some of you guys spend more on living costs than I do. Just simply because, again, most of my living costs are secured from years ago, so that's just the only difference. But Lambo was worth it. I profited off of that car. I crashed it and made money. Real CPI is 19. Well, you have to factor in from the last 2 years. So when they're telling you now inflation is at 9%, last year it was at 6%. So that means since 2020, your inflation is around 15 to 16%. Again, it's year over year. What time is it? 12:10? Social Security should go up with inflation. I think they said they're raising it 10% because of what we had to deal with. Or because of the inflation report? Tesla puts. I grabbed one today that got clapped. I might be down for another. Low key. Huh? No, I didn't get July 20. Which one did I grab? I got the 22nd. I was like, no way that thing went up. Hold on. I guess it's down. That 50 cents. They're $1.50. They're going for $1 still. Or a 200 million. I got a 500 strike for next week. It covers earnings, but it's super far out the money. I just wanted something cheap, maybe get some volatility. I cut out the Tesla put way too early. We would have like 200%ed on that one, but that's okay. Is Netflix still rocketing? Kind of. It's holding up good. Again, Netflix's earnings are next week, so keep all that in mind because this news is definitely going to get brought up. Netflix to 200, not priced in, but you need the earnings. You need earnings and a good update on this little ad plan. And I think that will change a lot. Yeah, consumer sentiment on Friday, I really think it will be big. Netflix update. I don't know, man. I cannot wait to see the first ad on Netflix. It's going to be so weird. But then, you know what the next problem is going to be? They're going to have to deal with Google. And then like a year from now, they're going to be like, we're complaining. We saw our ad next to a comedy with Dave Chappelle. And now there's ads showing next to Dave Chappelle. We can't support our ad-based business. Unfortunately, we don't support that hateful content. That's the next challenge I could foresee. But we'll find out. Cancel. Paying subscription. Yeah, that's why it went up. There's news today. Netflix selected Microsoft to run their ad-based service, and they said by the end of this year, they're going to come out with a cheaper ad-supported model of Netflix, meaning there will now be a new Netflix subscription where you could sign up for a cheaper price and you will have ads on all the shows. So they just announced that. That's where this spike came from. And they said by the end of the year, and we're probably going to get more updates on this at the earnings, which is next week for Netflix. I think the BMW thing was just like I feel like it was like a publicity stunt, because I don't know why anybody would think that was acceptable. $18 a month for heated seats, dude. Bro, that's like I think that's $1,000 of finance cost. So I think every $1,000 you finance on a car increases your payment by like $15. That's insane to me. So I don't know. I don't know why they were doing that. I feel you. You like ads so you could use the bathroom? I feel it gives you that bathroom break during the show. What I'm taking, Netflix ran into an issue like this being the OG Fang member. What are the other companies about to face? That's what we talked about. A lot of people were saying, again, it's kind of like this is both like a good opportunity, but it's also kind of scary because it means that they are, they're pivoting. You know what I'm saying? And that they're now, maybe they need to get growth, and this may be the only way they'll achieve it. So we're gonna find out. We're gonna find out. So it'll be Hulu to a degree. I mean, just more with original content. But again, I think it's 50-50. I like it, but then I'm also like, who knows how it's going to change their numbers? Are people going to downgrade from the other service? How is it going to be there? How much are they going to sell ads for? How much will they generate in revenue off of that? But then again, it's like, will it lead to real user growth or not? It's a very good question. I think it's a very interesting one with how it's all playing out. Cancel. People are dumb. Bet it shrinks and ads get cheaper. Oh no. I don't know. I'm not an ad man. I'm not really gonna be about that. On a Netflix show, I could get it with YouTube, but like, nah, man. That's crazy. I don't understand it. I think that's why it's a big shift. It's a very big shift. Because remember, that was like the thing back in the day when Netflix first came out. Because like you had to watch TV with commercials, so people didn't like ads. Like that was like back in. Besides Netflix having like good content on there, one of the big things was like, yo, you don't have ads. Like, you know what I'm saying? Like normal television is filled with like ads 4 or 5 minutes at a time. So it's just very interesting. Honestly, I think it's cool. It's a new segment, and that could, it's somewhat a material change to the company, which I think is interesting. But I don't know how this is gonna play out. Oh, how the turntables! It's so weird. My current Netflix sub won't have it, yeah, but I want to see how people react to it. Does it lead to user growth? Does it lead to people downgrading? Does this open up the door for Asia and India, though? That's the thing I think a lot of us are looking over right now. Because, like, if this cheap option allows them to penetrate Asia, China, India, all of that, then you just found the winner. Because again, if they have a $4.99 or like a $2 option, and people in Asia and everywhere else could get it, oh man, it would be crazy. Yeah, if you have Netflix now, you're not going to see ads unless you choose to downgrade your subscription. So hopefully that's clear to everybody, where it's not like everybody is going to get ads. So if you're already on the cheap Netflix subscription and it's like $14.99, unless you downgrade to the ad one, you're not going to have ads. Cheap. I remember when it was $5. Yeah, I feel you. The cheapest right now, I believe, is $14.99. Let's check. Netflix.com. How do you sign up? Where is they don't show the prices? How much does Netflix cost? Oh, $9.99. So there's a $9.99 option. That's the cheapest. I thought it was $14.99. No contracts, no costs. Oh, young Netflix. So even if it leads to significant amount of downgrading, a lot of the impact from downgrading would be offset of the advertising revenue. Downgrading might even prove to be beneficial to some extent, depending on the prices. Yeah, I agree. And it's just like once we see how much they're going to get for an ad, right? Because like I know some shows, like they might be able to generate $100 million that they used to only get if you signed up that many people. But don't underestimate, some companies spend a lot of money on ads. So depending on what it does, it'll be interesting. Oh, here's a good one. Netflix's Microsoft Ad Pact puts privacy as the forefront. Here, hold on. Let me get this for you. Why is it lagging? So, recent event, the Netflix selection of Microsoft as ad partner combines premium content with highly engaged audience while adhering to high privacy standards and will, we believe, help Netflix stand apart in a crowded ad market and build its appeal with advertisers as it debuts an ad tier. Netflix's selection of Microsoft as ad partner is primarily for the latter's strong track record in privacy, a key reason why Netflix stayed away from ads in the first place. Huh. So that's Bloomberg. That's Anurag Rana. He is the one of the head of industry analysts at Bloomberg. That was his reaction to the event. I think Microsoft is going to be doing it for them all. The amount they get for ads will be volatile. But once it comes in, though, that will be great data. Because once we see, like, the going rate for some of these shows, boom, that's it. Like, remember, they spent billions of dollars on all of this content. So I wonder how it's going to be. I wonder how it reacts with licensing, though. Because, again, you know, like Netflix, if they don't create the content, they license it. So I wonder if their license agreements gives them the ability to profit off ads, essentially. I wonder if it's pretty much unencumbered and they have the ability, like a full exclusive license, to profit off of it in any way. I wonder if that will become an issue. But I'm sure if they're saying that they're launching this by the end of the year, I'm assuming they have some of this figured out. Yeah, exactly. The stuff they don't own. But the stuff they do own, we know they spent a lot of money on it. So that's why it's like, again, if they spent $1 billion on a show, I mean, I'm assuming they could get $100 million for an ad, but we'll find out. It's just who's in the market for that. Yeah, Microsoft has general ads, but it's not like they're used to running ads on video streaming service. Yeah, they're not. It's not like Google. It's not like even Snapchat probably has a more built-out ad servicing platform, but again, like they're saying, privacy, I could understand why Microsoft, they have cloud data, access to the cloud, all of that, but Microsoft just definitely a little bit more chiller. How many misses does Netflix have versus hits? I don't know. I like Netflix's content, except I just don't like it when they make it like super extreme and woke. But for the most part, I think they got some hits, man. Pets on the high, PETZ. And then you got about 36 minutes left. Pets, 2 big candles right there. It's popping. UUP gained back most of the losses. A little, it's still down a quarter, but then the market's a little bit higher. It gets us back to normal. But like we said here earlier too, I think coming into Friday's report, we'll really watch the digestion come in. But just keep your eye on the dollar. Colom, C-O-L-M, and then Pets still running. Traders flip $4 billion between tips funds. Ay. All right, I'm gonna go to the bathroom. Follow me on Instagram at the Trading Fraternity. I love you. Yes,
you're looking at a $4 billion outflow for that fund. It's almost zero sum because you've seen $4 billion go into that shorter term.
So this is a bet by the market that, yes, it's going to be painful, but the Federal Reserve will curtail inflation. So you don't need to be hedging out in that longer term, but my goodness, you need to be hedging in the short term.
To some extent, some people are saying also, I mean, this is profit taking because the last 3 years have been so good for the longer duration tips. At this point, the dynamic that we're looking at, you are starting to see people sort of cash out.
Can I ask, like, is this a retail play? Is this an institutional play? Who's buying these?
I would love to meet the retail trader who is really playing the tips market. I think more these funds, these iShares funds, this is mostly institutional shifting exposures around more so than that individual trader.
We broaden it out to the more institutional market as well with an S&P 500. Do we call that unch on the day?
What an unch.
Unch.
Un-unch in bonds.
Un-unch in bonds.
That's a bring bag.
Using Wi-Fi without NordVPN could mean sharing your private stuff with more people than you think. Get NordVPN
for Tesla while being private on your VPN. Brought to you by Tesla. Donald Trump is a punk. Too old for office. Brought to you by Tesla. Yeah, this guy, what do you mean Tesla? Your car can't even drive. This guy don't. What are you gonna do? You're gonna charge for 17 hours? Go 15 miles? What are you saying to me? Come on. If I told you to beg, you would have begged. Stop it. I'm the best. You know that? No? Okay. Anyway, sorry. The cult turned into Netflix, ads included. We actually have a new stream alerts with ads. I don't know if you would you guys sign up for stream alerts with ads? So I'll give you stream alerts at a discounted rate, but then I'm just gonna send you ads on your phone. That's it. You're just gonna get texted ads like 5 times a day. That's it. Like right before the play comes out, it's gonna be like charge your Tesla, brought to you by Tesla. You're like, what? You're like, this is crazy. Josh just texted to buy a Tesla. That's crazy. Oh, you guys said, honestly, yes. You said, yeah, I'm down with that. I'm down with that. I feel like ads on your phone are so annoying, though. Are you kidding me? Like text, I've had to cancel phone numbers just because I got put on one list. That's it. And I was like, all right, I'm out. I'm out. Chad ads. I don't buy anything on ads. Oh, yeah, you do. That's what somebody said here earlier. They're like, if you really don't think ads affect you, mute every ad that you ever see and watch your life change. Like, you don't realize it, but like ads actually do. Again, do you know half of these companies, they advertise so you don't buy anything. They're not, so a lot of companies, like especially like AT&T, they're not expecting their ads to turn to sales. They're doing it simply for brand awareness. So literally, they just want you to know the fucking name. That's it. That in and of itself, a lot of companies will spend millions and millions of dollars because down the road, when you go into the store or you see something, you just recognize it. That recognition alone goes a very, very long way. Like a lot of people don't realize that. So it's you would be surprised. You may not buy anything from an ad, but it's definitely affecting you. He said Fort Minor, remember the name. He says 10% luck, 20% skill, 15% inflation over the last 2 years, 2% transitory, 100% pain, and 100% reason for you to remember the name. What? That's crazy. I don't know. I did the math wrong. I just know like 10%, 20, and then like I had 100% in there. I know. Why they got to make a song with math in it, man? This is stupid. Fucking, I know the denominator is 1. It can only equal 1. I get it, but still, it's just hard sometimes. Hey guys, it's Josh from the Cult reminding you, call for Social Security benefits. Call now. Ask them about your zip code. Call now. Put in your zip code and find out if you qualify. I called and I found out my zip code and I gave him my zip code and I found out I saved 92% on car insurance and Social Security. It's amazing. Call now. Put in your Social Security. Put in your zip code. Call now. Find out if you qualify. Call now. Do you need a therapist? Oh, yeah? You can't bench press for shit, dog. Go get a therapist. Come on. What are you saying? It's okay. Your friends told you to smile. Your friends are not licensed therapists. Go get a real therapist. Brought to you by Betterment.com. Woo! Have you thought about investing in an ETF? New ProShares Buy the Dip ETF will buy the dip for you so you can buy the dip without buying the dip while buying the dip. Be a pro investor now and balance it out. ProShares ETF. Options shares similar risk with financial educational purpose. Only ETFs are managed by one company and they charge an expense ratio. Thank you for the day. I'm sorry. I'm just going over all the ads that I've seen in the last 7 minutes. I know. I'm sorry. Netflix inspired me. So just sign up for a membership if you want me to stop. Thank you. Otherwise, pets.com. Get your... You're like, this is crazy. This is crazy. Mm-hmm. You close the net. No, I got clapped on the Netflix ones. The puts, calls are up. But again, I'm going to hold this coming into earnings. So I'm down to play both ways on it. Just bad timing and then news kind of got in the way. I don't know why Pets was catching a bid. We had it for like 4 minutes up there. Microsoft in. They're all kind of coming. We're coming back down to VWAP. 30 minutes left. Let's see. This final 30 minutes might get crazy. Netflix earnings strong. We'll find out. Somebody brought it up, though, earlier today. I think it was Xavier. It's just like there hasn't been a Netflix release all year that has increased subscribers. And a couple of days ago, they were talking about, like, the amount of script rewrites and, like, other stuff on what they're hiring. It's just not there. It came back, but it's still not bad, but it's still, I mean, it's not down 0.5% like earlier. September 2023 Ford puts. Ooh, I don't know. I think Ford is down a lot already, but 12 is still kind of an elevated price, or 11. Tesla puts have a U-shaped chart. I wanted to grab another one, but we'll see. Did anyone notice the CFO of UWMC died yesterday? What? Wait, hold up. What? Are you serious? I did not know that. Yeah, Tim Forrester dies at 55 after cancer. Oh, yeah, bro. And he was just at the last. There was even him on the conference call. That's weird. How come that isn't talked about that much? Yo, what? Yeah, he died this week in Michigan. He had cancer. Yeah, following a cancer diagnosis and months-long illness, he was 55. He was CFO for 10 years. Yeah, he was a longtime member of the Mortgage Bankers Association. No way. I don't know if you could check some of his holdings because, again, when people die, it either gets transferred or it could be sold. But damn, usually there's plans in place if they kind of had an idea. But that's wild. I'm surprised that hasn't been talked about. No, I sold the Tesla put. I only got 30%. I would have got 200% if I held till today. But then I bought another one for next week for $150. But then it went down to $100. But I got one. You don't F with him anyways. Well, no, I mean, I had no problem with him. I had my problems with Matt. That's why I'm like, that's unfortunate. But it does. I mean, again, having anybody pass from leadership, it could have some effects. It just really depends on, again, their role, the unexpectedness of it. Again, how much ownership they had. Do they hold a board seat? All of that. Because then it could mix things up. Amazon for the deposit, I could be open to it, but there's still Amazon Premium. Maybe if you wait till after earnings, and if earnings knocks it down another like 10%, maybe. Otherwise, I would rather take, like I said, Netflix and Facebook of any of the quote-unquote FANG stocks that are like down and at like a discount relative to their yearly performance. Those are the only two I would add simply because they're cheaper. It's the cheapest they've been in 4 or 5 years, more or less. I still have the Coca-Cola call. We only bought one for $12, but it's clapped at this point. And again, bank stocks tomorrow morning. You got 23 minutes left on the day. And then we have some PPI, some inflation data tomorrow. And then that's it. Millennium East portfolio manager Shaw to exit. Millennial Trading Tim East 53 closes. Hedge fund in America. So some hedge fund just shut down. I don't know what that means. Millennium Trading East 53. Inflation hurts Amazon, Netflix more than Facebook. As it relates to discretionary spending, yes. Yeah, East 53, a merger arbitrage focused trading team at Izzy Englander's Millennium, is shutting down. Market could move on PPI, but that Friday consumer sentiment is going to be way more important. Market slow bleed. Well, we're entering, I mean, we only have what, like one more week now of like a seasonally bullish market. So we'll find out, but before we know it, summer will be coming here to an end. Still got like another solid month or so. Consumer sentiment is early morning, I believe. Early morning trapping. Consumer sentiment, yeah, 8:30. Or no, 10 a.m., 10 a.m. You'll get import prices and retail sales and Empire Manufacturing in the morning. Then 9:15, you'll get industrial production and capacity utilization. And then 10 a.m. on Friday, you'll get university consumer sentiment, current conditions, expectations, and then 1 year and 5 and 10 year inflation expectations. I think we rally tomorrow. I mean, it's possible since we have time. It just really depends on how the market digests the Fed futures and the odds. And then by Friday, you know, I think the real move will happen, or any delayed reaction for today we'll see. And then obviously whatever the dollar does is going to factor into it. Uber is being sued by female passengers over sexual assault claims. Uber is being sued by more than 500 women across the United States who claim to have been assaulted by drivers on the platform. That came out like 20 minutes ago. You said a bunch of Karens? Nah, I could, bro. Have you ever taken a Uber in LA? Dumb shits was scary sometimes. I'm telling you, man. Blah, blah, blah. Please hold. Like, those are the early problems, like, back in the day, man. Like, I've had a LA driver once, man. And just, like, he creeped me out. Like, I think and then one time I had an Uber driver almost him. Did he touch me? Nah, we almost fought, though. It was almost a fight. I was like, this is wild. This is amazing, man. This is amazing. Oh, that's 30 minutes in? Hold on. So we are coming into the last 20 minutes. Here is the comparison for market reaction. Very odd. Today definitely stands out in and of itself. So like literally, remember, this is where we were at when it could have went down. Market went up. It's about to be a 1%. This is the most positive CPI we've had in 12 months. Believe it or not, a 1% reaction after the last 12. It has not been like this. Again, last couple times, even when it was up, it turned into a 1% decline, but not today. Is it telling? It's not too telling, but I mean, it's definitely it's different. Like, let me show you. Again, the best case scenario on average is a 0% return. So this is a definite outlier, at least by a standard deviation, I would say. Yeah, you're one standard deviation out of the money, pretty much. So again, this is all 12. A positive response, you can't really see it. That dotted green line, an average positive response is right here. And today we are right here at 1%. And this is the last 12. So the last year of CPI reports, this is how the S&P has responded 6 hours after. We're counting from market open, not when the data came out. That is correct. So this is counting from right at the opening bell of CPI till whatever. So depending on the gap up or down, it does skew the data a little bit. But still, an overall pretty rare intraday move considering average response is negative 0.5% on average over the last year, and a positive response is a 0% return. When then today we're looking about 1% since the bell rang. Still have 17 minutes left. Very true. So let's find out. It's 12:45. Texas wholesale power prices hit $2,500 a megawatt. Operating reserves fall to 2,799 megawatts. What a day, Chattadonia. What a day. Mm. 84%. Let's check the yield curve too. Man, I keep pulling up the Lambo thing from the cars. I need to either X that out or we need to go shop. I don't know which one to do. I do want to see the price of Lambos. 83% odds of a 100 basis point hike. Again, just wait. By the time you wake up, everybody and their mom is going to start saying, well, we're pricing in 100%. We believe it's going to be a rate hike. No, I mean, again, let's see if this, like we said, if this number goes up, again, right now, today, it's at 251. But if that number goes up, you guys should all, I mean, you could start shopping. You could start shop. Damn, this one's at 360 for a 2022? Okay. Okay. 260? Yeah, that's crazy, actually. That's cheaper already. Market will price in one by next week. Get the cool in it. I'm not buying any cars for a while. I have one car because I'm going to flip it. I have an order on it, and it's already up in value. That I'm going to buy one car, keep it for like 6 months, and then I'm going to flip it. But I wouldn't be buying a car right now. Again, this is not the time. The Lambo, I think my net profit was like 60 to 70,000 net profit. And then I think I got almost 100,000 more than what I owed on it at the time of the sale. So that was a nice one. And then I wish I just sold my NFT at the same time. I would have double whammied. That would have been a house right there, just off a Lambo and a JPEG. Pfft. Crazy. VWAP. You don't have to set it to nationwide. Why not? Oh, I'd always do nationwide. Always do nationwide. Again, but like we were saying, we were bringing up the cars just because, what's it called? Like I said, if you really want to see defaults, you need to watch inventory and see if supply comes up. Yeah, I still have the NFT. I did it for Jen. If I sold it when Jen Psaki quit, oh my gosh. Should have done it. Nationwide is on your side. I have it to 500 miles. I thought I had it on Nationwide. Oh, I did. I really did. So now, how much is there? Is it, let's see. 251. I don't know why I said 500. I put Nationwide, Habibi. I put Nationwide. Yeah, JP earnings tomorrow. Again, them and Morgan Stanley, too, if you want it. AFB on the high. SPY have VWAP. 10-minute rigged coming in 2. Daily Iron Butterfly. I kind of like this strategy. I'm kind of down. I don't know. Do you want to see? Should we see what a weekly SPY butterfly would look like? I wonder what that would be. I don't even know how that would look. But then where's VWAP? But then we don't know what VWAP's going to be by Friday. In this case, it's just 379. But I like the idea, but I don't it seems good in theory, but I don't know if it'll hit. Yeah, bank earnings coming in tomorrow, and the banks are at lows. So I do think that is part of a bigger problem, or that's like kind of the downside exposure. Unfortunately, I don't have any. I'm looking right now. What are they pricing in? JP Morgan is pricing in 3%, 3.8 or 4, which is pretty big for a bank, honestly. U.S. Senate confirms Barr as Fed Chief's banking supervisor. Next level of support, I mean, it's 376. We were there earlier. And then really the 372 and then 372 to 370. 10-minute rig. Trade balance, I don't think so. We had some data last week. We're going to get imports, I think, tomorrow. Or then on Friday. Mm. 10-minute rig. Let's see if it goes below VWAP. If it does, we'll get a little bit more panic. And again, I just don't think today is over, even though the market's going to close in 10 minutes. Just get ready for the digestion over this next 2 days. Again, if the Fed pricing, you're watching active pricing again. So things are definitely moving around. We have important data on Friday. So, and then you have bank earnings tomorrow. That could dictate a lot. So get ready. Michael, I'm down. I put like 50, 60 bucks on JP Morgan calls leading into this. No pre-earnings luck. Honestly, very, very rare. We haven't hit one pre-earnings yet. Maybe the Netflixes. We'll see. But I'm seeing the puts are kind of expensive, but it's just JP Morgan's pricing in 5% for tomorrow, 4 or 5%. That's a pretty big for banks. And then I think on average they move 2%. But then the question is if, with all the banks kind of near the lows, if they do bad, it could get ugly. So here's the breakdown for JP Morgan. What people are going to be looking for is capital plans and economic views. There's 18 buy targets, 11 holds, and 2 sells. The average price target on JP Morgan is $144.71. That's 29.5% upside from the current price. Implied one-day move following earnings is 4%. Adjusted EPS has beaten 10 of the last 12 quarters. Shares are down 28% in the past year. SPX is down 12.7%. And then the dividend is expected to stay the same. Yeah, the Fed futures is 86. We were just looking at them. We did our final check. That's why I'm saying we're in the middle of active pricing. So just get ready for that. And then the yield curve, man, disgusting. Almost a quarter point of inversion. It's a full point. Right now, it's a full point. That's what I'm saying. Just get ready for the next day or two to see if people react, pretty much. Netflix is next week. Tomorrow is JP Morgan and Morgan Stanley. And then Friday, you're going to get like Wells Fargo, PNC Bank, Q Post Nut Clarity, and then one more big bank. I think BlackRock, I think. And then next rate hike is in 2 weeks or 1 week and 6 days. July 26th. Yes, sir. I get PNC Bank, bro. PNC's reporting on Friday. I have a lot of earnings plays so far. I think I'm going to get more, so don't be surprised. Some of you are like in shock. I went and I did like 4 or 5 plays today. You guys are like, oh my gosh, Josh is going crazy. But I plan on throwing a couple $100 on every big name company, up and down. I don't really care which way. I'm just trying to get the best price on the premium. But yeah, I'm down with both of them. Down with all the earnings. All the earnings, I think it's going to be a big one. I could be wrong. Again, 3 banks came out today, Deutsche Bank, and I forgot the other one. The other 2 in Goldman, I think, they're the ones who said they think earnings is already priced in. But I'm willing to gamble on them. I got mostly puts for now, but I have calls on Microsoft. I have a call on Netflix, and I think I got one more call somewhere. But that's it. Why don't you play more strangles? I kind of am. Like, Netflix turned into a strangle. I'm just waiting for the prices, but these last 5 days didn't really help because now any of the puts I wanted got expensive, and then now any wicked bounce raises up the calls. So I'm just trying to find the balance, making sure I don't get too bad of a deal, because pretty much if the premium's too high, I'm like, okay, I'll just wait. But if I could get low enough where we can have enough time to get a run up and it kind of exposes us to the market, I'm down to grab them. That's why I've been kind of just following the momentum more or less. Am I going to do an in-depth video of the yield curve? I have a bunch of old ones. You're going to hear me talk about it, but maybe not soon. There's a lot to talk about it. You know what I'm saying? But the yield curve, like I said, I'm very confident in it. I really, really believe in it. However, I know damn well that the yield curve could stay inverted for a year and nothing happens. That's it. So we will see. We will see. Haven't been feeling myself, but love you, Chad and Josh. God bless. Amen, man. You know that's normal too, though, right? I have another PHILO on that. We just haven't gotten the time for it, but in a weird way, man, blessings to you. Understanding the normalcy of the fragmentation of self can help a lot. Again, I don't want to get too deep into it. You know what I'm saying? I got to land the plane and stuff, but God bless you, baby. Amen. Sanderson falls on report. DOJ is negotiating remedies in Cargill takeover. Got it. Nice. That was a weird one, bro. I don't know if it bounced or not. Yeah, a little bit. Blessings on blessings on blessings. All right. Let's land it, man. All right, ladies and gentlemen, we're making our final approach. So we make our final approach. If you guys are holding on to any bags, please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisle with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watch list and main channel layover around 5 p.m. Pacific time at the Trading Fraternity terminal. And then we're going to be taking out promptly around 6 a.m., 6:10 out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 74 degrees and sunny. Looking like a good day. Little bit of chill there, unlike the S&P 500, which is confusing the shit out of everybody with 9% inflation, but still get to stay alive. So we are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Colt Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thanks for flying with the Colt, and hopefully you have a wonderful evening. Let's go, baby. Bring it home. You got just dragged around today. NASDAQ is about to go red here into the last minute or so. Everything else is red. We did all of this move simply to wait for more digestion tomorrow, ladies and gentlemen. So you got a bunch of data coming out on Friday. You're going to get a little bit more of inflation data today. The bank earnings are tomorrow. JP Morgan, Morgan Stanley. So that's your next immediate catalyst, but a definitely wild day. A lot of digestion. The yield curve inverted more than ever, or at least since 2007 today. And then now you have Fed futures. They are pricing in something big, man. It's crazy. It's crazy, baby, but bring it home. 1 minute. Go, 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 go. Bring it home. Wrap it up. 30 seconds left. I sold the Lambo to a scammer. I got scammed on selling the Lambo, but it ended up working. So, yeah, I would tell you where I sold it, but I don't want them to get a bunch of negative reviews because I don't get down like that, but I feel you, but I love you. You got less than 20 seconds left. Again, I gave you the breakdown, 10 seconds, earnings on the way. The yield curve is inverted most since 2007, and then you have Fed futures pricing in 100 basis points. 4, 3, 2. Ding 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 ding. Horn, let's go, baby. Oh, we did it, we made it, we did it, we made it. Ladies and gentlemen, boys and girls, I need a GG. I need a GG right now. You are surviving 9% inflation. The market is crazy. The yield curve is inverted, and it might stay inverted, but I need a GG, baby. Oh, let's go. The Chad was wrong. 64% red. I guess it did end red. Oh, my God. GG, baby. Let's go. I don't care if you made money or lost money. I know you learned something. I know you had fun. I know you came here to work on your craft, baby. GG. If you were trading with real money, if you were working on your craft, I need a GG. You get a GG, you send a GG. GG is forgiveness. GG is sportsmanship, baby. Let's go. Bring it home. I need that GG. Let's go. Lurkers, laggers, the lovers, the haters. Let's go. Yeah, what you learn in a month. 1 minute, he said tilt the curve to the front. Oh, GG, I see you too, Twitch. I'm sorry. I see you, baby. Let's go. Shout out to Twitch. Shout out to YouTube. Shout out to Cole, baby. The real one. The real one's in the game. They really playing. That's why the GG got meaning. They really playing, baby. Let's go. Let me see the GG. Woo! Chad, cut it, cut it, cut it. Oh, my goodness. Ladies and gentlemen. Cut it, cut it. Oh, my goodness. This guy just yelling on the mic, man, getting crazy. Oh, my goodness. But, Chad, that is the day. I love all of you. It was an amazing one. You are going to have a watch list today, so don't worry. I'm going to try my best not to take a nap. I'm going to just go start like doing laps or something. I don't know. But listen, Chad, I love you and thank you for being here. If you came here today with a good attitude and you contributed to what we had, like I said, we had a lot of great discussion. A lot of us disagreed with each other today, but you guys kept it positive and respectful. We covered a lot of different topics from the dollar all the way down to the yield curve, and you guys were part of that. We had some great call-outs. We had some fast news. All of it was amazing, baby. So God bless you and thank you for your contribution. If y'all came in here and you showed love and you spread the message, you liked the video, you brought someone into the chat, you know what I'm saying? You are supporting free, fast, high-quality stock market information. That's what you are a part of. So thank you for supporting and making sure we could continue, baby. But everybody, just God bless you and thank you. If you came and clicked on this video and you gave it a real commitment and a real just effort to your own time and my time and everybody else's time, we greatly appreciate it. And God bless you, baby, because that's the Colton community. They don't feel me. Amen. And I hope you're ready for defense. Huh? Come on, can I get a defense in the chat? Let's go. Defense on 3. 1, 2, 3. Defense. Let's go. Can I get some defense? Come on. Oh, yes, that's the new mentality. I need to bring it back. Let's go. Y'all about to go through financial boot camp right now. I'm going to give y'all fine. There you go. 1, 2, 3. Defense. Let's go, baby. Ah! Can we open up in the mornings like that, Chad? Can we do it? Chad, can we, honestly, after the pledge, I just want to, honestly, can we just, get in a circle at the center line? And you know what I'm saying? I just want to, move left and right. And then I just want to be defense on 3, baby. Defense on 3. 1, 2, 3. Defense. And then we run out the gate. You know what I'm saying? Oh, they don't feel me. They don't feel me. Look at you, you diluted fuck. You said that's an eggplant. That's not even a D. It's an eggplant. I said egg fence. You just said eggplant fence. I feel you. You could have used a different aggressive analogy. I'm kidding. I'm messing with you, man. Don't get mad. Don't get mad, okay? Don't get mad, okay? I love you. I love you. He's like, Josh just called me a diluted fuck. No, don't worry. It's love, bro. Trust me. Trust me. You just said eggplant fence. That made no sense. You know what I'm saying? It made no sense at all. I'm just trying to help you out. I'm just trying to help you out. But ladies and gentlemen, shout out to the defense. Shout out to the Chad. God bless you if you made the most out of it today. And honestly, man, we got a lot to deal with, bro. This is crazy. And if you really think today is over, it is not. We are probably going to see a lot more. So I hope you guys are ready for it. But shout out to everybody, members, non-members, stream alerts. But big shout out there to my members holding it down. Again, if you don't want to hear advertisements, please sign up for the membership. But that's a Netflix joke. But I love you, members. Again, thank you guys for supporting everything that I do. Anything I'm able to accomplish, you're doing it with me. You guys are spreading the channel. Y'all keep this thing alive. Y'all got good information, and y'all have been following for a very long time. So I know a lot of these theories that I'm sharing with you. I really hope you can vibe with me because I'm honored to be able to share it with some of you and know that there's people who have actually heard a lot of this stuff that I've been saying. So let's keep getting it, man. I shared with you my goal and vision today. We got to get that defense up and make sure everybody wants to be. Anybody with good and well intentions is going to end up right exactly where they plan to be, baby. So let's get it. Where my well-intentioned men and women at, huh? Oh, they don't feel me. Bro, I'm going to drive that home. You know that? That's it. That's it. That's how we're going to separate. Well-intentioned men and women or not. You either have well-intentions or not. Oh, y'all don't feel me. Let's go, baby. So let's go, members. I know we got a lot of well-intentioned members, but $5.99, well, that don't make you a well-intentioned, mannered person. You know what I'm saying? Oh, yeah, well-intentioned. Are you well-intentioned AF? Let's go. We'll see. We'll find out. We gonna find out, baby. But members, God bless you. Stream alerts, God bless you as well, too. Again, if you have any questions about the stream alerts, one, don't trade off of the stream alerts. We want to help you out and make sure you get it. But if you have questions, come in here. I will answer them for you. Again, stream alerts, we will make sure you never miss anything. But for everybody, don't forget, stream alerts is a freemium product. Everything we do is free. That's why I make such a big deal when you guys like the video and share the stream and bring people here because everything is free. So even even the stream alerts, it is coming on the stream first for free. So we have the stream alerts to make sure people don't miss out on the day. Again, a lot of stuff could happen. Like if you had the stream alerts, chances are you got that Netflix news about 5 minutes before any modern media that's out there. But it's stuff like that. But if you were on stream, you got it in real time. But if you weren't here, we made sure you got the alert and you know what was happening in the world, baby. But stream alerts, God bless you. Thank you guys for supporting. And like I said here even earlier, you guys brought it up. We got a lot of people who just get stream alerts to support. So it's very, very humbling, and God bless you and thank you for that. And again, our commitment across the board, we got to make sure everybody gets what they want and everybody is defended no matter what the economy looks like. Amen? Amen. They don't feel me. They don't feel me, bro. They don't feel me, bro. I'm just sitting there. I'm sitting there thinking. I'm sitting there praying. I'm sitting there looking. They don't feel me, bro. Come on. Oh. Any environment. You see what I'm saying? That's it. I want defense in any environment. I don't care what the offensive coordinator does. You see what I'm saying? Oh, that's it. You could run the ball, you could pass the ball, you could try to run out the clock, but I'm just saying, we going to have let's go. We could do cover 2. We might need to do a little bit of audible, blue 42. Wait, I'm on defense. Why am I saying blue 42? Set, hut. You know what I'm saying? Let's go. I played a lot of Madden in my life. I know. Omaha. Okay, anyways, but defense, baby. Defense. Let's go. Oh, hey, you're only 8 weeks in. God bless you. Let's go. And a good time to start the long term. So if you haven't watched the long term video, we got to get you on that. It's going to be good. It's going to be good, baby. But ladies and gentlemen, boys and girls, God bless you and thank you. Members, stream alerts, and definitely, last but not least, my non-members. Like I said, if you coming in here and you working on your craft, baby, that's all it comes down to. And again, I mean what I say through the PHILOs and everything we talked about today, man. Let's go. If you're a well-intentioned person and your intentions are to protect yourself in any sort of economic environment, man, we got a lot of work to do. We got a lot to focus on. And I'm ready and willing to share and work very hard with anybody who wants to achieve that goal. So let's get it, man. And just thank you to all of you who make this a positive place to be and contribute to that, because there's not really places like that. Again, that just doesn't exist. Just look around right now. Anybody with that mission or goal, I don't know if you could get it for free $99, and I don't know if that's what everybody's on, because everybody is on a lot of stuff right now. So just God bless you and thank you if you made this a good environment and you did not litter in the chat. We greatly appreciate you, baby. And let's get to the finish line. Let's go. Defense. Charge. Charge. You know what I'm saying? Bro, I'm going to start painting my face in the morning. You know that? Am I allowed to show a body cam, or would I get banned? I'm just going to have a body cam with a defense on my chest. I'm going to paint my chest every morning, and I'm going to throw the camera on so you get it. I might do it for the watch list, honestly, right now, because I don't know if y'all feel me, baby. Charge. Let's go, baby. Woo! I hope they feel me, man. Oh, man. Just put a hot tub in the back. You'll be fine. I ain't got a hot tub, bro. I don't have a movable hot tub. That's crazy. I was like, I could boil water, but I don't. This is how you know I'm not that smart, because I'm just giving us bad ideas. Paint supply. I won't get banned, will I? Will I get banned if I just had like a defense painted on my chest? On the video, that's it. I guess I'll wear like one of those bra covers that my girlfriend has. So okay, we'll limit the nipple action, maybe. I don't know. Anyways, Chad, don't let me get ahead of myself. But I love you. God bless you. Thank you, Rudy. Thank you all the donations. Charlie. Who else? Dennis as well too. We have Midwest Finest Realty, baby. God bless you all. Woo! It's hot in here. But That's the day, Chad. I love you. Oh, 1.9. We were just shy of 2,000. Horn. It's okay. Everybody was wrong on the vote anyways today, so it's cool. I'll let you slide. It's okay. But I love you again. You guys didn't have to like the video. Every time you do, you support it. So every time you don't support, anytime you don't like the video, I hope you know you are supporting, like, you're supporting Tim Sykes and the Theranos lady and Trevor Milton every time you don't like the video. That's all I'm saying. I'm just saying, if you don't believe in the free and you don't believe in good quality information, that's fine. I'm sure you and Trevor Milton been pushing cars down hills and shit. I get it. That's confirmed. I'm just saying, maybe you probably like, oh, Elizabeth Holmes is fine as hell, bro. That's probably, if you don't like the video, I could understand. I could understand that 100%. 100%. 100%. It just, I feel you. I'm not judging you. I'm just saying, I'm just putting you in a category, not judging you. It's more like a stereotype, but it's still a little different, I guess. I'm just kidding, man. I love y'all either way, baby. We in the game. They don't feel me. But check out the links. Second link, Nightly Watchlist main channel. You did not get one yesterday, which was very rare. So hopefully we get one here today, and hopefully you guys like it. First link for the Scream Alerts Bootcamp and Real Estate course. Third link for that membership badge, baby. Shout out to the members. Well, they increased dividend, but they didn't have earnings. Interesting. They had earnings, wasn't it last week? Check out the merch. We have beautiful, breathable merchandise. It's amazing. You can't get your defense shirts, but maybe we're going to need them. And again, if you ever want to see my face, nice to meet you. I'm Josh. Sorry, ladies, I have a girlfriend, so unfortunately, you're going to have to wait maybe for the rest of your life. I don't know. But check out the new channels, called Real Estate, called Cars, called PHILO. Follow me on Instagram at The Trading Fraternity. And don't get scammed by the fake Josh who doesn't sell you merch and asks you about crypto. Please report them. I will never ask you to send me crypto ever. Why? Because the crypto market's crashed. I would tell you to send me United States dollars, bro. Have you seen how strong the dollar is? Oh, yeah. What the hell? Why are they still asking for crypto? Fuck a Bitcoin. Give me a quarter. Yeah, that shit's strong right now. It's very strong. That's a macroeconomic joke, okay? But I'm serious. Like, just don't fall for it, okay? Report any fakes. I love you. That's crazy. Imagine, dude, even the scammers getting clapped, bro. They've been scamming for Bitcoin for the last, 3 years, bro, and then Bitcoin goes down 90%, bro. Like, what? He should have just asked for a quarter. It would have went a long way. Anyways, but check out those links. How we find 1,000% options. Great option tutorial. How to set up the long term. Please set up the long term. This is part of your defense strategy. Again, start it now, but please have that budget, okay? Because, again, we have a lot we're going to have to deal with. So have money for the next move, baby. And we're still sitting on our deposit. Amen. And then, finally, the prayer request wall, baby. Amen. Me and my mom like to pray for y'all. This is what we do. The chat prays for me. Thank you for all the prayers. Again, I don't know how we've even been in here and working hard and doing what we've gotten. Again, to see so many people find ways to stay alive in one of the worst markets in 50 years, man. I think prayer is a necessity for this type of year. And honestly, just to see how people have been fighting and going through, man, I just hope you know I'm praying for all of you, for real. And I'm praying for strength. I'm praying for strength for everybody, for longevity, for endurance, some discipline, and some defense, baby. Amen. But this is what we believe in, man. Don't worry. If you click on the link, you ain't going to turn to salt. We're not going to tell your friends. It's not that deep, man. All we believe in is that if it can't flow through you, it won't flow to you. So we want everybody to succeed. We praying for it. Everybody is going to have success in their own ways, and there's enough to go around for everybody, baby. That's why we believe. They don't feel me. Bro. Amen. But fill that out if you'd like, Chad. Pray for me. Pray for all the brothers and sisters that you see in here. It goes a long way. Keep praying for me. I'm going to keep praying for you, and we going to still be in the game. And pray for some defense. Defense. I just like that noise. Okay, but Chad, that is the day. I love all of you. I hope you had a wonderful one. I'm starting to breathe a little heavy here. I need a water. Now, what do you mean? Who needs water? I invented water. What are you talking about? This guy needs water. What do you need water for? You're sitting down talking. What? Should drink more water. Stay hydrated. I invented water. What? I'm sorry. I spaz a little bit, if you couldn't tell. But I love you, Chad. That's the day. God bless you. It was a wild one. If you didn't get the PHILO, please go listen to it. It's not your typical PHILO, but understand here, man. Safety, security, defense, and accomplishing our goals here right now is very, very important. And I'm telling you, in the next 6 to 12 months is going to get even more important. Right now, you have opportunities to procrastinate, but quite frankly, you may not in the near term. So let's get prepared. Let's get on it. If you are a well-intentioned person, it is now time to bring it out and really let your well-intention shine through. You could tell who is well-intentioned by if you're going for the get-rich-quick. Are you saving the money? Are you putting it to work? Are you controlling thy expenditures? Again, well-intentioned men and women. Let's go. But don't let me ruin it. Go listen to the PHILO. You're probably going to hear me talk about this in the next coming days. So if you want to be on the same page, just once today posts, go back and listen to the PHILO. And I'm thinking it could be very, very helpful. And honestly, I told you this about 2 months ago. If you have yet to go through your bank account and yet to do any sort of budget or expenditure control or awareness, really, where you really know where your money is going, please do it now. Because like I said, you could still procrastinate, but it's better to build the foundation now. Because when these opportunities come for us to really separate ourselves, we are going to need a foundation built. So let's get it, Chad. Let's get it. PHILO was around 10:30, I believe. Give or take. Give or take. So, that's it. Is that it? That's it. So, Chad, that's the day. I love you all. Thank you again for being here. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. Okay? And don't forget why we're here and why we keep going and why we understand defense is going to protect us, and well-intentioned men will make good decisions, small good decisions, and that they will keep going no matter what, and that the environment does not dictate what decisions we choose to make internally and in the present right now, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Woo! Sure, let's get it, bro. Let's get it. It's game time. It's game time. You know what I'm saying? It's game time. So I love you. I hope you know you're blessed. And Chad, I got a song for you, but before I play the song, free real estate today. Free real estate. It's free real estate. Just get on there or not. Now's the moment. You still got a little bit of hope as a real estate agent, because even though real estate has not crashed yet, if it does crash, you could still make money on the downside. But again, out of everything that has happened, oh my goodness. Oh my goodness. Your opportunity is very, very wild. That's all I said. Because why? It's the only industry this year that has not crashed yet. So take that as you please, but maybe you got questions. Maybe you want to learn more. It's corealestate@gmail.com. Shoot the email 6 p.m. Pacific time. We will see you there. And shout out to Cole Real Estate, baby. Again, even this year, I know they're above 50 million in transactions. We've got to see over 40 or 50 people start real estate careers and be a part of it. And it's awesome to see everybody link up together every week and have that community. So if you're an active co-real estate person, bro, I salute you. I salute you, and God bless you, and keep going, baby. You've already seen what it's done in your life. So let's keep going, baby. Oh, they don't feel me. They don't feel me, baby. Let's go. Woo! Oh, man. Oh, man. But that's the day. That's the day, Chad. Yo, was that LeBron? That's crazy. That's a crazy one. That looked like the LeBron logo. How do you join? Send an email, corealestate@gmail.com. And this is the time to do it because every time I know somebody's going to ask me a question tomorrow, we're going to have a real estate talk. And they're like, oh, Josh, how do I get started? Or, oh, Josh, how do I get on this real estate network where you guys all work together? And then, oh, wait, that's how I get a hold of an agent to help me sell my house. Just go to the call tonight, corealestate@gmail.com. Shoot an email, be there 6 p.m. or reach out to Cole Real Estate on Instagram and you could just get in touch with them and they could put you in the right place wherever you need to be. But today is the day, my friend. Today is the day. But Chad, that is all. I love you. Have a wonderful day. And let's marinate with some uncle and then proceed. Oh, okay. One more. Just one
so
more.
Different off me all week. I think they speak more than they do.
Oh, it's all good. This shit. Defense, baby.
They think they
this defense.
I'm chillin'. Feel like Tom Cruise. I cannot lose because I'm on that mission. Tryna hit big, but it's SDDC. You wear T. My team so different.
Off me all week. I think they speak more than they do and live it.
I can't be.
Oh, yeah.
They cool when shit get hot. I'm chillin'. Feel like Tom Cruise. I cannot lose because I'm on that mission. Tryna hit big, but it's SDD. I can hit 100 layers before you hit that 3. I ain't do no innovating. I just watered that tree. Got a little bit of Vegas. Got a little Wall Street. On my band grand. Got some buffets on the team. I can kick a couple theories. I'm the modern main keys. Why the people never bring it? No, he's asking what to eat. Thought you told me you was leaving, but I see you with the weed. Good, I said show them the loss. Men lie, women lie, the premium don't. No trend lies, my mind really just know I exercise.
Don't let me get too cut it. Don't get too crazy. Don't get too crazy. Oh, Cole Real Estate live right now. I got a notification. They're live. They are live. They're live. They're doing a pre-exam prep. Ooh, diddy bop. So, Chad, I love you. Great day. Better see you on the real estate if your heart is called towards it. Stay in the game. We have a lot more of the game. Again, today is not over just yet. Just with everything we dealt through. Got a lot on the table, a lot for this week. Your earnings is kicking off, so I hope you're locked and loaded. And ultimately, man, I hope you blessed. I hope you got the peace. And just let's go, baby. You know what I'm saying? Let's go. It is game time right now. You know that, right? Why? Because the day is just beginning. So you have the rest of the day to do what you need to do. Come with the intensity. You got the rest of the day to think about your financial plan. You got the rest of the day to think about how you are defending yourself and how you are putting yourself in a position to succeed. You got the rest of the day to go over the bank accounts. You got the rest of the day to consider all of the news that we had today and what it could potentially lead to, and then what other plays there are. And then you got the rest of the day to go to the gym, to finish up whatever tasks you have, to kiss your kids, tell them you love them and give them a hug, tell your wife, tell your husband, say, what's up, man? Even maybe take your girlfriend out to dinner. I don't know. It's up to you, but that's the rest of the day. But let's go. And then we got to get it going right again at 6 a.m., okay? Amen, amen. That's it. Honestly, oh, yeah, you said kids. I'm just saying, bro. Listen, if you don't go and give that kid a hug right now, bro, you going to see his GoPro on Twitter. Okay, that's all I'm going to say. In 20 years from now, maybe 40, he going to end up on Twitter because you ain't give him a hug, okay? That's all I'm saying. So hug that little shit, okay? Just give him a hug. Just give him a hug and tell him you're proud of him. Okay, that's all you got to do. That's all you got to do, Chad. So finish up the day. Have some fun. Chadadonia, I love you. I will see you tonight, and I will see you tomorrow. And peace out. Oh, hey, wait, Josh. I want an earnings pony. Okay, love you. Bye. Yeah, I tell you, these guys, what's a pony? I invented ponies, huh? Come on. This guy, where's Elon? I haven't seen Elon. He better worry about his deal. $44 billion. What's he up to? He's going to buy something worthless because the truth is the only thing worth money. Yes, I love money. I love money. What? Hey, come on. Of course you love money. That's because you're a scammer. You know what I did? I brought the price down after Putin brought it up. Because that's what I do. Historic. I sat at the dinner table. And I talked it over. And I said, wow, it's bright outside. And then I thought about the weather events. And then what happened. But it's still just listen. I'm not joking. I love you. Right. Okay. Happy Kwanzaa. Goodbye. Hi. Hello. Greetings.